Hello, friends. Hello, fellow traders, and everyone else. Welcome to TopstepTV, the biggest and most watched futures trading stream that you will find on this thing we call the internet. We've got an all-star cast each and every day. Real traders, real educators that bring you 100% transparency. And of course, you're not going to find another show like this anywhere on the planet that offers education, support, good looks, cool swag, and tradertainment. This is Opening Call. He's Lucy, and I'm Ethel, and we have an exciting, informative, educational programming for you today. And throughout the week, we'll be your trading buddy, your trading mentor, newscaster, fellow trader, and even that voice in your head that keeps telling you it's not whether you get knocked down, it's how many times you get up. So let's get ourselves ready for some top-notch, up-to-date market know-how. And John, game plan ready?
Game plan's ready.
All right. Checklist.
Booster. Go.
Yes.
Checked.
Journal ready to go?
Journal all ready to go. Got my blank sheet of paper right here.
Mr. Hoagland, are you ready for a great week?
I'm hoping, always hoping for a great week. We always know that there's going to be, a challenge and opportunity. So yeah, looking forward to it. Here, there's my proof. My journal is ready.
There you go.
Blank sheet
Sharpen that Crayola, and let's get ready. So let's say hello to everybody's friend and that handsome guy next to me, our trading mentor, John, a.k.a. the Hoagland. Good morning, Johnny.
Good morning, Eddie, and good morning, everybody. Monday, March the 25th. As always, we're going to be focusing on context, good risk management, and patience here this morning. Let's see what we've got going on.
Well, let's get ready here and we'll fire up some news. As John said, the 25th of March, U.S. stock futures slipped today, starting a holiday shortened week. Now, we're talking about the holiday Friday. Friday is a holiday, and we will not be here, okay, this Friday. So we'll get more information on it as we go on through the week. But the Dow futures was down about 45 points, 4.1%. S&P dipped 0.1%, and the NASDAQ down by 0.2%. The mark is on track for its fifth consecutive month of gains, with the S&P around 2.3%, adding about 2.3% last week. Dow Jones just under 2% since December, and the NASDAQ jumped about 2.9%, all recording all-time closing highs. Apple, let's watch Apple this week here. It's likely to remain in the spotlight today following reports in the Japanese media that the tech giant is in talks with Baiynd over using Chinese internet giant's AI models in its iPhone software in China. Nissan made some news here today. They're looking to make some cars. They're making a lot more cars. They want to add additional 1 million vehicles over the next 3 years, including the hybrids. And they're looking to make about 60% of the global sales by the end of the decade. So, John, what else do we have for us today?
It's a lofty goal, isn't it? 60% of global sales, man. That's always starting with right. Always starting with the economic numbers. Due out today. Well, it's 7:25. One of the talking Feds, Bostic, started speaking at 8:05. We have another talking Fed, Goolsbee, speaking. 9 o'clock, we have new home sales. These are all, of course, in Central Chicago time. 9:30 Central Chicago time. The Dallas Fed Manufacturing Index and another talking Fed, Cook, is due to speak. At 10:30, we've got a 3-month and a 6-month bill auction. 12 o'clock, a 12-year note auction. And as for the rest of the week, we have on Tuesday, tomorrow, durable goods, Case-Shiller home prices, FHFA home price index, consumer confidence. I don't see any talking Feds on the schedule for tomorrow, but they have a tendency to pop up unannounced. I hate that when they drop by the house and they don't tell us they're on their way. Wednesday, mortgage applications as usual, EIA petroleum status report. Waller is due to speak, but not until after the close on Wednesday. Thursday, we've got GDP, the final of Q4 GDP due out. We've got jobless claims, corporate profits, consumer sentiment, pending home sales, EIA natural gas, report due out. And Friday, markets are 100% closed. CME group markets are 100% closed. However, that does not change the fact that we have international trade in goods coming out, as well as the PCE numbers. That's at 7:30 a.m. Central on Friday. Markets will be closed. Retail inventories as well, wholesale inventories, and our good friend Mr. Powell is due to speak at 10:30 a.m. Central Chicago time on Friday. They're still planning on having these releases on Friday, even with the markets closed. It's got me thinking about what investors and traders are going to be thinking about as we get through this week, knowing that those numbers are coming out and they will not be able to respond or react to those numbers on Friday until Sunday night at 5 p.m. Central Time. So it's going to be an interesting short week. Going to be we're all taking Friday off. No trading, no Topstep TV, no runs, no hits, no errors, nobody left on base, and nobody's watching anyway. So we've got a kind of an interesting week again because of the fact that we do not have the opportunity to trade through PCE or after PCE on Friday. So we're going to have all weekend to kind of digest that information before we get back into the markets a week from today. So that's what we've got as far as economic numbers are concerned for today and for the rest of the week. Eddie, back to you.
All right. A lot of good information there, and then throughout the week we will remind you. Dude, where's my crude? Well, let's find out here. Oil prices. Taking a look at crude here right now. I gotta get that up on my board. I pulled it off. My goodness, men. We did see that crude prices rose today with chances of once again the Gaza ceasefire dimming and adding concerns of tightening global supply. We did see U.S. crude trading about 0.7% higher, 81.23 a barrel, and Brent climbing 0.7 at 85.45 a barrel. And both benchmarks fell around 1% last week with the stronger U.S. dollar, which rose about 1% over the last week, keeping a lid on prices. Now, Johnny, making money. Money makes the world go round. And I make sure that my wife knows this. And one of the dreams that I have is, of course, a lot of us winning that lottery, winning the Powerball, winning the Mega Millions. Nobody won this past week, right? For the two lotteries, both of them. And there's now a combined total of nearly $2 billion. Mega rose to 1.1 and Powerball is about 800 million. So if someone matches all six numbers, Monday's Powerball, that's today, get a ticket. The prize will be the sixth largest in the game's history. Now, of course, these are big numbers, and the odds, here's the odds, folks. You got 1 in 292 million chances of winning the Powerball, and 1 in 302 million chances of winning the Mega Millions. But hey, somebody's got to win. Go get yourself a ticket and have a nice dream. So
yeah, well, a couple of bucks, and then you could win $1 billion. I mean, that's pretty good risk reward.
Or if you get 5 out of the 6 or 4 out of the 5,
sure,
you're gonna get something. You get something. We won $4 last time. The wife's like, we won. How much, honey? $4. Okay, well,
$4.
Right. $4. And of course, let's not forget our good friend James. James, what do we got for tip of the week here? There you go. Trading expectations. What do you expect out of trading? Now, I mean, it's obviously natural to seek profits. We want to make money. We're here. That's the reason. Unless you're here just for the fun, which come and talk to me. I'm going to talk to you about making profits. It's essential to understand that consistent profitability is more realistic than aiming for large gains in every trade. And what I mean by that is put away the home run bat. All right. Looking for that home run trade, put it away. And like we talk here all the time in TopstepTV and, of course, Topstep Education, go for the base hits. Small profits do add up, and take what the market gives you. But, Johnny, what do you got for trading expectations?
Trading expectations. Expect to follow your strategies and your process. The only thing we can expect when we put a trade on is that something is going to happen. Manage your expectations, have reasonable expectations, manage your risk. And, like Eddie said, consistent profits. If you can get to that, you've got a good probability of a long career in trading. So yes, certainly manage your expectations, and remember, man, we can't control what these markets are going to do. When we put a trade on, the only thing that is certain is something is going to happen. Manage your risk. Manage your risk. It's a good,
Beautiful.
it's a good tip this week.
Beautiful. Thanks, John. All right. Without further ado, Johnny, what do you got for our contestants today?
Well, all righty then. So you're saying there's a chance. There you go. Travis was saying that when we were talking about the lottery. Yeah, so you're saying there's a chance.
There's a chance.
All right. Well, the broken record continues. We still have are maintaining upside structure. The good news, Friday's pullback came on lower volume and a loss of 8,000 in open interest. So that was a profit-taking event on Friday. It wasn't very aggressive. It wasn't very deep. It didn't bring in a whole lot of volume. So it appears to me somewhat that the market is setting up the next bull flag. We've got a pullback on Friday, lower volume, lower open interest. We've got a continuing pullback into today. I'm thinking that we really want to try and hold this 5240 level. Lots of highs and lows of candle bodies at that level. It's where the market really kind of took off from on Wednesday. And I'm going to be kind of focusing on that level. It's probably over the next couple of days going to line up relatively nicely with the lower trend line of the channel that we've been in since, forever. Where does this thing kind of come back into? Well, pretty much for the entire year, we've been kind of holding this channel, and a move back to that level could provide decent long opportunities or a potential break in the market state. So I'm looking for the market to really hold that 5240 key level. I'm not really looking for anything big to happen unless we can take out the weekly kickoff low, which remains from last week. I think a deeper pullback might actually be healthy for a continuation to the upside in this market. Of course, we don't get to choose that. We've got a little bit of excess on the all-time high that occurred on Thursday. Let's take a look at the 30-minute chart and see what we're seeing in shorter time frames for possible opportunities. So ever since we put in that high on Thursday, Friday, lower highs, lower lows, lower highs, lower lows, but again on lower volume and reducing open interest. It looks as though we are going to be opening with a gap. Overnight inventory holding somewhat to the short side here. We know that the market opened up last night right up here around 52.90 approximately. Price has been moving lower, shorter time frame, weaker hands traders, probably looking at the current shorter time frame structure, looking for opportunities to sell strength. Again, if we can't close that gap relatively early, the opportunities might look better to the short side. If we do get back into range, into value, that could bring us back to value high, which was basically Thursday's settlement right up around 53.02 half. That would take us above this potential trend line that might be creating that bull flag. If any meaningful participation above that level, looks like it might be relatively interesting. Here we've got the all-time high. Let me readjust this trend line just a little bit here, because we do have 3 points of contact: the all-time high here, here, and here. So we kind of looking at potential continuation if we can't close the gap. What did we have as far as, well, we've got new home sales, Dallas Fed Manufacturing Index, and one talking Fed at 9:30. So 9:30 might be an interesting area to see possible changes in the market. I'm just looking for this pullback to continue until we get a breakout above that level. Mentioned that 5240 level, 5242 quarter. is the point of control from Wednesday before we ran to the upside. That this whole area down here is an interesting level for us to see maybe a possible pullback and a possible support level off of that longer time frame trend line, which kind of comes in really maybe right about that level. So that's really going to be an interesting level if it is approached and if we have the opportunity to look for an execution there. Now looking into the NASDAQ. The daily, well, the upside structure still remains intact. Low volume on the pullback on Friday. The difference being we added 3,200 in open interest, indicating the potential for some new selling coming into this market. Does the NASDAQ seem like it's struggling at these highs a little bit more than the S&Ps? I'm going with yes. I am going with yes. I think the NASDAQ has been struggling a little bit more than the S&P in continuing to the downside. So that the good lower volume, the bad open interest increase on the downside on Friday. Kind of looking for the market to hold this 18,286 key level, 286, right about here. That's that point of control from Wednesday's range bound day to the move to the upside. But that move to the upside did not necessarily change market state. I'm looking at the NASDAQ as a much more range bound market than the S&Ps. We've got lots of candle body highs up here, 18.4. Let's just call it 18,575 area. Take a look at the 30-minute chart. We're kind of in the same situation, but a little bit different as these markets tend to be. They are related. They are not exact. All-time high, lower high, all-time high, lower low, lower low. The overnight inventory is to the short side. We're doing a little bit of reconciliation of that in this congestion area down here. But again, opening with a gap puts in gap rules. If we can't close the gap relatively early, we look for the market to continue to push this move to the downside. Are we creating another bull flag? We very well might be. If we were to put a trend line across here and across here, that would probably be a kind of a good look here at a potential bull flag. Lower highs, lower lows, contrary to the bigger picture, lower volume, decreasing open interest would be nice. But again, this area down here, 18,285, approximately 286 is the point of control from Wednesday's session before, boom, the market took off. And again, that looks like an important level for me to be kind of looking for an opportunity. The profile on Friday, I mean, it was a kind of an up day, which kind of indicates that open interest increase, even though value was lower, the movement for the day in the NASDAQ was a little bit stronger. It was a little bit higher. I would say that open interest increase on Friday was more adding longs, maybe some laggard longs. We don't have a very strong high here, but again, opening with a gap, overnight inventory short. We're going to see how this market opens up and see what the opportunities provide for us. Again, if we can't close the gap relatively early, and I understand it is a very subjective term, if we can't close the gap relatively early, we might look for continuing rotation to the downside. Let's take a look at crude oil now. Crude oil, has been very kind of news driven. Of course, everybody's well aware. It seems like the potential for a ceasefire, and again, everybody make sure and pray for peace everywhere. Seems like it's kind of falling off a little bit. So, we had the move up early last week. We pulled back off of that. This market just says to me, it is waiting for new information. Look at the weekly chart here. Look at the bar on the weekly chart. It's almost a doji. This market is so thirsty for new data, new information that that last week kind of closed pretty much right where it opened. That's indecision in this market, and I'm sensing and fielding a lot of that indecision. On Friday, and in basically almost an inside day, it was a very overlapping day. We added 6,700 in open interest. Take a look at the 30-minute chart here. All right, so let's get this scaled so we can see a little bit of time here. So there's Thursday's range. Here's Friday's range. Basically the same high, relatively same low. The market is holding no real overnight inventory. I think that the gyrations that we went through last night have evened out all the overnight inventory. Market is opening in range, relatively close to value, suggesting we may want to stay patient today. I'm looking at this short time frame balance as the high from Friday, 81.45. The lower end of this current range, the low from Thursday, and the low of the week, 80.30. Anything in the middle seems to me like diddling in the middle, and I'm going to be patient and look for better trade locations as the day goes on. The market just opened inside range, right in the center of the range from Friday, in an overlapping to slightly higher range on from Thursday. There's no major change in the perception of value of the of a barrel of crude oil right now. So just keep that in mind as you get into the trading week. Gold is in rollover now. The most of the open interest has moved into the June contract. However, the volume still remains in the April contract. I will be letting you know when I will be changing to the June contract. Remember, we would go all the way from April to June contract. The contracts in between there are kind of not really actively traded. So just pay attention. I'll be monitoring the volume, and we'll talk about when it's time to move into the March contract. It is deeply in rollover this week. It is range bound in the short and medium time frame here. We've put in highs, we've put in lows. We're right in the middle of them. This is kind of something like I used to talk about when the market is in the middle of weekly kickoff levels or in the middle of a range. It's kind of like a tennis player. A tennis player is going to lob the ball or hit the ball back to the other opponent on the other side of the net, and he's going to run to the middle of the court because that's going to put him in the best position. If the ball goes up here, he can get there. If the ball goes down here, he can get there. And I think this market is very range bound, rollover range bound at this time. Of course, watch the dollar, and anything can happen. Short time frame balance again, rollover, rangy. What it's starting to kind of feel like to me. What are we looking at here on the 30-minute chart? Overnight inventory got a little bit long here, but we're still inside the range from yesterday. Inside range and inside value again, especially during rollover, especially as range bound and now centrally located price is. I want to be patient. I want to look for better trade locations as the day goes on. Let the initial balance play out. Work those extremes for your opportunities. The profile from Friday was a double distribution trend day to the downside. It did leave a late spike. The base of the late spike, 2163.10, 2163.10, right there, right there. So if we're going to be going by spike rules, we've opened above the base of the late spike. That marks rejection of lower pricing. Doesn't mean price can't come back down and retest that level. It's just suggesting with a degree of probability that these lows are they've been rejected. We're likely to continue to rotate higher. Take that for what you will. Those are basic late spike rules. So the late spike to the downside and opening above the base of the late spike indicates potential rejection of lower pricing, but we've got a lot of space on both sides of this market for it to just rotate. And again, I'm going to be focusing on those levels. Ladies and gentlemen, take your deep breath, stay humble, grateful, creative, and centered in your trading today, and make sure you pray for peace. And we are getting ready to get ready and get down to the fast markets segment. Looking forward to it, Eddie.
Yeah, let's get ready to get ready. I like that one. Get ready to get ready. Hey, real quick here. Gather around. I was waiting for the numbers to get up a little higher here in chat. Happening sometime this week. A little closer. Sometime this week. But I don't know when. We're going to have a 75% off one reset to celebrate our 75,000 subscribers on TopstepTV. So everyone who checks in on the form will get a reset. So that's happening this week sometime. And that's all I've got right now. But we're going to take a break. Johnny, meet you at the coffee machine. And coming in here next is Fast Markets. And we've got Deeyana in the green room ready to go. We'll be right back.
Welcome to Fast. I was eager. I was very eager there.
You were,
Welcome
Mr. Eager.
welcome to Fast Markets here at TopstepTV. We got Robert there in the lower right corner. We got Deeyana and we got John Hoagland. Robert, welcome to not necessarily your debut, but it's been a while. Welcome, Robert. How are you doing, man?
I am doing great. Yeah, just as we were first starting up TopstepTV like months and months and months ago, testing things out, and then I'm into production. So this is the first. I'm going to call this one kind of the first real one. So I'm ecstatic to be here. I appreciate it. Let's have some fun.
Getting called up to the big leagues. Welcome, Robert. Let's do this, man. Let's make some money here. It's a Monday. Deeyana, you were saying it's a light Monday. We're going to kind of take it easy.
Yep.
Going into this week, I know we got some PCE numbers coming out later this week, but today we do have some speakers, and in a minute here, we will get to Eddie and talk about what the eco numbers are, but we've got the opening bell coming up here. John, what are we thinking about for opening range trade? How we feeling? Johnny, you got to mute Johnny.
I think you're on mute.
I did it again, didn't I? I did it again. Yeah, I'm taking it. I'm going to put a 5 line on. We're opening out of range, out of balance. We'll see what happens.
Out of range, out of balance, 5 line. Let's go. Let's go beat gravity.
I'm going to be focusing on gold. I'm going to be focusing on gold today. Yeah, I think there's the range is better than we have in crude oil. Crude oil is obviously a little bit confused now with the news, and they're waiting to see what happens with the conflict in the Middle East. And I think that's been the reason for lackluster movement. But gold is I mean, it's got a pretty good range now. We've got over 200 ticks for the COMEX session. I am going to wait until the initial balance is over, primarily because we opened inside value from Friday, which never really brings great trading locations early on in the session. One thing that I might look at is a failed auction from the upside. So if we go higher and then fail the auction upside, I might be interested in a short, primarily because London has taken it quite far up already. And usually what tends to happen intraday is that London and New York sort of play this game of chasing each other. It's like one goes up and then the other one goes down and then one goes up. So all of that is something that happens about 70% of the time. I actually spoke about something called the post NY cut with Jay last week.
Yes, you did. Can you talk about it again?
Yeah. So it is the time when the certain Forex options expire at 10 a.m. Eastern, but gold is heavily connected to the Australian dollar. So naturally, whenever you have these big options expiring, you have a knock-on effect. And that can either bring a follow-through on whatever was going on up until that point, but more frequently it brings a reversal. So that's one of the trades that I like to take. I call it the post-NY cut. So I'm going to wait until 10 a.m. Eastern, and then we're going to see whether we have that set up today as well.
Okay. Mr. Robert, what are we looking at here? We just opened up. Smooth's cut, our S&P's cut a bit of a bid. We're seeing the divergence down. NASDAQ's thing showing a little weakness with the S&P's showing some strength. Oil coming out of the gates hot here. Gold as well. Robert, what are we looking at?
I figured I would take one for the team here and jump onto the YM. I'm still learning it, so this could be quite the cluster, or we could get lucky with something. So I'm still going to stick to my guns of not trading the first 30 minutes of the open. It's kind of a hard rule of mine. We're going to see what happens. We'll take a look at it, and
long five.
just kind of keeping the long side. Yeah, keeping MPC warm here. So, John, what are those levels again? I'm just kidding. I'm not going to.
All right, John,
long
you got my
five.
best.
I do.
John, tell us about the trade. Hold on, Robert. John just put on a trade. John, tell us about that trade.
Oh, the opening range broke to the upside. I'm currently long 5 at 79.25.
All right. Okay.
My stop is the other side of the opening range. I've got to move that stop about 4 ticks below the low of the opening range. Yeah. And so far, it seems to be holding pretty well. I'm probably going to peel off a couple here shortly and probably move up my stop a little bit.
All right.
It's not typically the way I'll work the opening range trade, but we are in it.
We're in it. Oil taking off like gangbusters to the upside. New highs trading $81.55. Gold also making a move to the upside here. NASDAQ's showing a little bit of lagging behind the S&Ps. S&Ps are definitely leading the move to the upside. Robert, what are we seeing in the YM? Are we seeing a rally in the YM? I do not have the chart up.
No, it's just bouncing it on. We're going. The high end here is 39,824 and 39,774. So there's not a lot going on in that right now. Just going back and forth, and I'm just going to hang out and we'll wait. And John's trade works out there for him.
Absolutely. Okay, Deeyana, let us know if you take that gold trade. See. All right, John, talk to us.
Yeah,
I took one off for $100 profit. Still in the other 4. Move my stop up just a little bit. I'm just kind of monitoring to see if we see any real continuation in this. I want to see it. I want to see it go. Where there's a lot of liquidity above the market right now, Andre. I mean, we've got 200 at 82.5. I'm going to put an offer in there to sell one there.
I get Johnny.
And we'll see if we get that.
Hell yeah, Johnny. Old school trading right here, John. This is good stuff, man.
Yeah. Hey, man, whatever happens, happens. Works.
I like that attitude. All right, so you did peel off one for $100 profit. We're looking to work another one at 82, I believe. There's 200 lots sitting at 82 evens in the S&Ps. John's trying to join that offer as well. S&P market is attracted to liquidity, and there is definitely liquidity there, so why not join that party? Like John said, whatever happens, happens.
Yeah,
Eddie, if you're there, hit me with some eco numbers today.
Well, coming up in about inside a half an hour here, we do have the big number of the day. Meat on the bone, new home sales coming in at 9 o'clock. They're looking at 675,000, prior 661. And like John said, we got some speakers coming out here today, and you never know what's going to happen. But that's going to be about it as far as the big numbers. 2-year note auction at high noon today, and that's about it. Back to you, Andre.
Thank you, sir. Yes, all right. We'll keep an eye on that two-year note auction. Sometimes those auctions coming out of whack, low bid to cover. It will work. We will see the after effects into some of the equities and other markets surrounding it. All right, Deanna, we are seeing gold making new highs, or just coming off of highs, about 60 cents off the new highs. What are we looking for in terms of trade? Are we still stuck in the range here? I know we did trade above 2200s last week. So what are we looking at over there in gold?
Yeah, we're currently, if you look at the 30-minute chart, we're currently in a top of the range there. So not too keen to take a long trade against that, because we have had a reaction from the same area before. Also, the time of day is not quite right. We opened inside value. We're still inside value. So the value from Friday, I'm just going to mark it here so that everybody can see better. Value high from Friday is 2181.4. So we're still very, very deep inside it. My one area of interest that might be coming up would be 2184. That is the fixed daily range high. And that would be the first area. Yeah. First area where I might want to fade the move, but obviously it depends how the market looks at the time. Whenever the market opens inside range and inside the Friday value on a Monday, usually you want to wait and see what happens until the day develops a little bit better. So yeah, I'm not going to be doing anything at these levels unless we fail the auction ahead of my 2184. So if we keep this supply, so if we keep the top from Friday, which was 2182, then I might have an alternative setup. But for now, the way this looks, it's shooting upside. So I'm just looking at orientation points and logical levels until I get some more information. The initial balance size is not that great. It's 42 ticks. So in fact, I would actually like this to go a little bit higher so that I get a better profit margin on that fade. But for now, I'm not looking at longing it at these levels, certainly not for this time of day. But yeah, so let's see what happens in about 20 minutes or so and where we are. I can tell you a bit more then.
Yeah. We use patience, like Robert said. Hard rule: we don't trade the first 30 minutes. Robert, are we gonna stick to that rule, even though you are on fast markets?
I am going to stick to that rule because I would like to demonstrate discipline as well as teach that. If I do see a setup and I do miss it for what I'm looking for, you know what? There will be another one down the road. And just in my experience, when I personally trade the way I trade in the first 30 minutes, I lose about 80% of those trades. So I'm not going to do it.
Okay, good stuff. Why do you think that is?
I'm learning.
Why do you think it is you lose 80%? It's just because of the lack of logic in these opening markets, the order matching that takes place. There's really not a confluence of trend or narrative or direction in these markets. Why do you think it is 80%? Because I bet that's pretty close. Maybe not 80%, but more often than not, traders do lose in the opening 30 minutes of the markets. Why do you think that is, Robert?
That is true.
Yeah, well, I can. There's certain reasons. I mean, if you're going to trade the opening range, you absolutely have to. There's no question. If you're going to trade the gap from the night before, you absolutely have to. There's no question. Those trades take place at that time. My trades are generally on the smaller side, and when I'm moving on to the Dow here, so typically, I'm talking historically, I would be NQ, and at the open of the market, it just flies all over the place. And since my profits are not too large, I take small pieces. I'll generally enter a trade, get wicked out, and it goes right where my target was anyway. Good thing. So
good job on the mute button. Good job on the mute. Yeah. Good job on the mute button there, Robert. Well done, man. You are a pro at this stuff. Great job on that. Keeping that clearing that throat. Still warming up the engines here on this Monday morning at TopstepTV. Good job there, Robert. Hoagland, I did see John, I saw 82 quarters trade. Did you have your 82 offer in there and did you get filled?
I got it at 82, but I did not get a fill.
You didn't get the fill? Okay.
It's traded like 5 times at 82. Yeah. I didn't see quarters trade, but
okay, I didn't see. I don't know if I saw quarters trade. Okay. All right, I saw 82s. Yeah, I was wondering if you got the fill because I saw 82s getting uptick there a little bit. Okay, still working the one. You should be moving up in the queue there. So next 10 or 15 lots to trade 82. You should get the fill. But I did see 82s trade. I'm like, is he going to get his fill in there? So, John, you're still long 4 then?
I'm long 3 right now.
Long 3. Okay, so you got 2 off for the 100. Okay, gotcha.
Oh wait, so long 2. I got out of another one.
Okay.
It's not going. Come on, man. Let's go.
I thought you were going to get those 82s, man. I thought you were going to get those 82s.
About to take out the low of the opening range, and that's going to take me out of this position.
We've been seeing that a little bit lately. We're seeing S&Ps and NASDAQ trade in different directions on the open here. Eventually, they'll get their act together and start trading in tandem a bit. But this is what Robert was saying, makes things a little bit trickier. Still opening day. We are seeing NASDAQ selling off here.
So we're out.
Okay.
So we're out.
Profit though, right?
Yeah, $82. I'm sorry, $62. $62.50.
Should have been bigger, man. Should have been bigger. That was a crock.
Well, yeah, if the market did what I was hoping it was going to do, and that's just kind of leave the opening range behind, and I mean, it did get pretty close to VWAP. Where do all roads lead?
Stops. All roads lead to VWAP, baby.
And we just took out the stops below the opening range.
Mm-hmm.
I probably would have not gotten stopped out on the whole position just yet. My stop was at 74 quarters, 74 half is the low of the regular trading hour session right now. So we just took out those stops, but we're going to be a little bit more patient now. See what we've got. We've got negative 2,600 in delta in the S&Ps. That is congruent. So I'm not going to fight that right now.
Man, we are clicking today. ES minus, what was it? Minus 26?
Pardon?
I think you said minus 2,600.
Yeah, minus 2,600. Yes, minus 1,200 in the Nasdaq. So we've got direction congruent with Delta right now.
Okay, cool. Well, like we did mention, this week is a 75 for 75. We're gonna have 75% off sometime this week for cracking over 75,000 subscribers here at TopstepTV. While we're at it, please click subscribe. Please click that like button. We truly appreciate you guys. Are awesome in the chat. The environment and the community couldn't be better. We're always watching each other's back, pointing out where the orders are, headlines, news, all that stuff. Super encouraging. So we really appreciate that. But please click like, please click subscribe. We will have the 75 for 75 at some point this week. So stay tuned. We think you guys will like what we have in store later this week. Okay, Deeyana, we're starting to see an upside move here in gold, trading 21.82. Wow, that kind of just popped. So new highs. What was your level again? I think you said 184. I think
21. Yeah, 21,884. So it's now about 14 ticks away from it.
And what are you looking to do?
And again, it's down to the time. It's down to the time of day as well. So I can't go short before those option expiries go through. So I need to wait for another 17 minutes. So it's like the time of day has to be right for a reversal trade, especially if you're going against the move of this sort. And I have one level. I have some other levels higher up, which are my average daily and average session range high, if this one doesn't stop. But time of day is the setup, right? So that's like the first thing that needs to happen. Time of day, then we look for price patterns. So yeah, and it's all based on the volume that comes through after the options expire. Without that, it's just
still
we don't want
still looking at gold.
Yeah, still looking at gold. I'm not gonna trade crude oil because what's been happening with crude oil is that it moves a little bit for the initial balance, and then it kind of breaks the initial balance and stops, dies out. So I'm actually a little bit scarred from trying to look for my regular setups in crude oil and actually not having any follow through bar like 20 ticks. And that's unusual. So when you look at the average range in crude oil, it's like it's fallen down to 116 ticks. Now, whenever the market falls below 120 ticks of average session range, I exclude it from my traded instruments, because it's too small for what I'm trying to do, right? And I could nitpick on stop losses, and I could, try and squeeze in trades and stuff. But the reality is your 30-minute candles are still the same size. They're still like 30, 40, 50 ticks length. And then you're trying to have a price action from a 15 or 30-minute chart. There's just no follow through. So it's extremely frustrating to execute a trade from a slightly higher time frame and then sit there and then just kind of watch paint dry, and then 2 hours later you're like, this should have moved, man, like what is going on? And I went back through all of my sessions that I've done in the last 3 years in the lives, and every time I would pop in any of the trades, it would immediately move about 15, 20 ticks, and then maybe, consolidate a little bit before popping some more, effectively giving me time to decide what I'm going to do. But in the last 2 months, what we've had, because of the Middle East conflict, it pops, and then it just stops, then dips back down, then moves in a 30-tick range, very annoyingly. It's like, I'm not a scalper. I need momentum, right? I need that momentum. So anytime I see the market fall below 120 ticks, it's an automatic exclusion until the average session range comes back usually I wanted 150, 180, ideally 200 ticks. 120 and below is very tight for my type of strategy.
Oh.
Uh-oh.
Hey, kids, we got some hitting the wire here. Bostic is saying that Bostic repeats he expects just one rate cut this year.
One.
And Goolsby is speaking and says that he thinks 3 cuts in 2024 is in line. So, guys, would you get straight here? Really nothing hot, but that's something I pulled out.
Who do we trust, eh?
Deeyana, what do we do with
My
that?
goodness, what's going on?
Nobody knows. Nobody
Thank you, Andre.
Central
Thank you,
bankers,
Eddie.
man, they thank you, Eddie. They say a lot without saying anything. It's like, what is this?
I'm going to lead on Eddie. Eddie, you're going to have to make sense of that nonsense for us, Eddie. So next time you come back with that, you come up and translate. You're a Fed
figure
translator.
that one out. I'm like that. Hold on, let me get my abacus out.
My goodness. Thank you, Eddie. That was nonsense. All right, Robert. Are we still seeing some weak? What's going over there in Dow? I do not have the chart up. We are seeing a bit of a reversal here in S&Ps and NASDAQ. Try making a look into the downside here. And we just see some buyers. What do we got there in the YM there, Robert?
In the YM, okay, so I put a few things on the chart while everybody was looking at the other instruments there. I put on the left side of the chart is a 5 minute, so 5 minute YM, and I plotted the overnight high and overnight low. Use this little linking tool so it copies onto the chart. On the right, it's just a more granular. It's a Renko chart. I'm generally not a time-based chart trader. So I'm going to be using something else in here till range bars get into the Topstep X. So I'll be using some Renko just to give me some plot areas. So not too much. I plotted the 5 minute opening range, labeled it on the chart. It's just something that Hoag would like to reference. John, I don't think a 1 minute opening range is really good on YM. It doesn't really give us the areas I think that we need, and of course everybody is different. Then once we hit the initial balance, I'll throw the initial balance on there also, so we have some nice visuals and potential levels that we can go off of. So we'll see what happens. It just right with that news, it just dropped right down, hit the overnight low, and it's been hanging around there. And I still have about 13 minutes left to my discipline of not taking a trade in the first 30 minutes. So we're still here.
Very good, very good.
Well done.
We are going to practice discipline here this week. We do have some bigger inflation numbers later this week. PC Friday. Remember, this is a shortened trading week. We are not open on Fridays. It is Good Friday. So it is a four-day trading week. So we are going to be backloaded on Thursday. We got a lot of stuff. So Thursday's going to be the big week. We got initial, we got GDP, we got core PC, U of M pending home sales. So they are just going to cram everything into that Thursday. But we're going to build up slowly into this week. We have some speakers. We got the new home sales. We got the 2-year bond auction, 2-year note auction. Excuse me. Today, so we'll keep an eye on that. There will be some action. There will be some fireworks. What's up, Johnny?
There will be some things coming out and some things happening. So much happening now. We're down at negative 3,100 now in the Nasdaq.
Okay.
I mean, I'm sorry, in the S&Ps. Nasdaq is flat. Nasdaq is back to even, but it's really bad. They're both back in the opening range. So nothing really exciting. Just kind of watching that VWAP. I mean, VWAP is tilted to the downside, which, if we can't close the gaps here in the S&P and the Nasdaq relatively early, I'll start looking for shorts.
Oh, something we haven't touched on yet. ES, we'll get to tilt now. Tilt. ES, dead 50-50. Dead 50-50. Nasdaq 64% short. Crude 63% long. Gold around 50-50 as well. I guess just to say, this is the last. This is going to be one of the last few weeks that we're making Topstep or the tilt here available for free to everybody, as we are approaching and getting closer to Topstep X general release to the entire public, which will have tilt. But as far as the free preview that we've had around above the screen here at the top scrolling, we've had it out here for 6-7 months. Those days are coming to an end. We hope you've enjoyed it. We hope you found some value to it. We hope you guys will look to add it to your arsenal here with Topstep X. We are getting closer to the general public release here shortly. We'll probably talk about that more later in the week. But yes, enjoy Tilt for free while it lasts, as we hope you've enjoyed the extended free preview. We've certainly gained some value about it. Last week, we had an awesome Strategy Lab segment with, who was it, Robert? Who was it? Robert, Hoag, and Anne-Marie, right?
Anne-Marie?
You guys were doing the tilt? Yeah,
Yeah.
you guys did that awesome tilt session. So that's a great way to conclude that free preview of tilt. Robert, what were your takeaways from that?
Takeaways I thought were fabulous. We did it live, like talking through it. It's John's idea, and they were discussing it and trying to see how we can use that tilt data historically. So it is real-time data, but whenever you have something on a chart like an average or something, that's called lagging, right? But this is real-time data that's plotted historically. I think it's a little bit different, and we're just discussing how potentially things may line up with VWAP bands or just areas of reversal and like point of control and see where traders are going. And John did a great job. It's a concept, right? It's an idea, and that's how everything starts. You just have an idea, you throw it on there, and work with it, start big, narrow things down, see what works, what doesn't. And sometimes you come out with a product that is entirely different what you started with, but it's better. Sometimes it works as intended and you just hone it in, and sometimes it doesn't work at all. But you got to start with something. And I appreciate John for sharing that idea and talking through it. We literally talked through that live. We knew about it like a half hour before. So that was great. Love it.
Yeah, I think that, I mean, if we find it useful, if it's worth putting together, I think it would be really interesting to give a good look at it to see if it helps, in just making the visual of tilt easier to see, right? I mean, we're all visual learners from to some degree or another, right? I mean, we're all visual learners. We're learning from watching for patterns. We're learning, and I just thought, that might be an interesting way to be able to absorb that information in a much freer and easier way. And I don't know. We'll see.
Good stuff. New Highs Crew. Thank you, Eddie, for pointing that out. Trading 8183. What do we got? I thought someone was going to say, Johnny, what are we thinking here? We are, of course, we had to do a retest. We are in VWAP. We sure did touch VWAP as always. NASDAQ has not gotten there yet. S&Ps have, so all roads do lead to VWAP indeed. Of course, they have to pull back into the initial range there from the open just to see it go higher. Is it going to be a buy the dip? I mean, do you think we could be back in the buy the dip mode eventually at some point this week? I mean, obviously, no one knows. We don't have a crystal ball. Dakota does have that magic 8 ball he'll go to. But yes. You think it's going to be a buy the dip? I don't know. What are the charts showing you?
Well, I mean, if we're looking at the S&Ps, we've been building a bull flag.
Okay.
I'm being patient. I'm looking to the short side here this morning because so far we have not yet been able to close the gap, the low from Friday. That low, Andre, is 52.89 even in the S&Ps. So, there's a test of VWAP here. I mean, this is a perfectly logical place to look for a potential short. We've lost about a half of our negative delta. We're at negative 1,500 now. We've already seen some of those shorts kind of bail out here and bring us right back to VWAP. I'm trying to stay patient to see if we get a chance to close the gap from Friday again. If we're looking at that in the NASDAQ, that same situation, okay, VWAP is heading lower. All right, well, that says, we've got some sellers in this market. To close the gap, we've got to get all the way back up to 18,500. Anybody remember 18,500 was a very important level for us on Friday? That ended up being the dead ass low. So, if we can't get back there, which, I mean, VWAP is going to be 18,500 by the time we get there. So then it becomes, do we reaccept value from Friday? So, are we going to come back into a buy the dip opportunity? Yes, we are.
Okay.
At some point. When? I don't know. Right now we're kind of putting together another bull flag, and the way to play the bull flag is buy it against the low or catch the breakout when it breaks out above.
Okay. Very good stuff.
So, Andre, we may be losing tilt, but we will not be losing Series 3 questions from now through the rest of eternity.
Thank God. Just what we need. More Series 3 here we go.
Yeah, such is my dedication, Andre, that even though Michael is out this week,
he's here in spirit.
we will continue to do this.
All right, here
because
we
he
go.
needs
John
70%.
Right.
The questions today are not bad.
I've been through the book once. I'm going to go through the book again.
Okay.
All right. Deeyana, give it a whirl too. Deeyana, please give it
I actually was an RDR qualified the person at one point, which had similar nonsense questions, and it was like an overall derivative module and stuff. So, but we also had risk and taxation and regulation, where you had to memorize 13 equations.
Yikes.
And it was just like, why?
Yikes.
It didn't really help you with trading or anything, so I didn't really see the point of that. As soon as I stopped working for an asset management company, I was like, I'm never doing this again. But yeah, let's see what you guys got.
Okay. So Dolby, since
5 minutes remaining.
Michael's not here, I'll be the person to say, Dolby, the polls. Get a poll up. Just A, B, C, D, so they can answer at home, in the work, on the tractor, wherever they're watching right now.
On the tractor.
Let's see. Yeah, long time people will get that reference. So James, hit us with it. Give us one of these delightful little questions.
All right, Robert, you too, man.
Minimum initial margin is set by A, members of the exchange, B, the CFTC, C, the board of directors of the exchange, or D, all of the above.
Say B.
We got one for B.
The correct
minimal
answer.
Initial margin is set by minimal.
It's got to be.
I would say B also, just
Board
based on those. I actually thought it was a broker, to be honest. But I didn't see up there, so I'm gonna guess at B also, the CFTC.
Because with us, the FCA is the one who sets the. That's
why would the board of directors? Why would the board of directors?
Yeah, exactly. So I'm going to go with Andre. I'm going to say B.
Yeah, that's my guess. John, you're the answer key here. So, John,
what do you think, Hoag?
I can't imagine in the board of director meetings they're talking about initial margin requirements.
Well, yeah, let's see the answer.
Is it really?
Not
oh, Johnny!
Besides Hoag.
That's what they talk about. Good job, John. Yeah. Good job, John. Wow. Yeah, I don't. That's what they talk about in those meetings, huh?
Yep.
Yeah.
So why have the regulatory body then? What do they do?
Because
they're protecting.
Go ahead, Jack.
Yeah, I mean, like, once again, I'm not taking this test. I'm just guessing, but like different places have different initial margins, so it can't be something that's set by like the CFTC or something. I think it's a decision on their end to minimize like how much risk they want to take.
Yeah, because in the UK, how it works is that it's set by effectively the asset class. So whatever the asset class you're trading, there's a certain margin requirement that goes along with it. It's interesting that it's different over there.
I figure the clearinghouse
is different.
That's what I was thinking also. When you read that question, I was like, oh, I know this answer. It's the broker you're using because you can have an initial margin, like TradeStation is one, AMP is another, TraderBase is another. So I was thinking, oh, yeah, this is easy. This is just going to be whoever you're using for your trading as a broker. And then it wasn't in the list. And I was like, well, that is
me too. And I was scrambling. Too. I was the exact same with you, Robert. All right, we got home sales.
Yeah, Charles Chapman got it. It's self-regulation. Even though there's the CFTC and the NFA, the CME and the Board of Trade, all of them are self-regulated exchanges. And it's the Board of Directors that chooses all of that.
Okay. Very good. Learn something.
Real quick, just to let everybody know, we got the number coming up here, top of the hour. If you don't want a position on, check. Make sure that you're flat. If you want a position on, then good to go.
Nice question, Jack. That was a good one.
It was a good one.
You came in here saying this is an easy one, too. Didn't you say this was going to be an easy one, too, to start off?
I think when I say easy, I mean they were easy for me to type in because they are short.
Fair enough. Touche.
Jack.
All right.
Need one of those speech-to-text things.
Yes.
Just read it out. It's fine.
All right, Eddie, when you get those numbers here in about 10 seconds, please jump in here and listen, new home sales. Flatten all, cancel all, everybody. This could be a big one.
All right, should hit the wire here.
It is a little thin. Dome's a little thin.
Yeah. All right, coming in much lower than expected. Houses They were looking at 675,000, coming in at 662,000. The new home sales change month over month, coming in at negative 0.3%. They were looking at a positive 2.1. So that's what we got here right now. Fed Cook's going to be speaking at 9:30. Also, we'll keep some eyes open for some other numbers coming out. There you have it. Back to you, Andre.
Good stuff there. You think that'd be a pretty big miss? Marcus just yawning at that. Okay. Oil continued to uptick. Deeyana, we are still looking for your level of 2184. Still not there, so we're gonna stay patient.
Yeah, well, we kind of we have a big excess in C period now on gold. So I am looking for a short trade now. It means that strong selling has taken place, and so they tried to go above the initial balance, but as soon as they smacked through that high from Friday, there was some big sellers that came in. So now I would like to find some reason to short this. Okay. So therefore, I am looking for a short ahead of that, ahead of the 2184 level, because we failed at the Friday high. So we never actually went to the fixed daily range high, which was higher up. So I'm just gonna look for price action to show me the way.
Yep.
Usually on lower time frames, so that's on my other screen. I've also got bookmap up there. So yeah, we're gonna wait for some sellers to appear. So selling last time kicked in exactly at 82.5. So that left a little tiny supply at 2180.6. So that's one of my prices where I want to see some short reaction. If we don't get that, then nothing. I do have a daily supply located slightly higher up, close to that 2184 level. But the time of day is right. So now we're basically scanning, looking for opportunities. I have a direction in mind. I just need a good level, right?
Yep.
Uda.
Very good. All right, Robert. We're now 32 minutes. 32 minutes into the trade. We have now broken out your self-imposed no trade zone. We are able to trade. Let's see if this market comes to you. What do you think about for the Dow? I would say the Dow was the darling of TopstepTV last week. Almost the Dolby getting that initiative off the ground. Now we're getting all the Dolby, Dow was getting all the love. What are we seeing over there in the Dow? And are you ready to trade? What levels are you looking for? And talk to us about your self-imposed ban has now been taken off.
It has been taken off, and I didn't do it right at 9 o'clock because just that number was coming out, and it's just not like, oh wait, 9 o'clock trade. But we are here. I will maximize my screen a little bit so we can see on the left-hand side. I have the overnight high marked off, the overnight low marked off, the 5-minute opening range marked off for Hoag's benefit there. And I did put the volume profile on. I like to see where the point of control is. It happens to be right smack in the middle of the opening range, which is good because it just shows me if it's going to stick around in there. You know what that means? It means it's not an area I'm trading. And if you look at the volume profile on the left-hand side, it just has a nice little peak right out to that. So we have the potential of once it breaks out of that area to go up a little further, or if it goes below it to go down a little further. So I'm going to put 2 pending trades on and leave them there. Okay. I went over to my settings prior to. I put a 500 risk, 500 profit. Doesn't mean it's staying there. It just means that's what I'm starting with when I throw the bracket order on. So we're going to do that right now.
Good stuff.
I'm going to go right to the chart, and I'm going to put a break level right up here. So I'm going to right click on the chart and do a buy stop. And I'm going to use 5 contracts. This is a combine. It's a brand new combine that James set up for me not too long ago. I'm going to put 5 above, and then we're going down to the bottom here. If we break out this bottom section, I'm going to put 5 below. So pretty much just going to straddle this and see what the hell happens. We'll see what goes on.
Good stuff. Good stuff. John, what are we looking at? We'd keep bouncing off VWAP here in the ES. We get a little juice to the upside. So we are going to be slow start to the trading week, which is to be expected as Deeyana kind of echoed that we are going to be patient today. We'll outweight this market. The market will eventually move. As Dolby said, once Dolby has some Dolbyisms that are so profound, they stick with you. We can't stay in this range forever. We will break out of this range. So when that does happen, we'll be looking to capture that opportunity. But for the time being, we got to be patient, Johnny.
Another Dolbyism. It's violently range bound right now.
Yeah, what was it? Deeyana liked that one. That's what Deeyana loved that one.
Violently range bound.
Violently range bound. Damn straight.
We need some teleporting. We need some teleporting.
We're gonna write a book here one day, Dolby. All right, so we got new home sales. We do have a speaker coming up here in about 25 minutes. Eddie will keep us into that. Fed's Cook speaking here, and we will see what they have to say. Like we had Paul last week. You know, we got Bostic saying that we got one rate cut now. Now we got Goldsby saying we got 3 rate cuts. Who the hell knows? Kind of seems like this market's taking it with a grain of salt. So that's okay. We'll do this. We do have some news coming up here shortly. Yes, everything seems like a hands on the butt type of trade right now. John, even if you were in that opening range trade, what'd you get long from? 79 quarter-ish? 79s-ish?
Yeah, 79 quarter.
79 quarter. So let's say you were staying that still. I mean, we bounced up against VWAP. We bounced up against VWAP at 52.82, as I have on my charts. I mean, would you... Eventually, you're going to get out of the trade just to time stop that trade, right? Even if...
Which is basically what I did.
Yeah, it is basically what you did.
It wasn't giving me what I wanted. It actually came back and ticked right to where my original stop was, and put in the dead ass low there. And
Yeah.
you know, you can see here on this chart. All right, well, here's our overnight low right there, and here's the low after the open.
What are the prices,
take
John?
that out. Overnight low 52.72 half. Our low for the session 52.74 and a quarter. That's where my stop was. I would have just put my stop just not far enough away to take out all those stops below the initial balance. So now we're kind of stuck between a rock and a hard place. Overnight low, again, that level, you just got to get it right here, 72 half, and VWAP. We still don't have a gap close. No gap close early in the session. Did we close the gap in the NASDAQ? Dun, dun, dun. We did not. We have not closed the gap in either of them yet, which has me looking for shorts. You know, the NASDAQ did take out the overnight low, but it rejected. So now I'm just kind of violently range bound, waiting for something to change here.
Violently range bound.
Violently range bound.
Don't be creating a monster. There it is. All right, SSS in here.
I'm going to ask D. Okay, here's the initial bounce high in gold, right? Initial bounce high 21.7820, right?
Yep.
We had C period put in the high, D period stop short. This is still a potential failed auction on the upside, right?
Yeah, I've just gone short actually.
Okay.
What was the price? To 78.90 was my entry.
Okay.
So 21.78.90. So we'll see.
Right.
We'll see. Let me plop that 1, 2 here.
Nice.
Well, we'll see. You know, it is that time of day when we should reverse, and excess has given us a little bit of support there to justify entering this trade. There was a little bit of a reversal on a low time frame from the nearest low time frame supply, which you can see here on a 2-minute chart. So we'll see. Nothing more to do now.
Fair enough. We are seeing a bit of a long bias here. On the tilt in NASDAQ, it was up to 75%. Has peeled back a couple, but now down. Still at 72%. ES, 69% long. So we're seeing a long bias. As we have broken through VWAP to the upside here. I did take a short. Robert, are we seeing a move in the YM? I should probably just have the YM chart up. I don't know why I don't. Are we seeing a move to the upside, or is it still just kind of stagnant over there?
It is hanging right around the overnight low at this point. It's not really doing too much of anything. Once it gets down a little bit closer to the bottom, I drew a target area on there based on my calculations. So if it does break out and we do get into short, and it's a pending short of 5 contracts at 39735. If we do get into that, I have a target. It's a target zone area. I'm not going to look at a specific line, but there's a target zone area, and I chose that with just doing some calcs. And if you look just below that, there's a caution area that I found on March 13th. So if you put on like an hourly chart and you go way back, you'll find that right there, there's a whole bunch of congestion where it was rejected out. And then once it broke through that resistance, it shot up like crazy. It hasn't been back there since March 13th. So I'm going to call that just a cautionary area. So if I do get into this short, I'm just going to take my profits, hopefully take the profits out within that zone area so I don't get caught trying to be short into or below support area. So that's what we're looking at on the chart now.
Hold on, you
NASDAQ
called it
is
a
now,
yeah. Go ahead, John.
NASDAQ has now closed the gap to Friday's range.
Oh, fuck.
Is anyone trading NASDAQ on the show today? I mean, I can jump on that too, but
I'm long the S&P now because we've kind of taken out the VWAP. Not going to risk a lot. I'm light and tight on this, just a one lot in a live account. Just want to see it hold up here, and you're just kind of taking this trade to see if we can get a gap close in the S&Ps. A gap close in the S&Ps would take us up to, I'm thinking, 52.89. So we're not really looking for a lot from this trade. Maybe about 5 points to get to the gap close, unless we really start to see the NASDAQ reaccepting in the range from Friday. Again, the gap close in the NASDAQ was to 18,500. 18,500. Gap close in the S&Ps again to 52.97 quarter. 97 quarter. We're getting a little bit of movement here above VWAP now. NASDAQ kind of driving into Friday's range. So this one is looking pretty good. I'm really thinking about adding to this position because I'm really only looking for the gap close in the S&P if we get that, if we even get that far. I'm going to see what this looks like on the 1,000 tick chart.
Mm-hmm.
So here's the breakout above VWAP. It was holding. We get a breakout above VWAP. What am I looking for? I'm looking for the gap close up again around 90, 87, 90. What was the gap close again? I can't remember anything.
Anything, John.
What are those levels, Sean?
Anything.
89. So we'll see if we get some momentum up to that level. We do have, some volume, some liquidity up above. We've got 78.5. I mean, the dome is still pretty thin. It doesn't look like it normally does, but we're seeing some liquidity up to 52.90. Let's see what happens.
Speaking of levels, we did pin to the top of the chat here in the YouTube channel our Topstep daily levels. You should have that window open at all times while you're trading. The levels that we post up here, they're pretty damn good. John talks about all the time. JD, I mean, our levels are pretty spot on. I highly advise that you click that link, have that window open somewhere next to, on a second screen somewhere. It is very important to know that what levels you're trading around. Because, say if you get blindsided, you get long, you got long into resistance or something like that. Like, you got to know where the traps are, the landmines are in these markets. And that's what kind of the daily levels kind of alert you to. So please keep that window open. They put a lot of hard work into there. And most importantly, they hit. The levels are good. Why do you think Patak or Michael comes in here all the time saying, what are the levels? What are the levels? Well, he's not just saying that willy-nilly. He's not just saying that willy-nilly. He's saying that because the levels work. Otherwise, he wouldn't be asking for them. Those are always literally the first words out of his mouth is, what are the levels? So, yes. Please keep that open. Deeyana, someone in the chat was asking, what's your profit target? Where's your stop at?
Stop is 21.82, so 30 ticks. And I mean, I could argue that I could maybe increase that a little bit because we have a decent range, but let's see how this goes. So my target would be 2174.3 if we can get it. But obviously it's not really moving anywhere at the moment. There's still more time needed. So if this fails, we will then be in a slower upside auction that is chewing up the excess, which can happen at any point of the day. In which case, the short post and cut trade is going to be invalidated, and then we sit on our hands until later.
We've now eased the delta in the S&Ps.
What are we looking at?
And it's minus 130 right now.
That's it.
We're getting long. NASDAQ is 2,100 positive.
Wow. that changed. That flipped. Okay.
Yeah, it's back in range. It's back in value from Friday right now. I mean, if it holds in there, there could be a pretty decent upside move here.
Okay.
John, I have a question for you.
We got to spend time in there, though. I'm sorry. Go ahead, Robert.
Yeah, question for you. Can you spit out those delta numbers for YM? So just because we're watching it for today, and then Deeyana, after that, I have a question for you to see if you ever do any correlation between natural gas and oil. Just kind of curious.
Interesting. Good stuff, Robert.
Mini Dow is positive 220 right now as far as Delta's concerned.
Yeah, natural gas and crude oil. I have traded. Hold on, let me just kill this because this is going higher. And just looking at this, I did fail to notice that we are at value high here. Shorting from the inside of value high is actually a low probability trade. I don't know why I didn't see that before. It's more caffeine needed. Yeah, I'm going to look for higher levels up because
wake up.
Yeah, exactly. Wake up, T. So yeah, I'm going to look for a responsive activity short, which is usually when you exit the value area and then you go short. So this was a little bit premature on my side. Never mind. We carry on. That was minus 180, so not a full stop loss.
Yeah.
18 ticks down. Yeah, so correlation between crude oil and natural gas. I have traded natural gas before. I don't like it because it used to open with gaps. I don't know whether that's still the case because I haven't traded it for a few years now. But it was horrible because it would gap like 200 ticks on the open, and it's actually called lovingly by the prop traders the Widowmaker. Because you leave a trade open and the next day you're either massively in profit or you're liquidated. You have a margin call. I don't really look at it actively because I don't think the correlation is that tight. I think it used to be more of a correlation back in the day. And then I know that at one point the correlation went the opposite way completely. So whoever was banking on the correlation, they didn't really do that well. So since then, I haven't really thought, oh yeah, let me just check what natural gas is doing. I don't know. Like I said, I haven't done that in a while, so that could have come back into correlation. So I would be interested to hear some of your research. You found something good there?
Yeah, I haven't done a lot of research on that since I'm not huge on oil, but I think it would be two that I would look at. And then, as you said, historically it used to be that way. So I would look back and see, oh, this is working, and then it's working until it doesn't, right? So the same thing with gold and silver. And if Eddie's around, maybe he can comment if he looks at silver along with gold. I don't know the answer to that. Like we say, leaders and laggards, the NQ to ES. We talk about leaders and laggards all the time. So we're talking partial, at least, correlation between NQ is going up and it's pulling in ES, and it's going to depend on which stocks are moving since there is some crossover. So I was just super curious as to if you did look at gas and oil, because they're kind of almost the same byproduct, right?
It is, but there are slightly different forces at work because I mean, they are. Technically, it should be correlated, right? It's like on paper, it would make sense.
Energy.
But then when you actually put them side by side, like I remember a few years ago when I was doing that side by side, they didn't really do things together very well. So all the levels were different, setups were different. Sometimes the movement would be going in the similar direction, but then natural gas would be a little bit more exaggerated, and then it would just stop. So it's kind of like what crude oil is doing right now, actually. It just does this explosive move and then nothing. So very kind of short-lived. And that was another aspect why I didn't really like natural gas. So yeah, I kind of stuck with crude oil and gold for most of my career. But yeah, crude oil, it's got its moments, especially when there are wars in focus. It's very news-driven and it's exceptionally hard to trade it.
Yeah, that makes
Great
sense.
insight.
That makes sense. I know. Yeah.
Ooh, I know that voice.
Yeah,
Jack.
It's me.
It was a good run. It was a good run for your Northwestern Wildcats. You got the one win, kind of like my Jayhawks. Got one win. And it was fun.
They won the second half of that game against UConn. The problem was that
you bet that second half or something.
No, I turned it off. I was actually surprised to see the score was that close. It was 40-18 at halftime, and yeah, I just decided to watch 60 Minutes or something. But, good job, Wildcats. And some news. Good job, Goldman Sachs, for having the courage to finally say that the mega cap bull case might take the S&P 500 to 6,000. I love that they can just make these proclamations as news. So
next week,
are there any reporters
exactly.
up there?
Put a time on it. Yeah.
I'm gonna say it can go to 8,000. Let's get it.
Now you're talking, Jack.
Let's go 10.
Yeah.
Now you're talking. It's like an auction price. Do I hear 6? Do I hear 6? Do I hear 7? Here we go.
One of the stocks that's not helping the case here is Boeing. The CEO announced that he was going to be stepping down at the end of the year. And then the head of commercial airplanes stepped down immediately, which really the biggest question that was kind of shocking about this news story is like, that guy's still there?
I know, dude, what took so long?
I cannot think, and maybe someone in the chat can throw out an example, but like I can't think of a company with a better reputation that has ruined it in as short a time, but impressive. So hopefully they get someone there. And then one last thing, the rumor was finally confirmed that Bill Clinton indeed did fall asleep during a screening of the 1996 Gwyneth Paltrow movie Emma.
Where'd you get this from?
Danielle sent this to me.
Thank you, Danielle.
She still seems upset about it.
I mean, hey,
has anyone
rightfully
seen this
so,
movie?
Danielle. Rightfully so.
Oh, there it goes. So.
Yeah, the markets are like, thank you, Jack.
Yeah,
that
power
Boeing,
move, by the way. Power move.
Power was right. Yeah, the Boeing CEO, how he's been around for this long is a great question. Whether doors are falling off or wheels are falling off. Yeah.
Oh man! Remember that first one that Jack put up there, where they're calling out, the S&P is going to go to this area. Is that like calling trades? You can't do that or something. I don't know how did they get away with it, but
no.
Oh, they didn't say maybe, right? They said it might go, so I guess it's clear.
Yeah, you gotta read the fine print.
Yeah,
we're Goldman Sachs, but we don't know shit.
Yeah, exactly. Put a timestamp. Put a time on it. Put a time on it, dude. I mean, yeah,
it's like it might go to 6,000. We also have a ton of puts and think it's going to go to 4, but
right,
we're covered. I'm on to you.
Yeah, we're covered.
We're on you, Goldman. We're on you. All right, new highs, ES. Well, for the day session, new highs.
Sort of.
Yeah, new highs in day session. Overnight highs. Still, I got a print of 52.93 in the S&Ps, 18,565 in the Nasdaq for overnight. Cold kind of trading.
Yeah, I got out of that one lot, like pretty close to the high of the last little violently range bound little area there. But we are seeing the Nasdaq spending time inside value from Friday. There's current price 18,527, 526, 527. We closed a 30-minute bar inside value from Friday. That kind of puts a higher probability of price actually reaching the high of the value area from Friday, which is 18,588. 18,588. That's volume. Excuse me. TPO value high. TPO value high. Still working on trying to get into volume value. But TPO value, if we were to close this 30-minute bar up here, that would be a one nuance that says, yes, price is reaccepting value, could bring it back up to 18,588 during this session at some time. Rarely is it ever a straight line unless you plan for it not to be, but it does give you that nuance and that opportunity.
Right, so I'm gonna try long in gold because we are chewing through that C period, and I do have my levels higher up. We technically do have some kind of a sustained auction here, even though it's not strong. We are kind of once again haphazardly going upside, but there are some slightly larger buyers around 2180, so I'm gonna do that. So I went in long at 2180.4 with
that's right on time too.
when you said it's chewing through the CTPOs.
Yeah, I noticed that
in my head. I heard Pac-Man.
Pac-Man, yes, John, Pac-Man.
Yeah, that's
same thing.
That's what I always think. Yeah, that's exactly what I'm thinking whenever I'm looking at the C period or any kind of
Pac-Man for sure.
So what was that? There was a comedian in the UK that said, "Oh, somebody said that our lives are going to be like Pac-Man." It's like, what? What does that mean? Well, we're popping pills in the dark. Nobody does that. And then he was like, "Hold on a minute."
Pills in the dark.
I've been Pac-Man, to be honest, in the past.
Yeah,
those Grateful Dead shows. Yeah, those Grateful Dead shows, man.
I think we were all Pac-Man at some point.
Yeah, and I was actually eating ghosts.
Yeah, you were. Yeah, you were.
Hey, my brother Rick Randolph is here with us. Good morning, Rick.
Hey.
Brother Rick, welcome. Welcome. All right, new highs crude.
Deeyana, that was a good time for that trade right there because you're jumping on the gold bandwagon because I think we have Eddie coming up pretty soon. So that's perfect timing. I wonder if he's in that trade with you. We can ask him when he gets on here in a few minutes.
Yeah, I got to go do some laundry, so I'll see you guys in a little while.
Good trade, John. You're going to be on later today, right? You're going to be on later today, John.
Yeah.
Dude. You want more of Hoag? You stay tuned. Afternoon packed with John Hoagland. We are trying a little bit different format here, guys. You'll notice that fast markets, we're kind of expanding by a half hour. We're going to have some drop-ins, some different types. The shoulder tap's still going to be here, but just in a bit different format. It's going to be dropping in periodically throughout the day. It's kind of more realistic as to how the shoulder tap would work instead of just kind of forcing it in a time segment. The shoulder tap comes in as needed, throughout the trading day. Back when I was at the firm, the actual shoulder tap was the risk manager would come to your trading station, your trading desk. And if you didn't see them initially, they would literally tap you on the shoulder and say, hey, you're done for the day. Why don't you take the rest of the day off? And if you need a day tomorrow, please take tomorrow off because we're always trying to trade for tomorrow. So that's kind of where the whole idea of the shoulder tap came from. The risk manager would literally come and tap you on the shoulder. If it wasn't your day, 3 strikes and you're out. You got to go, call it a day, take tomorrow off if you want. Let's reset, let's do a little hard reset here and get back in there. So that's kind of where the idea of the shoulder tap came in. So we're kind of doing a little bit new format. The risk manager comes in as not as needed, but as needed, so to speak. So you will still get MIC, you'll still get the shoulder tap, just a little bit different. So if you're asking where shoulder tap has gone, still going to be here. We're just expanding fast markets by a half hour and kind of incorporating shoulder tap into the fast markets. Shoulder tap will also be
I think it's going to be wonderful.
I think it is too. I think it's more realistic. I think it's just kind of how we trade on the.
It's going to be Morse code, and then Mick going, slow down.
Slow down. Why'd you trade 15 lots? Come on.
Exactly.
Uh-oh.
There you go.
I was just testing it. Eddie's just testing it to make sure it works.
Just testing, yes.
Right.
But we will, in 2 minutes, important speaker, Ms. Lisa Cook is a voting member on the FOMC and is set to speak here in about 2 minutes. Her words carry more weight than, say, a Goolsby did from earlier today. As she does vote, and Goolsby is still simply an alternate member, I should say.
Mm-hmm.
So, Eddie, when you get that, please chime in. We are going to be doing a little bit of a shift change here. John's going to jump off in a couple minutes. Eddie's going to jump in. Yep. So we'll kind of try to test out a little bit new format here on TopstepTV. We'd like to get your feedback. Throw out, tell us if you like it, if you don't like it, what you'd like to see changed. But yeah, we're going to test something out, keep things fresh around here.
All right, I got to move some laundry into the dryer, so I'll see you guys all later. Eddie, take it.
Yeah, is it the whites or the colors? What are we working with, John?
You got it, Johnny.
Thank
Johnny. You, brother.
Wait, you're supposed to separate them?
Yeah, I don't anymore. That's how we learn.
You know what works really good? Just bleach. Put bleach, like maybe about 3 or 4 cups of bleach, and everything will be white as hell.
Yes, it will, for better or worse. Yes. All right, thank you, John. Good trading this morning. Eddie's in. All right, so talk to us. All right, first you got the cook. We'll keep an eye on the cook, and then
eyes on the price here. I'm watching the wire here.
Get her done.
I will be getting it done as soon as it hits the wire. If she's got something to say, we will definitely share that.
Very good. All right, Eddie, what are you going to be looking to trade? I think typically you've been.
You know what? Caught a few here. Looking to trade the gold. I'm watching the gold here right now. I've got my 150K Express funded account up and ready. And let me just kick it over to gold here. And caught, like Kyle says, I caught some wind in the sail. And I am now positive. That was an account that was down $1,000 plus, and took my time. I just was looking for small profits adding up. It took me a few days to get there, but now my head is above water. And on the account, I'm up 113 right now. On the day, up 411.
Good start. Good start. Good start to a Monday.
All right, so my trade obviously didn't work, so I'm done for the day. That was minus 450 on those two, so I'm done. No more trading for me.
You'd be done. You're done for the day, Deeyana. Completely done.
Yeah, because I don't really want to keep trading if I'm not reading the market or there's no follow through on the setups that I'm taking. And obviously, right now, I've tried 2 trades. They're away from my levels. Neither really brought a movement that is more than about 30 ticks. So we're still back in that range bound nonsense of about 30 ticks up and down outside of the initial balance range. So I don't really like that. Therefore, I'm going to just park it and just wait for some better market conditions. Obviously, gold is in rollover. So my initial trade idea was that we are going to get to 2184. That didn't happen. Then we started failing the auction. Then it didn't fail the auction and started messing around. So that's usually a sign of a range-bound day. And today, Monday, I would like to have more of a range if I'm going to be getting involved in range-bound trades. And right now we're sitting at 85 ticks for the session. When I want to do range-bound days, I want to see at least 115, 120 ticks, and we don't have that. So this would be a very, very painful exercise for me. So therefore, I'm not going to do that to myself.
Oh, hey, we got this coming over the wire here. Nothing in red, though. Cook is saying it could be some service prices still adjusting to increase the pandemic era input cost. Also coming off of Cook here, wage growths are differential between job switches. Nothing right now. There is a lot coming out from Lisa right now. Says there are risks to easing the policy too much or too soon, as well as too late. So she's sort of, but considering what we heard today, she's sort of in the middle right now. She's the banter is sort of neutral of what she's sort of saying here. So eyes on the price here. Anything else comes up here, we will get that out. Back to you, Andre.
Thanks, man. All right, so we got Bostic saying 1 rate cut, Goolsby saying 3 rate cuts, Cook saying I don't quite know yet. So good old Fed speak, good old Fed speak. But thank you for that. If you do see anything red over there in financial juice, Eddie, please jump in. But yeah, eyes on the prize. Eddie's made a nice little comeback here in gold. Robert, you had some resting orders over there in YM. Did any of them get hit? Did you get filled on any of those?
Good question, Andre. There are still resting orders. They came close to the short. I have a pending short of 5 contracts, 39735, and the pending long is way up there, 39826. Potential targets on the chart on the left-hand side. Also, we will wait and see. I was a little hesitant. I was almost going to pull them off while that news was coming out. So I watched some of the price action. It didn't go crazy. If it started really flipping back up around, up and down really quickly, I would just pull the trade off and I didn't want to get ticked into it to get stopped out. It wasn't large movement. A little bit of ticking back and forth, but it wasn't enough to scare me out. So we're just going to leave this on here. And if we break below that, hopefully we get into our target and we'll see. Eddie, I do have a question. You said your P&L, what did you stop at? 400?
411 on the day.
Awesome. And your target is only 420. May I ask for an educational moment? You're missing your target by 420. Are you going to take another trade? You're going to be happy with this?
You know what? The thing is, I'm not 420 by 420 right now. I've got myself, I've got my head above water, which I mean, the key account, my 150 XFA was negative. I finally got it. I'm up positive about $113. Now I'm going to take a step back and reevaluate. I got to where I wanted to be, but I'm not in a rush to start putting more trades on. I want to take it systematically. I don't want to rush into it. I'm very happy with what happened today. I got myself back into positive territory. So I'm going to be very frugal. I'm going to be very selective. And if I do see something, then I will definitely put it on.
Good choice. Love it. Love the education. Thanks for answering there. And yeah, way to go. Way to go. It looks like we might get filled on this short here pretty soon. The short again is 39735. We're getting pretty close to filling that order. And ticker 2 away.
Here we go.
Now, what I'm doing, if you see the screen on the right-hand side, I have a Renko chart, and that's just going to show me the price movement. I have it refreshing every 15 seconds. It's a 5 block, so every 5 points it moves, it will print another Renko block, and it just kind of gives me an area. It makes it pretty simple, not simple, but easier to see where the levels are just visually. I was talking earlier that we do a lot of visualization in trading. So once we get filled, I'll be keeping an eye on that Renko to see if we start printing them down on a rapid rate or just printing and reversing and seeing if it flips the other direction on me, and I may want to get out of this trade. My area is a short target. It's a potential, right? I don't know if it's going to go there. It's a potential. My stop, I'm doing 1-to-1 just so when it enters, it's going to give me a target and stop on the chart. And I'm looking at it. It just ironically came into the overnight low area. I'm going to watch, take this pretty closely, keeping an eye on it, moving it around so I can see. Now that stop, even though I'm looking at 1-to-1 ratio, I'm actually going to move that stop up a little further to get out of that mess and move my target down almost toward the end of my target area. So if it happens to drop really super quick and just blows through and hits my target, I'll be ahead of the game. But once it gets in there, I'm just going to manage that trade and say, you know what? It reached the area. I'm good enough with this.
Good stuff. All right. Well, while we have
now
a
it's
minute here,
we could be watching paint dry for a while on this YM. So we'll see. We'll keep you
that's
informed.
okay. Well, while the paint is drying, I'd like to go to JD. He is going to add. We got the hot streaks and stuff that everyone's familiar with. We are adding a new addition to the 935 Central news dump here. All right, JD, what do we got? Are you nervous for the new addition that we're putting in here?
Of course not, but I am here.
Yes, you are. What do we
Happy
got,
Monday,
there,
everyone.
JD? Well, this should be interesting, guys. We're gonna let's learn a little bit, JD. What do we got?
Sure. Let's start with those hot streaks, though. All right. All right. First off, our boy Loy finally broke a streak 1 day shy of the record. Loy's streak was cut at 36 consecutive days of winners. Our streak, our current hot streak champion is at 37 days. Yeah, nothing to scoff at all. Well done, Loy. We'll be keeping an eye on you going forward. But Loy going down also gives us a new leader. Alexander put up 5,400 over the course of a 30-day ripper. Nice job, Alexander.
Well done. Well done.
Then we have Chris, our live funded trader, at 23 days. Peter at 22 days. Amnaj at 19 days. And our newcomer, Che. Che is jabbing away at it and has pocketed about $500 over the last 19 over the last 19 trading days. Good job all around there, guys. All right, next we got our yesterday's best live P&Ls.
Wow.
This should be Friday's best. All right, Shen put up 3,800 trading the NQ. Our boy, Mr. Slow Markets, Coach Dakota took home about 4,500. We watched Dakota carve up the NASDAQ on Friday during Power Hour. Impressive stuff. Speaking of impressive, David added 4,500 to his account value. Yao took home $9,600 in trading both the ES and the NQ. And our live funded trader leader is Jesus, who took $14,500 out of the NASDAQ on Friday. We're going to see Jesus' name in just a little bit. I'll keep you posted on that.
And JD, I believe that Dakota also made like another 11K across 3 XFAs too that day.
Yep, we're just talking about live accounts there, though.
Oh, yeah. I just want to give the context to everyone.
Thanks, Jack. Appreciate it.
I know, Jack. I know, Jack. It's Monday.
Now for that special treat we've been talking about.
Yeah.
All right, folks. We want you all to have a solid foundation in chart reading, chart patterns, and technical analysis. So for the next few weeks, we're going to be sharing some basic chart patterns with you.
Cool.
Today, we're going to talk a little bit about the bullish falling wedge pattern. There it is on your screen. Specifically, we're going to be talking about the bullish falling wedge pattern as a continuation pattern. You should know the falling wedge can be either a continuation pattern or a reversal pattern, but it is always a bullish pattern. Everybody see that? All right.
Nice.
Okay, so
Wow.
to be a continuation pattern, there must be a prior or underlying trend. In this case, it will be an uptrend. So we have our flagpole. I'm pulling up my charts right now. We're going to see a live scoop back just a little bit. There's a nice 30-minute channel, down channel, that we connected on today. Not bad.
Thanks, JD. Good stuff.
So we're going to go back to the 22nd. I'm sorry, the 20th, which was last Wednesday. Here is a bullish falling wedge formation in the NASDAQ.
Huh.
All right, so we have our flagpole rally, which is be our underlying trend. Like we said, to be a continuation pattern, there must be a prior or underlying trend. In this case, an uptrend trend. So here is our flagpole. We have our upper channel line, our lower channel line converging on each other as price contracts and ranges get smaller going in. Confirmation of this pattern is made when price breaks out and closes above this upper resistance line. It's also good to see a spike in volume when this breakout occurs. Volume is another form of confirmation. This pattern happened to take place overnight, but it was the most recent one. So you're not seeing too big of a spike in volume until we had a nice ripper after it, but we're not seeing any real volume until markets open the next morning. Volume is another form of confirmation. When we see volume increase as price increases, it's telling us that buyers are validating the move higher. Profit targets. There is a measured move that you could play, a minimum, I guess you could say, price target. It would be measured from the high of the pattern to the low of the pattern, and you just extend that upwards from the breakout price, and that would be your minimum profit target trading a bullish falling wedge formation. So hope that helps. Maybe we'll pass around some other information about that as the day goes on, but that's a basic chart pattern setup you'll find in any technical analysis book. We just wanted to present it to you so you're aware of it. That's what I got. I'll be back in a little bit with those that coveted top 10 list. So I'll see you guys in just a little bit.
Good stuff, JD. Yeah, I like that. Found a real life example of it. Yeah, real life example just last Wednesday, 4 trading days ago. Good stuff. So it's not just all in textbook. This is all real life applications, as JD just pointed out, just last Wednesday. So that was really cool. Good stuff. I like that addition. Hope you guys liked it too. We're going to keep bringing up more charts. We're going to keep educating. I know we talk about tradertainment. We like to do the laughs and giggles around here, but this is actually serious stuff. You know, we're going to keep trading, entertaining, but educating overall. You know, let's all learn. Let's all get better. You know, we're all learning something one day at a time. You can, Danielle liked that too. I thought it was pretty good, Danielle. Let's keep that going. So, okay. Robert, did you get filled on that? I know we were a couple ticks off from that short, that offer you were working in the YM. Did you get filled?
I actually did get filled. And Adobe was kind enough to update on the top of the screen there with my position. And we got filled at 39735, 5 contracts short on YM. My target, I moved it down to 39703. It's on the further end of my target zone area. So it doesn't have to go all the way there, but I like to keep it a little bit further. So if it just enters my potential target area and then just like drops through it real quickly, you know, you get filled for the better movement. But if once it gets in there, starts hanging around, we'll just take it off and call it good enough.
Call it good enough. I like that. All right, Deeyana, you said you're done for the day. I mean, any considerations maybe switching over to a practice account, a company? I don't know. I know you're a trader.
Yeah,
you're the trader of all traders. Are you truly done for the day?
Yeah, of course. No, I mean, I will. The nature of my business is that I have to keep looking at the price because I do have students who are still trading. You know, I can't just go, yeah, guys, I'm just going to shut it down. Goodbye.
Later.
So obviously they need to, later. So obviously they need to be supported, and you know, I need to see what they're trading. Some people are trading platinum today. Some people are still trading gold. I have some people who are trading DAX. So you know, I'm just still looking at everything. So yeah, there is a practice account that I can use. Right now, again, I might see whether we can get another long in gold because we did have a test of this area here where the bias came from. So You see on my chart,
Yes,
we
please.
had the candle that that exited the initial balance and closed above it. And since then, we've had some chop. But one trade that I like to do is called strength from inside the initial balance, which is effectively the market retesting the area where the bias came from for some further upside. Now, generally, it is not a setup that works that great for this time of day. It works better later in the day, but it is one of the setups that I do quite frequently. So let's see what's going on with some of the other markets as well. Somebody asked me about crude oil. I haven't looked at crude oil much today. I've looked at it just enough to provide some.
Let's take a peek.
Yeah,
Deeyana, what do you
let's
got?
take a peek. Let's take a peek. Let me just drag that over.
Robert in the trade. Eddie's stocking the markets right now. Deeyana, let's take a peek at crude oil. We haven't given much love to crude oil.
Here
We
we
are
go.
about 2 cents off the highs. So what are you seeing here?
Yeah. So for me, I am seeing that on the daily chart, we're coming into an area of supply. So the sellers actually started shifting the market at about 82.20. So once that gets hit, it would be a sign of maybe some reversal. There is an average daily range high at these levels, more accurately at 82.04. But the market has exited the initial balance to the upside, creating a little bit of a strong auction higher. However, because we have that overhead supply, I wouldn't be rushing into a sustained auction here, into a breakout trade, because just as that's happening, it's very possible that the magnetic nature of supply and demand zones is just looking for that 82.20 area before they smack it back down. By the fact that we have the average daily range around these levels as well, that tells me that a short would be more likely here. Obviously, we have news that can put a wrench in the works in that analysis. Yep. And this is why we just have to sit and wait. But for me, this would be a sell zone. So I would be looking for effectively an auction fade from here, and then maybe a hybrid setup into a failed auction at some point. But yeah, this level I wouldn't be going long, because it would be going into overhead supplies. It's never a good idea to go longs into resistance and short into supports. That's always like, ugh.
You sound thrilled. You sound thrilled with oil right now, Deeyana. You sound like you're just loving it.
Yeah. Oil is great because it's now just 121 ticks for the entire session. So this looks like a big move. It isn't, especially not for crude oil. Crude oil is, it's an instrument that for most of the years that I've been trading it has had a range of about 180 up to 300 ticks per day. So to see it drop down to 116, 120 ticks, it's like what is going on here? Yeah, exactly. It's like, what have we? Yeah, are we now stabilizing oil prices for a commodity that's running out in like 30 years? Like, shouldn't we just be screaming the demand for oil up, up, and up? No, they're just like, we're just going to keep it in this range for like 6 months. It's like, what? So yeah, I don't know what people are trying to do with crude oil. There's obviously some players that don't really want it going too far out of this range. And they're players with deep pockets. They're not you and me. They're not, small traders. We're talking countries that have an agenda with crude oil. So because of that, we have to be a little bit careful. Small ranges always give way to volatile movement, because you think that you're basing your stop loss on like either an ATR or something, and then it just explodes. And you're like, well, what happened? They just took my stop. So with news bound releases in a tight market,
right,
it's always a very, very tricky situation, which is why I'm kind of parking crude oil for now. I just want something that moves better, and something that once it breaks the initial balance range goes a little bit more than maybe 60 ticks. We can't be having this, this limited movement of, we've established the initial balance, which is wide, technically, considering that we're only working with 116 ticks of average session range. So this would be a big initial balance. And probabilities dictate that when you have a big initial balance, a fade of that is a high probability trade. And what are they doing? They're pushing it into a slightly stronger upside auction straight into supply. So technically, this is not really matching up with what should be done. Anne-Marie was talking about, well, this shouldn't happen. And this is exactly what I'm seeing in crude oil. This shouldn't happen. And whenever I'm thinking that, I shouldn't be trading that. So this is why I'm like, I'm not touching it today. Unless the hypos that I have actually appear, I don't want anything to do with it.
Okay. So it's a no trade zone, essentially.
It's a no trade zone for me on crude oil. Yeah.
That was good stuff, Deeyana. She's not even trading crude oil today, and she gave you all that breakdown. How about that, guys? All you crude traders, man. It doesn't get any better than that. You're on Top Step TV. Great stuff, Deeyana. Super strong. No trade zone for right now because
honestly, the more you can rationalize why you're going into a trade, the better your career will be. This is why I usually write hypos, but whenever I see something that doesn't make sense, well, it's either the market being irrational or I really suck at doing hypos, which is not the case because, I've had like 11 years of doing hypos, and four hypos a day, and at least 2 of them appear. So when they don't appear, I'm like, what's going on there? And it's usually a news-driven market. So we have to be very, very careful with crude oil because it loves its news, especially when we have a war somewhere that's in like a lot of focus and everyone's like got their eyes on the Middle East. And, rightfully so, there are concerns about the supply of crude oil. But having said that, we should have bigger ranges if that's really the case. We should think about what happened with COVID when China stopped travel. They account for 15% of crude oil demand in the world. Yeah. So we just fell massively. So if we have the same thing, if we have the worry over demand in the Middle East, over supply of crude oil in the Middle East, shouldn't we be having like ranges of 300-400 ticks rather than 112? Yeah, exactly. So someone somewhere is not liking crude oil having, a huge volatility, and they're trying to keep it in line effectively. And that's the thing that I don't like. It smells of a rigged market. I don't like to trade rigged markets.
I mean, I don't think you're wrong. I mean, look at this. Crude is just ripping to the upside here. New highs. Last 10 minutes, just new highs after new highs after new highs. Deeyana, it does. You say rigged? Yeah, I think when cartel. I mean, we'll talk about that later. It's a discussion for another time. I think you're onto something. And it's not always the fairest of markets. So that being said, we got a little housekeeping to do here. Eddie, what do you got for us? We're a couple minutes behind, but it's all good. What's up, Eddie?
Well, for those that do have Topstep X, I know our coach Robert has had a few tutorials coming in tomorrow. Okay, mark your calendars. Tomorrow, Coach Robert's going to be hosting another tutorial for Topstep X. The walkthrough tomorrow, 11 a.m. Central Time. Right, we'll remind you throughout the day today, and of course tomorrow. So if you got any questions about the platform, please make sure that you tune in. Robert,
actually, I have a question. Because we mentioned practice accounts just earlier. Is there a way? Because I don't really see practice accounts in the Combine Topstep X. Like, do you have access to practice accounts in there? Where would I find them? If yes,
yeah, Robert,
on your dashboard. Yeah, go to your dashboard and you'll see there's an option to add.
Oh, right. Okay. Thanks, Eddie. Okay.
Boom. Ask and answered. Everyone helps each other out here. Eddie, go. Sorry, you were saying.
All right. Coach Robert, you're going to be doing that 11 a.m. Central tomorrow, correct?
Tomorrow it is 12, actually, at the group coaching.
12? Okay. I see 11 a.m. Central. But we'll get that. It's going to happen tomorrow, folks, whether it be 11 or 12.
How's it going, Robert?
Hey, you know what? Also,
go ahead, Eddie. Yeah. No. Do the next plug. Then I want to talk. We'll get back to Robert. I want to see how it's been going so far. But please, Eddie. I'm sorry for interrupting. Go on.
Okay. Hey, if you like what we're doing here at Topstep TV, please take a moment to leave us a review on Trustpilot. We appreciate all the kind words and feedback we receive here. So we're going to drop a link in the chat, and we'd appreciate it. Just take a couple minutes here to let us know. Give us some feedback, some love. That's what we need. And speaking of love, let's get these likes up. And if you have not subscribed to Topstep TV, please do. And yes, the correction did come in tomorrow at 12 p.m., 12 high noon Central Time. So there you have it. But back to you, Andre.
Awesome stuff. Thank you, Eddie. So, Robert, the Topstep X, the walkthroughs, how are they going? I know, obviously, we got your segment tomorrow, but let's do a little sneak peek, little preview as we are seeing kind of markets chopping around sideways. Besides oil, oil did pull back a little bit off the highs there. But, Robert, Topstep X walkthrough, what are some of the questions you're getting? What's some of the feedback you're getting? I know I found great value in it. Without you, I wouldn't know how to use the damn platform in the first place. We are going general public release here very soon. I'm not going to give the exact date. I'm sure we'll talk about that at some point this week. But how's it going so far? What's your feedback? What's your sense? What's your vibe from the community as to how it's being received?
Yeah, thanks, Andre. It's been absolutely amazing. I really enjoy doing them. Look forward to tomorrow. Let me clear out this trade while we're talking here, and then we'll go into that. Just so I did close it out, and I just want to share exactly what I was looking at. We knew the areas where I went short. We knew my target area down here. I'm actually going to leave that on the chart so we can see if it actually does hit. What I saw on this one candle right here, this is on the 5-minute chart, but when I said I was in the trade, I was going to be looking at the Renko chart to see the price action. Right at that 5-minute candle, as it was bouncing up and down, it ended up flipping the Renko to the other side. Now it's on a 5 block right here. It's traditional 5. That means when the market moves 5 points down, it's going to print a black block and then 5 points again. To print a white one, it has to go 5 points up and then another 5. So I was waiting to see if that second one was going to plot. Once that did plot, I took one contract off in case it just took off on me. I was winning at the rate of 5. Since I took one off, it was a $50 profit for that. I would be losing at the rate of 4, which means it has a little more wiggle room where if it goes a little further back, I can kind of adjust for it. It came back down again. It did not flip, and it started printing the white block again, which means it wasn't pushing down too hard. I decided to just exit the entire trade. Reason, target was my P&L was 236, and what I wanted to do is make sure I got over my $200 requirement to take a payout, so I can have 5 days. This is a new combine, brand new combine, so I'm not actually getting a payout, but I wanted to show this as part of my thinking. So it didn't go all the way down, stopped, hung around, didn't like the price action that I was seeing there, took one off, didn't like the price action even more, got the hell out of the trade. We will live to trade another day. Obviously, it wasn't pushing me down into my target, and that really support caution area was down a little bit further. I'm just going to manage my trade, manage my risk, and just wait for another day. If I was live, if I was funded right now, I just closed out the day, making me day 1 of 5 for an eligible payout. That's where my mindset is. I just wanted to share that whole trade. You can see my charts and follow my progress on this whole thing. And this is Topstep X, and I really love it. I do. 12 o'clock tomorrow. The last 2 are recorded, and they are on YouTube. We did one as an after hours, and it was a little bit slower because we wanted to see price action in the market. So the next one we did was during the TopstepTV, and that's right in that segment. We are cutting that out, and that will be its own standalone. I look forward to tomorrow. Traders are loving it. Filling out the area for the feedback form and like the ideas. It's been great. We want the feedback. We want the platform like built by traders for traders. We absolutely listen to it. It's always in the works. You can follow the entire roadmap, and I'll go through that whole process when we go tomorrow. Soup to nuts.
What does that mean? What does that mean?
I don't know. Something silly. I just came up. It's like an old term, right? The whole thing. I don't know where that came from. I'm from Massachusetts. So maybe it's somewhere here. Say, I don't know.
It's a New England thing. I've never heard soup to nuts before. Hey, Robert,
soup to nuts. Yeah.
It's one of the 3 skits. It's called Soup to Nuts. It's one of their earliest. If you're a Stooge fan, that probably rings a bell.
I was going to say, okay. Someone knew this. Someone in the chat knows what that is. Hey, Robert, real quick, if one of our users wants to give feedback in Topstep X, where can they go? Is this your chart up? Show them where they can go if they want to have direct
chart.
access
I'll just quickly, really quick on the left-hand side. It has a settings area. So it looks like there's a gear right below that. It says support. We always know the settings area. We're changing that all the time, in there all the time. But under that is support. I'm just going to click that, and right in the center of the screen, there's a feedback right there, roadmap and changelog. You can follow the roadmap. You can see any type of changes. They're all listed there. You can comment. You can click this and create a new post, put in anything you want. With it's an indicator, copy trading, some type of community platform. Submit it, and then others can vote on it. So these are the newest ones at the top. We can see Let's see, practice account not visible, 1 vote. Yeah, I like to see that too. So I'm going to upvote that by 1. And you know what? That is essential. I want to see my practice account. So there we go. I just contributed to that. And as we get further and further, the more traders want, the more they upvote, that moves to the front of the line. You can always look at the roadmap and see what was done, what was currently in progress, the cumulative delta indicator, and then what is in review right now. You can see these upvotes are 250 plus. So that's kind of a quick overview that we'll go in more depth tomorrow.
That's soup to nuts right there, Robert.
I know who's got it.
That's soup. So it turns out here, just to soup to nuts is an American English idiom. Deeyana, does this make any sense? What is this language we speak over here? Soup to nuts is an American English idiom that conveys the meaning of from beginning to end.
English, British English also has so many things that don't. Not Queens. No. Cockney English. There's such a thing called Cockney rhymings.
Yes.
Now that it's like, if you haven't grown up or listened to people around you saying stuff, you would have no idea what the hell they're saying to you. They have this thing where they rhyme something that they kind of replace initially, and then it moves on. Like it's so weird. I remember when I first started living here as an adult, I had a couple of Cockney friends. Like most of my friends are, they're pretty posh or whatever. But then I had a couple that were really quite, East London, and they would be talking to me, and I'm just like, what? I thought I could speak good English. Like, what is going on?
Yep.
They just had like for example, having a butcher's. Okay. It means to have a look. It's like butcher's hook, look, and then they just have it a butcher's.
Okay, so you guys have the silliness too. Yes.
Oh yes.
The silliness.
I mean, it's so silly that it's a way of life for some people here. It's ridiculous. So if you're in London and you happen to find people that speak that, and there's a lot of them here, speaking English would not do you any good, because it's all colloquialisms. It's ridiculous. It took me probably a good 3 years before I picked up all of the little things and stuff. I mean, I know that I say things like storm in a teacup, but that's I think that's pretty self-explanatory. You don't need to know the story behind it. At least I don't think so. Like, it's a storm, but in a teacup, so nothing.
Good stuff. All that. Oh, the good old English language. Whether you're here on this side of the pond, the other side of the pond, we all speak trading. That's the beauty of this. We all speak trading. Although that is one of my gripes with trading. There's 4 different ways to say when you're talking about the exact same thing. Whereas the dom, the dome, the ladder, depth of market, we're all talking about the exact same things, just 4 different ways to say it. It is one of my frustrations in this industry. Okay, guys. With that being said, we are now ready for the new shoulder. Not the new, but maybe improved shoulder tap. I don't know if we can bring Mick in here. Mr. Mick, there you are. What's up, Mick?
What's happening? Man? Good to see everybody.
It's been a minute. Hello. It's been a minute since we've done a shoulder tap like this. So
it has.
Okay, so what do you got for us? Let's see. We're gonna kind of freestyle this the first one, but this is he's dropping in here. And he's gonna be dropping it a couple more times throughout the day. But this is kind of how the risk manager works. So what do you got for us? Who are we highlighting? What are we talking about?
So I got a trading card I want to share with everybody here today. But before we get to that, I've got my regular shout outs. We had some good P&Ls this morning. Escardo, who I was talking about a lot last week. He's up $9,600 this morning. We've got Wang up 5,700. Jesus up 2,000. Cade up 3,000. Farouz, name we're all familiar with, he's up 1,300 today. And big shout out to Dakota for his $4,700 day last week. And then I don't have a card for him, but I've got a huge shout out for Edward, one of our traders in a live account. Last Wednesday, FOMC day, was his first and only trading day. He hasn't traded since Wednesday, but he's the guy that made a little over $20,000, like $20,700 as a matter of fact. He was long 10 NQ ahead of the number, had like 4,900 open trade equity in that. I told JD here, who's in the office with me, I was like, he's got 10 on. It's like, is he holding it into FOMC? I was like, I'm assuming so. And then he rode that pop out, and we were kind of like, sell it, yeah. cover. And he rode it out and made that 20 grand on that 10 lot trade. So big shout out to him. I want to feature a card for Nicholas. Nicholas F. I know we've got a Nicholas T we've been talking about a lot lately, but also Nicholas F. And this is more of a shoulder tap than a shout out. Didn't have a good week last week. Overall, he is profitable in this account. I'm hoping that he can snap this 8-day losing streak that he's been on to the tune of about $12,800. So big percent of what he's got in the account. But let's dive into the stats here. So, while they are profitable on a daily basis, Andre, you're seeing not the most, not a high percentage of winning days or even a high percentage of winning trades. The average winning days are substantially larger than the losing days. On average, for every winning day they've put up, they've got $9,100 to show for it. And then, the average wins and loss here, their risk reward ratio, a little better than 1-to-1. We're going to need to continue seeing that if we're only putting up, winning days a third of the time. But the math is working on their size. What else do I have here? Really happy that they've taken 17 grand in payouts in their short 22 days of trading on this account. So it's a pretty staggering number on the payouts. There's also some really big notable days that kind of make up that average winning day of $9,100, $9,900 winning day, $10,300, $18,060, $6,500, and $9,500. So those are some of the big ones. But what I'd like to see, a couple of glaring areas for improvement that I'm seeing here with Nicholas are scaling into his, larger positions. He's trading, 10 contracts in this account, max position size. And, that 8-day losing streak that I mentioned, it was all over $2,000. So they're hitting that 100K daily loss limit of 2,000 on this account. If they scaled into their positions as they were proven that they were going in their favor, they wouldn't have their back up against the wall so quickly. If you got 10 on, $2,000 comes pretty fast if it goes against you. So I think scaling in, it's something I've been talking about for the last 2 weeks, is for these traders that are swinging big and trading larger position size, scale into those trades. If it goes against you initially after you slap it on, you've only got a couple contracts on as opposed to your full unit size. So that really will help alleviate some of these trading days where they don't spend a lot of time in the markets because they are hitting that daily loss limit so quickly. There's a couple days here that, they were 2-minute, 3-minute trading sessions because that market went immediately against them. And you're kind of shooting yourself in the foot if you're only getting to take one trade in a day.
Right. It looks, Mick, just looking at the trade report here, it looks like the market recently has not been in Nicholas's favor, but he is shutting it down before he gets that DLL. Looking at, profit wise, it just seems like those days are going straight negative.
Yeah. With the size on, it does go against you quickly. I've noticed on some of those losing days in this recent streak of theirs, they're really trading a lot of contracts and making a lot of trades. So another thing not listed here, a third bullet on areas to improve, be a little bit more selective. So just wanted to share that. I know I'll be back on in about, an hour and 50 minutes or something like that. I do have a couple more cards to share there when we're on the coaching segment. So I've got a shout out and I've got another shoulder tap to share with you.
Awesome, Mick. Mick, thanks for being with us here. We'll be looking forward to that coming back again, and we'll see you in a few, my friend.
All right, sounds good. I'm going to keep watching you guys.
All right, cool. Thanks, man. All right, let's get back to you, Andre.
Thank you, Adi. Thank you. Thanks for holding it down there. Shoulder tap. It's real important stuff. All right, Robert. What's up with that background, bro? What's going on? What do you got?
Oh, yeah. By the way, just quickly, I took a practice short in crude oil just to test the hypothesis. Well, it's not back, just testing a hypothesis. So if I'm correct, we're going to probably fall about 30 ticks and then nothing. So we'll
Deeyana,
see.
go through that
We'll
trade
see what
first. That's
people
more
do.
important for sure.
Yeah, go.
Yeah,
Yeah, please
it's
tell
the
us.
same one that I was talking about just earlier. So if we start on the daily chart, we have a supply, right? We have sellers. Somebody asked, "Oh, how do you determine your supply?" It's an area where the sellers previously came from. Usually, when you can match this up with an average daily range high, it tends to be a semi-swing trade intraday. But what's been happening to me in the last 2 months, I would identify great trading locations, and then I would only get 30 ticks, and that would be it. It would either die out or start dragging back towards my entry, and then it would stay there for 3 hours. So obviously something is, not quite right. So we're going to see whether the same happens now, whether we just stop at that 30 tick mark and start to range. So it's not the easiest time to trade, obviously. We do have an hour before lunchtime kind of hits, so we have some time. But typically, like I said, from what I know about these sort of setups, so we have the daily supply, which is, let me just change the time frame, and I can switch on the multi-time frame. Here we go. So these little the dashed areas, that's my multi-time frame indicator that's showing me where the edge of the supply is on the large time frame on the daily. This is a 30-minute chart. So on a 30-minute chart, I do have both the average range and the session and the daily average range. So let me just change the color because I just realized that they're not very easy to see. I'm going to change it to like a yellow.
All right. Bit of a muted session so far today.
Okay. So if you see here, we overshot quite a bit. We overshot by about 35 ticks. And then we had some sellers that came in. And now we are effectively eradicating the upside move that we had above the initial balance earlier. So typically what this means is an auction fade from the average daily range. But I was expecting this to fail the auction much earlier, which didn't happen, obviously. And that's the unusual part here. So there was that supply, but it's just in the context of the initial balance being largish, it should have failed the auction before. So this is where slight weirdness comes in from. And I went short in a practice account to test a hypothesis to see, how the market is going to move. So again, we dropped 22 ticks, okay? But now we pull back again. So it's still doing that same lack of follow through that we've been seeing for a long, long time. So it literally just moves for the first hour of the day, which I don't necessarily trade because I'm not very good at it. And frankly, it's very difficult to trade on most days in crude oil. For the same reason why equities, most losses happen in the first 30 minutes. Well, crude oil is the same. It has a lot of volume. It's very difficult to find any sort of good direction that lasts. So scalpers might do okay, but again, I'm not a scalper, right? So now I'm testing a hypothesis to see how far down we're actually going to go and how long that takes. So we're going to see how long this takes to get me even to 30 ticks. And if it takes longer than an hour, that's outside of my normal parameters. So usually within an hour, I expect my 70 to 80 ticks target to be reached. That's what the stats say, right? So if that doesn't happen, that means crude oil is still very slow or it's doing something odd. So again, we'll see. I'm going to leave this on and we can check back in another half an hour to see where it is.
Excellent. Roberts. The background, what's happening over there, man? It's different than the last
That
time.
was a
Last time I
great
saw you,
breakdown.
we were on with Maserati. We were on the Maserati. You had the Maserati. I'm not seeing the Maserati this time. What's going on?
I just try to come up with something each day. I every segment that I'm on there, I'll just go into ChatGPT, put the Dolly connection on there, and give it one-line explanation. And this was the first time on Fast Markets, and this one actually came up pretty interesting because I just said, "Hey, look, make an image that can, depict a fast market trading environment." And you want to see what's really something? I'll try to get this right. Right around here. I don't know what these things are. There
What
are
is
a
that?
couple.
They're ghosts.
I don't know.
Hoax
They
ghosts.
made some like
Eddie, what is
flying
that thing?
animals or something.
It's like a
I have no
Lovecraftian
idea.
horror.
Yeah. What is that?
Actually, back in the day, they used to have workers that would put the prices up on the boards in chalk. And they had that when they brought gold to the CME because they didn't have room, I guess, to do the electronic, but they were doing it in chalk. It's probably one of those clerks that have fallen off the top shelf and landing in the pit. I don't know, maybe a mosh pit or something. I don't know, but I love your AI. Each and every day, it's a new one.
Yeah, and I try to keep it the same. Like somebody just commented in here. A digital seeker said the backgrounds are always men. I have no control of that. I've literally just type in a one-line thing. Yeah, that's all I do. I type in one-line description, kind of a little bit about what it is. Like I said, hey, we're doing this trading thing. I want to carve a Maserati. I want it kind of futuristic and related to trading. And that is the image that I got back there. And this is a funky one that, whatever reason, they're interjecting their own creatures into it. But I don't know. It's fun.
I like it. Very
Well,
cool.
to be fair, most
Yes.
traders are men. So,
Yeah.
I don't really expect an AI to go, we're just going to put a bunch of women there when, trading is not exactly a female-oriented environment, is it? So I don't
know. And I
problem
don't
with
preface it that
as a
way,
woman.
Yeah, I do not
Robert,
tag it
next
that way. I
time
made the one
preface
for the coaching. Yeah, I made the coaching one and said, hey, I said have a coach in a locker room like a sports game, except make it related to trading. And it gave me like 12 people that looked the same in suits. I was like, okay, we'll go with it.
Oh, great. Somebody's saying, I did a ChatGPT picture of a storm in a teacup, and it turned out amazing.
Let's see that.
Did you?
You gotta share that.
Yeah.
Did you?
Yeah.
You gotta
As
share that.
Roger said. Yeah.
Very cool. Very
That's
cool.
funny.
All right. Okay, well,
Yeah.
it is 16 past the hour, and everyone's favorite top 10 list, I believe, is ready. Is that true, JD, or am I just guessing here?
You are not just guessing. This is truth. You're speaking. All right.
Someone
First,
told me
let's
that.
take a look at some XFA PNLs from Friday.
All right.
Here we go.
All right, Eddie, let's see what we got.
More big numbers coming out of the XFAs last week. John with 8,200. John actually copied trades across two XFAs for a total of $16,251 on Friday. Reginald
John
pocketed
K, huh?
more than 11 grand. Christina with 12 grand. Cheng Jing, whose name we've been hearing quite a
Yes, we
bit
have.
of,
And in the chat.
also copied trades across two XFAs and took home $27,290 on Friday. I'm going to give you another stat for Cheng Jing. Their weekly P&L last week was over $77,000 for
Damn,
the week.
Wow.
That's
My goodness.
a week of trading right there. Why not?
There, Shang Jing's in. Shang Jing's in the chat right now. In the chat. What's up, Shang Jing? What's up? Good stuff.
Way to kick
Good
it,
stuff.
brother.
Yeah.
And our XFA leader from Friday is Ozank, who put up an impressive $14,843 trading the NASDAQ. Great job all around.
Man,
All right,
big
let's
number.
get into that top 10 list. All right, here's the bottom half of the top 10 list. Okay, we had a minor shakeup on the bottom half of the list last week. We lost two traders, Farouz and Sengin, but we also gained two traders. Coach Dakota is back on the list in sixth place after that impressive performance on Friday that Mick just mentioned. And Jesus, who is our live funded P&L leader from Friday, just mentioned him, is also back on the list in eighth place today.
Sweet.
Pin, Isaac, and Jacoby all made money on Friday as well. Good job on the bottom half of the top 10 list.
Nice.
All right, here we go. No drum roll today, huh? There it is. All right, ding, ding, ding. Here we go. Again, the names have not changed.
There you go. Sorry,
JD.
he just got in late. Come on, you got to make it on time here.
Fell asleep there.
JD.
Let's tighten up the screws over there. Come on, guys. All right. Again, names have not changed from Friday. They just moved around a little bit. Raj dropped down from third to fifth. Balkaran picked up about $6,000 across two XFAs and held on to fourth place. Nick T pocketed more than 12K across one live account and 3 XFAs to move up to third from fifth. Chang Jing, who we just mentioned, who took home more than 27 grand on Friday. He was trading mostly silver, if you can believe that.
Wow.
We don't feature a lot of silver traders around here, but held on to second place and is hot on Michael's heels. Michael did not trade on Friday, held on to the top spot for another day. But Ching Jing, we see in the chat, we're all watching to see what you do today. Pretty exciting stuff. Maybe we'll have a new leader tomorrow. Let's see.
Wow.
That's what I got for you, boys and girls.
Thanks. Thank you,
Everyone.
man. Wow.
Thank
Michael
you.
R. Ching Jing coming for you. Ching Jing in the chat. So everyone's giving props to Ching Jing. Very cool. I think we've reached out to them, see if we can get them on, talk about the strategies. Trading silver. Making all that loot, trading silver. Very, very cool. Eddie, any more gold trades over there? We're still sitting.
You know what?
$411
I've been talking to Charles here in chat, and what we're seeing is like a volley back and forth. I'm really not too enthused on just sort of putting something on and hoping something works. I'm waiting to see some commitment here to direction, and I might get something on later in the day. But my time is, I got about another 10 more minutes here to trade. I'm not going to force it. I'm very happy with what I've got today, a little higher than my expectations. And that's one of the things, our top step tip of the week, expectations. So I'm very happy with what I have in my pocket right now. Hands off.
Smart.
Nice.
Smart. Yeah, it says. I guess oil's the only market that's
Very
really
good.
seen some movement. Yeah, Robert. You need an update there in the Dow. Anything popping over there?
Yeah, it looks like we might actually drop into that short target area. We're still bouncing right around 39,724. Just keep every time it gets down there, it's rejecting. But based on like some of this Renko activity on the right hand side, it may just break through that. So the low of that area that I looked at before, 39,720, and it's at 39,722. I'm thinking if it goes below there, we should get a few points move out of it. I'm not going to take a shot at it, just a snapshot. I'm comfortable where it's at right now. If it does come back up to that overnight low, it just keeps rejecting off of that. I may just take a 1 or 2 lot and see if it rejects it again. And if it doesn't, just quick stop out and just get out of the trade. We'll see what the price action looks like.
Okay. S&P is just nothing happening. NASDAQ, nothing happening. Gold. Deeyana, what were you looking to do? I know you're trading practice count or what?
Yes.
Anything? Okay, please.
So just this short in crude oil as an auction fade, and generally the auction fades that happen later in the day tend to have bigger movement because there's more time, so the auction kind of keeps going, and therefore you get a bigger profit margin. But because it's happening so early in the day, it's literally looking at initial balance high as the target, and it's kind of already there. So whenever I do an auction fade early in the day and the initial balance high is around there, that is the target. So it means that if it tags 81, 82, that's technically the end of the trade. But again, that means that from the moment that we got the setup on a 5-minute chart, there's a bearish engulfing.
Oh.
We have so far only had a 28 tick movement away from there. And yet, look at the size of the candles. On a 30-minute chart, we have a candle size of 41 ticks. So this is why I'm saying trading in a non-violently range-bound market.
I love that. I love that.
Extremely difficult because your candles are still sizable, even though there's not that much movement across the entire session. So therefore, getting the good trade locations is not going to be possible. So it leaves you with a couple of options. You either use bigger stops, and then you just try and go for high accuracy and negative risk reward, which I'm terrible at, by the way. Absolutely terrible at. So terrible that I don't even want to attempt that. That is not my strength. It's never been my strength. I like to hold trades, and I like to take the bigger chunk of both sides of the movement on the day. Jumping in and out, all I see in my head when I see people doing that is just commissions, not a lot of profit. And I know how much work it is for not a lot of gain. So I'm very, very wary not to do that. even on my most active days, I will probably do maybe 10, 15 trades, and that's across 3, 4 different products, not just on one. And that's a lot of trading for me. But it would all be like, skim a little bit here and then go somewhere else and then go somewhere. But you have to do that when these products that I'm trading are actually moving. Look at gold. It just got stuck. Again, we're sitting at an 85 tick range now after having really nice days. So this could be a function of rollover. So I'm not surprised to see this today. This is why I wanted to fade it. But having said that, I was expecting to see a lot more upside movement before it failed the auction and then just, slow down. We didn't see that. All we had was a very patchy initial balance and the 30-minute period that tried to go higher and then failed. And now we've just gone sideways. So again, very difficult market to trade. So this is why I'm careful not to overtrade in these types of markets because there's nothing to trade. It's like you can skim 10 ticks if that's your style. That's not my style. So this is why I have to be like super patient and either look for a day when we have a better movement or just try to stay away from the market until that movement comes back. Now, I wanted to, because I'm looking at DAX. I've got somebody trading DAX in my mentoring thing. So just to give you an idea of the difference in the movement. So I have somebody who did a short trade in DAX, and I did one in London, only got about 25 ticks. However, this person went in at 52, and we have already seen, a pretty decent amount of movement away from that, and they haven't even been in this trade for very long. So to me, this is a much nicer, smoother movement that we currently don't exactly have. Like what I see in gold and in crude oil is just kind of pinging for most of the second part of that session, which should be quite lively still, although with slightly reduced volume. All I'm seeing is just pinging between 30, 40 ticks, ping, 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 ping. And, to me, that's exceptionally exhausting to trade. It means you would have to go down to super low time frames and then just nitpick. And that's like my worst nightmare. Yeah. I just want to go and stick pins in my eyes.
Don't do that.
That would be my preferable activity over trading this. So yeah, for me, it just validates the fact that I need to be super, super patient over what I'm doing here. And again, crude oil, just checking in on that trade that we did. Almost back at entry now. So not even like 20 ticks. Like it didn't even reach the initial balance high. And if I'm correct, we're just going to get stuck in this range now for the next 4 or 5 hours. And that'll be it for Monday on crude oil. So yeah, not the best.
So if we are stuck in that range, it's all hands off then. If we weren't doing the stream, you didn't have, people, you were mentoring people. I mean, you'd probably go out playing with the dogs right about now, no? I mean, there's no reason to.
Yeah. Yeah.
But like you said, it is a news-driven market, and there is conflict in the Middle East, which is, crude oil is
absolutely. We do run. We do run
into
these. But usually, when we run into these, it's seasonal. So crude oil typically dries up completely for the summertime, and then what I usually do, you can see when the market starts to slow down.
Mm-hmm.
Let me just clean this up a bit. So what tends to happen during those times is that the average ranges that are usually quite far away, they start to line up with these thicker lines that you can see on my chart, this red one and the green one. So what they are fixed daily range. And I count those by taking the average daily range divided by half and then put half of it above GMT midnight and half of it below GMT midnight. So one way to look at a quieter normal market that is orderly and behaving itself is that the average daily ranges that are normal, that are these dotted lines, they start to line up with the daily fixed range. Therefore, not really going further from the open, from the day's open, right? So that's what you want to see in a market that behaves itself. And then it's great to do range-bound trades. You can just ping it from the top, bottom is beautiful. But you don't generally see the market that is kind of directional but it doesn't have a lot of activity going for it. And it's all just staggered movement before it completely pulls back. So, I am trying to modify things, but really I would just rather wait until this blows over and until we know what's happening in the Middle East and just, get some actual momentum and follow through going, because this has been quite painful. I know some people have tried trading crude oil as well, and they're like, oh my God, how can you trade this? Well, this is not how it is, guys. So just be patient. Crude oil does come back. But obviously, we are in some slightly difficult times now, news-wise. So once that blows over, hopefully we get some peace, and then people might start plowing into the market again. But yeah, 150, 116 ticks for crude oil, that's a really tight range. So it's a shame.
Yeah, do you even mention the conflict? Is there anything new that I'm missing with respect to the Middle East? Are we still talking? We're still talking about the same conflict, correct? I was wondering if I've missed anything.
Yeah.
Okay,
Yeah,
same
it's
conflict.
still
Okay, I
the
was wondering if I
same.
missed any.
They're hoping
missed any
for a
headlines.
ceasefire. Yeah, they're hoping for a ceasefire. Every time we have any sniff of a ceasefire, it turns out that it's a fake out, and they're not really, either they haven't responded positively or they sort of spoken, but they didn't agree on anything. And it's all just literally been up in the air. Nobody knows what's going to happen. Obviously, a lot of conflict, very difficult situation to resolve. And the only surprise that I'm finding here is the lack of movement. If it's so difficult, why not have more movement? So this is where I'm like, interesting. I've traded crude oil through many, many war events.
Mm-hmm.
It's really not this tight usually. So
no,
this
it's
is
not.
what makes me think. Yeah, it's a volatile instrument. So why they've not really expressed their situation? Oh, another thing. We lack risk off days. So I don't know whether you remember, Andre, back in the day, we used to have risk off days where, there's a war and then suddenly equities go into this mad selling mode.
Yep.
And then you would get, gold and crude oil going upside.
Rally.
And it would be like a massive rally of like 400 or 500 ticks. Easy.
Mm-hmm.
Have we seen that recently? Because I've been watching equities. We have not seen that correlation. So what is up with that? So we have another correlation that's sort of broken down. So that implies that there's something deeper. Yeah, it's something going on with the underlying relationships of all of these asset classes. So we haven't seen risk off days when they should have been risk off. We've also not seen equities and gold being negatively correlated. They've actually been positively correlated.
Great. That's a great
point.
So
I'm not a macro trader, but usually if I would have a position on in ES, I would see a similar position going opposite direction in gold.
Inverse.
I haven't seen that in 4 years, man.
Huh.
So it's like,
That's a hell of a point. Yes, you're right. Typically, it's a safe haven asset. Same with bonds and stuff. It's flight to quality, if you will, risk off. But you are right. As equities have rallied, gold has rallied as well. I think I hear Jack in the background there. Jack, you have a take on this? What we're seeing? Because I know you're pretty good with the macro picture. What's your take, Jack?
Oh, I wasn't ready necessarily for this one. I was commenting on the fact that, the trade is tight right now. And you know what else is super tight, Andre?
Oh, wow. Nice segue. Well done.
Go on.
Getting licensed by passing the Series 3.
Okay. Go on.
Nice.
Yes, it is.
Yes.
All right, Deeyana, Eddie, this is your first question. Let's do this.
Let's fire it away for the second exhilarating question. Spot prices. This one was tough, I think, in my mind. Spot prices above futures prices typically reflect premium basis, tight supplies, inadequate storage space, or D, all of the above.
Oh, man. All right, I've got my answer.
All right.
Let me know if
what do you think, Andre?
On the poll. I think it's A.
Well, let's see. Let's give a second on this poll here.
Yeah, I could be wrong.
I also forgot what the answer is.
I'll vote here, and I don't know. I might have
changed.
Yeah. Okay. Maybe based on the wording, I should have taken some context clues on this test question.
Well, what's your answer?
I voted A, but maybe D is the. But I don't know. Inadequate storage space is what spot prices reflect.
Well,
I don't know if Jack gave us an in with the tight space stuff and which should be tight space. I'm trying to read into Jack if he gave us a little hint there, but I chose A.
Yeah, let me throw something in here. I do not know what the answer is. However, I am pretty sure that it is not A, which means it can't be D either, because a premium basis would be the opposite, right?
Oh, that's right. We had this question last week.
D says B. Bank says B.
Tight supplies is what
tight
spot
supplies.
Okay.
I don't know. B's coming in.
I might say C.
Ooh. All right. Let's see what we got here.
B.
Tight supplies.
Who
had B?
Supplies.
Did anyone get B?
I saw very few. Banks got it. Hidden Gem got it.
Yeah.
Wow. Okay, so spot prices above futures.
So why would that be, Jack? Can you break this down for us?
Okay. And once again, I'm not taking the Series 3, but if I put on my economics hat, tight supply is in the short term. So say that there's like whatever commodity you're trading has tight supplies now, that's going to put the price up now. I don't know. Let's make up an example like coffee or something. If like or corn.
So it puts the cash price up, but not futures price, effectively.
Right. Yeah. Effectively, like we can grow more corn, we just don't have it now, so it's going to be more expensive in the spot.
I see. I know
it. Hope that helped you all become better, more knowledgeable people.
That was
it has. You learn something new every day here at Topstep.
Yeah. Okay. Tight supplies. All right. Got it. Yeah. Supply and demand. Undefeated.
Oh yeah, I'll definitely sleep better now that I know that.
I just thought D of why it's not C. If there's inadequate storage space, then it would actually drive the spot price down because you wouldn't be able to store it. You just have to sell it.
So yeah.
Yeah.
Interesting. Okay. All right, Michael. There you go, Michael. Hope you got that one. And Hoag. Where's Hoag?
Thank you, Jack. Right. That's a good explanation.
Kevin says this is what I was thinking. Kevin says the last time there was no storage space, the futures prices went negative.
So when you give this shit away, here, take some.
Yeah, oil. Remember oil went negative a couple of years ago?
Oh my goodness.
Oil went negative, crazy. Man.
They suspended it then. They're like, oh, we don't know what's going on. Let's just stop trading.
Yeah, it's funny how they can just flip the off switch.
Illusion, guys. Yeah.
No wonder you thought it was rigged, Deeyana. But moving on, we are not going to get into that too much deeper. Looking around here, we got a bit of a sideways trade. Barcode, boy, if you look at the 5-minute on the S&Ps, 5-minute S&Ps, NASDAQ, crude oil, even gold for that matter, it is a barcode on a barcode. I don't have YM.
Look at the tilt. You know, a tilt is pretty much on the fence. I mean, nothing extravagant here. It's very close to 50-50, 56-40, 57-43, 40-50. It's not giving us really too much information.
Somebody's asking, how much does level 2 cost on Topstep X?
Robert?
I hate to quote the price exactly. We've been doing like specials and stuff, so I just want to be sure I give the right, accurate information. So I'm going to defer to somebody that can actually look it up because we do want to be
that data is coming from the CME, so that's something that we are right. Nick's got it.
$39.
$39.
Yeah,
and that's what the data comes that. I mean, we're just sort of connecting the purchase. But it is 39 from the Chicago Mercantile Exchange.
And no commissions on Topstep X. We don't have
that crazy
on it.
No commissions.
It's insane.
Right.
It's great.
Where else are you going to get that?
If you have my chart up there, it's already on the screen. So I would like to address something and show what I'm seeing on the left-hand side. There is the volume profile. And I've started it at the beginning of the session, which is last night, 5 p.m. Central Time. It's something I like to do. Some like to start it at the U.S. Open. I typically like to start it on the overnight. I want to see everything that's going on in the market, and I just continuously move it over. So I'm getting the most current pricing. I can see how it's building up where the value areas, now we have above the value area, below. I have the settings of this set to, they're just defaults. It's showing up on every time frame. So I can toggle back and forth. There's no changes to it. What I wanted to identify and show was this area right here. The lower part outside of the value area, you can see it's building up.
Talk prices.
Yep, exactly. Great. Yep. Thank you very much. So the lower part of the value area was 39,742-ish. Below that, we started to see the volume profile extend out further to the right. So there's no price, there's just a further to the right, which means it's getting very, very close to where the point of control is. And I'll draw a vertical line attaching those two. So what does that mean? It means every time the market comes down to this area between 39,740-ish to 39,730, so we have talking a 10-point area, there's a lot of activity, a lot of orders going through at that particular level, right in that range. And what is exactly we saw? Consolidation. Okay, so I'm really happy with the decision I made earlier to get out of that short when it was just bouncing around. I had no idea it was just going to stay and bounce around like that. Nobody does. But I'm just happy with that it came through. And even when it came down a little bit further and broke my exit level around 39,724, it went down to 39,716-ish. It still would not have given me any type of profit because it didn't hit the exact target area. And I don't like the fact that it keeps pushing back up to the overnight low right around 39,760. So the highlight, what I wanted to show was how the volume profile can help you. It's on the left-hand side where we can see much more volume being built at those levels that we discussed there from 730-ish to 740-ish, 745. It just goes out. So it just means that every time we get to that area, there's more contracts go through and it pushes back up. Came down to that area, more contracts, more volume, and back up again. So I'm really glad we got that. Yes.
Just to segue into what I was trying to do with gold. So I was talking about looking for an exit outside of the value area TPO to short it. Exactly the same thing, right? So it was like the same setup. And that's known as a responsive activity trade. So whenever you are sort of located inside value, it doesn't matter whether you're looking at value area on volume or TPO, they are similar concepts, very similar. So if you're expecting a range bound day, whenever the market leaves the value area, the responsive nature of that particular setup is that the market makers will bring it back into value. So what Robert is talking about and what I wanted to do with gold, it's the same setup, right? So it's so interesting to me that we have like different ways of looking at the market, but you still come to the same conclusion. And it's good that Robert basically used an OODA loop to get out of his trade, right? So you were in a short, you didn't see good price action, and you're like, you know what? The trade location is not good. We should have broken. It's not breaking. Let's get out. So it's great, isn't it?
That is great, and you hit the nail right on the head. We can see the same market differently, and we can see different markets the same way. Different markets, different utilities, different indicators or different formats.
Different tools.
Different tools. Yeah. So you were spot on, Deeyana, with that. Where it just came in that area using that OODA loop, and that's we get that from Anne Marie, and thank her for that. I didn't know it before then, and maybe others did, but yeah, that's exactly what worked out.
Strangely, I did. I called them the OODA loops because observe, orient, decide, act. But yeah, however you want to call it, I think OODA loop is more fun to say. I actually put that in my Market Focus program about 4 years ago now, and it's in like level 3. It's how I look at the market and how I determine whether the trade is still valid or not, and I do that even before I enter and whilst I'm in a trade as well. It's a very, very useful thing. You're just matching where you are with levels, what the price is doing there, and making a decision based on that. Obviously, you have to be pretty objective. But it's a great tool. Like it has been quite transformative for what I was doing. So I figured I need to tell others. I actually found out about that from a guy that I was working with in a prop firm. So he was like, "Oh yeah, observe, orient, decide, and act." And I was like, "Oh, that sounds quite scientific was that then? So he explained it to me. He's like, you have a level, you look at the auction process, and you just adjust and you try and mix and match effectively. But obviously, you still need momentum for that. If you don't have momentum, everything becomes a little bit jumbled up, and then you're still in the same areas. And then we're in a range-bound trade. You have to use session lows and session highs, VWAP, second standard deviations, all of that good stuff. So it's it's all down to matching the strategy of the day, and just trying to be more objective. So don't look at it from the lens of your emotional experience. Just try to have a level, see how the price is behaving, make a decision. The end.
Mm-hmm. That's exactly right, Deeyana. I 100% agree with that. When I got out of that trade earlier, if I got out and then 4 seconds later it hit my target, I don't care. It's just because we made that decision.
Yeah.
That the context change, wasn't comfortable with it. Just lock in what I can. I took one out first, and it still was hanging around. So nah, I'm just going to get out of this. And that's that's what it is. This is trading. This is how it works. Unfortunately, I mean, first time in fast markets here, it's slow and draggy, but there'll be more times.
Yeah.
Robert, you wanted an action-packed fast markets, huh? you wanted some fireworks, man.
We put some trees on, and we get a Rankin chart. We talk about YM, and we're green on the day, and that's what? Hey, what else can you ask for? This is
the
great.
market would not cooperate with Robert's not debut, but it's been a minute back from the blast from the past. But yes, the markets did not really want to cooperate that much. Hey man, you were able to extract a couple bucks, build a bit of a cushion. That's the name of the game for a Monday. You're not very rarely you're gonna be able to make your entire week on a Monday unless there's some news-driven stuff coming out. It's Fed speakers, whatever. But it's easy. You can definitely piss away. You can blow out your week on a Monday, and then for the next 4 days of that week, or for this we have 3 days this week with Friday being off. You're simply just trying to dig yourself out of the hole for Tuesday, Wednesday, Thursday. That's the last thing you want to do. You kind of want to set yourself up. You want to build into the week. I know Michael calls it a meat and potatoes week. What he means by that is he's talking about Tuesday, Wednesday, and Thursday. That's the meat and potatoes of the trading week. Monday, you kind of build yourself up into the trade. Friday, hopefully you're not trying to dig yourself out of the hole. But Tuesday, Wednesday, Thursday is where you make your big bucks, you make your profits, right? And then you kind of set yourself up for the latter half of the week. So, Robert's saying here we'd like to see some more action. Of course, Deanna's into a practice account now, of course. But what happened is we didn't blow out, we didn't piss away the entire week. So all the profits we make Tuesday, Wednesday, Thursday are not getting us back into the black. That's kind of the name of the game. Eddie's up probably leader of the day right now. Eddie's up amongst us.
Oh yeah.
$411. Nice job, Eddie.
Sitting on
$9. You got $9 to go, Eddie.
$9.
9 more bucks.
Andre, you mentioned that we got Friday off and we've got Power Hour. That's going to be really a good segment. Ending the week on a Thursday Power Hour. Fed speaking on Friday, where our hands are tied. Coming into the weekend, I think this week's going to be pretty exciting.
It is. I agree because it's compressed. It's more compact. We only have 4 days as opposed to the 5 days. So we've got more market moving, more action into action.
Right.
More news, more digesting of whatever comes into the market. But yes, I think the 4 days will make it a bit more volatile. But yeah, Monday's been slow, and that's cool. But like we said, I bet the rest of the day there will be movement, right? I mean, the longer we stay quiet here in equities, the more it looks like it's probably trying to build some legs to the upside, because when the markets are quiet, we tend to see the bid come in and we'll catch the bid. And it's kind of zombie rally. We'll kind of drift higher. We are above the key level of 18,500. Here we go. Just as I say that, here we go. Start to catch the bid. With 12 minutes left here on fast markets, but we are in quiet markets, so tend to see the buyers come in. There is some liquidity to the upside here in the S&Ps that kind of just showed up. 245 offered at 52.90. Now, we have seen these prices, so we are starting to get some patterns. This isn't uncharted territory. But yes, when it gets quiet here and we start trading sideways for 5, 10, 20, 30 minutes, the buyers will come in when no one's looking and just kind of creep higher. All right, guys, well, we got about less than 10 minutes here on Fast Markets. I hope you guys are enjoying the extended version and the new improved version of Fast Markets. We're going 2.5 hours now. So we want to capture that entire trade from the opening bell to right up to the lunchtime trade. Then everyone take a quick break. Everyone go get some lunch, come back. And yeah. What's that, Deeyana?
Because, sometimes I rush trades because I'm like, oh, God, it's going to end. It's going to end. I need to do a trade. But I actually like to trade a little bit later. And sometimes my setups don't really come until like the last half hour of fast markets, and then I'm like, I'm like, well, I should probably trade before. So I would do like a couple of trades that I really shouldn't be doing.
I know you have.
Just
I know.
to kind of like match it and to kind of try and fit it in. So I'm actually really happy that we have extra half an hour. I can actually relax and just go for my normal setups.
We can breathe a little bit. Cool. We can breathe a little bit. Not so forced. Yes, not so forced. But yes, hope you guys are enjoying the new fast markets. We are incorporating no shoulder tap, no PB&J shoulder tap. We're doing a little bit of shoulder tap, but you already missed one of them. There's more shoulder taps coming out throughout the day. We're kind of gonna replicate how it is in real life when the risk manager does come up and do a shoulder tap to a trader throughout the day. Just to repeat myself here, throughout the day, traders struggling, maybe even doing a good job. Shoulder tap or a pat on the back, if you will. Sometimes you need to, someone else needs to step in and say, hey, you're done for the day. Let's call it a day. Go home. Whatever you got to do. Go work out. Go, release some stress. Go hit golf balls. Whatever it takes. Go hit the punching bag. Whatever it takes. And if you need tomorrow off, take that off too. But we're going to come back with a reset, new mindset. And it's kind of how we're going to do it with the new format with shoulder tap here. We're going to weave Mick in and out throughout the day like a real risk manager would. So we're kind of replicating that process. And we're trying to get as close to proprietary trading firm as we are the leading electronic proprietary trading firm in the world.
So we're going to get Mick shoulder tapping us throughout the day. So he's going to be coming in to say, hey, do you think you've done enough damage for today?
What is enough? People are asking, Eddie, we are seeing that very famous question on repeat in the chat. So why don't we hint at what we got on tap for this week? 75 for 75.
My friends, yes. Magically. All right. Talking about this fire drill. Yes, we will have one this week. And honestly, I am not sure when, but it's happening sometime this week. 75% off one reset to celebrate our 75,000 subscribers on TopstepTV. So everyone that does fill out the form will get a free reset. One free reset per trader. And obviously, it's not happening here today. I'll give you that much. But I'm not sure this week they're going to let us know. It's sort of like the Oscar envelope. You don't know who's going to be the winner until you open it up. And I'm glad that they keep us on that line. So it's going to happen this week, boys and girls. So stay focused and stay tuned to Topstep TV. Back to you, Andre.
There you go. So we answered it. So if that is correct, Dylan Sweet, 75% off is not free. That is spot on. You nailed it there. Yes, not fully free. But let's stay focused on the markets. Come on, let's stay focused on the markets. We already told you what is coming. Trust me, we always make you guys whole. Let's stick to these markets as we are seeing a bit of a sell-off or some pullback, if you will. S&Ps might be retreating back to VWAP as we're about 3 points off of VWAP. Boy, crude has taken a nap. Gold has taken a nap. Taking a look at the tilt, like Eddie was looking 50-50 across the board. Hey, there, Robert. Anything going on in Dow? I'm telling you something somewhere.
No, it is not. It is not. It's. I want to say it's not going on, but we are right back into the area we discussed earlier, from 39,741 ish. 39,730 ish. It's that 10-point area. We are adding more to our volume profile, which means it's extending out further and further horizontally. And if it continues to add that area, I would expect our point of control, once it overtakes the most number of contracts traded, to drop down there and say, just give us a new set that we can add back into our OODA looping and say, all right, well, hey, and when it comes to me, point of control, stop trading. Fortunately, we got out of that one a little bit sooner. It drops down. I just don't like trading around. It's a personal problem. I don't like trading around the point of control. It just really peaked. All those orders going back and forth right there, you end up potentially getting chopped up. Yeah. So down the bottom there, with that lower zone there, 730 to 740, may have been good earlier. It's looking worse as the day goes on. We're just piling up orders that area. And when you get stuck like that, it could go any direction. It's anybody's guess. So I just hands off and sit down, and we'll see what it looks like throughout the rest of the day. But right now, paint drying.
Yeah. Indeed it is. Yes, it is kind of paint drying. But hey, that doesn't mean you guys are just going to tune off from Topstep TV. We got our favorite power player coming up next. All right, everyone. Peter Tuchman live from the floor of the New York Stock Exchange. The guy he was just there for the Reddit IPO. He highlighted it last Friday, how the process goes. Maybe we'll touch on it again. It's a super interesting process. He called it one of the best IPOs he's seen in quite some time, in a long time, actually, especially for a tech company being Reddit. He was very enamored. He's very happy with how the IPO process played out. He called it a beautiful foundation to a stock that's going to see a lot of long-term success based on how the IPO went. So be sure to tune into that. If you missed last Friday, he's highlighted again. I mean, Peter Tuchman, the most photographed man from the New York Stock Exchange, from that Reddit IPO, I believe it was Thursday. A lot of pictures coming out from the floor. Sure enough, around that trading post, there was Peter Tuchman right there in that picture that was broadcast all around the world. Please tune in for Peter Tuchman. That guy is the man. I just saw he logged in, so he is here. Sweet Peter. Let me see. There's his face. I see him. He's going to be here in about 3 minutes. He just gave me a thumbs up in the green room. This guy's got a lot of energy. This guy is your cup of coffee for a Monday morning, a slow Monday morning here on the trade. This guy is the best. With that being said, guys, it was a fast. I made him laugh there. Gotcha, Peter. It's been a fun fast markets with the new combination of us four. Eddie, Robert, Hoag was on here earlier. Deeyana, please leave us with some words of wisdom. How are we going to be trading the rest of the day, if at all? Please, Deeyana, thank you for joining us, and we're going to see more Deeyana throughout the week.
Yeah, so rest of the day, I don't know whether I'm going to be trading the rest of the day because it does seem pretty quiet. So unless I see some movement very soon, I'm probably going to take most of the day off, and I'm going to tell my students to do the same. And then I'm just going to go and deal with the dogs, go for dog walks, maybe have some meetings with the development team, just anything to stay away from the market. Sometimes we need those design distractions to get us away from the screen when things are not really looking very favorable for the strategy that we are trading. So yeah, that's probably going to be my main tip. If you have a quiet day, don't try to rush into any trades. If you see that there's no opportunity, it's absolutely fine. There's always another day coming. This is also a short week. So yes, we might have some movement, but also we might end up in a bit of a nothing burger. So expect both ways, stay objective, and, just make sure that you're not using wrong strategies for the wrong day type that we're seeing.
Excellent. All right, Robert. I wish the market's going to be a little bit more fast, but hey, man, what's up, Robert? Yeah, talk to us, man. What'd you think?
I echo that sentiment with Deeyana. Sitting on your hands is, no position is position. Good. We took one trade there, worked out to our favor, slow a bit, and just stay patient with it. I'll be out of here, but going to bounce in for a couple more minutes during power players toward the end, and then back to production the rest of the day, and we'll see you all tomorrow.
Awesome. Right. Mr. Eddie Horn with the high P&L of the day amongst us four. Eddie, how does it feel to be on top of the podium today, the top spot on the podium?
I'm on top of the world, Ma.
We made it.
The thing is, I gave myself a goal. I gave myself a target. Like I said before, our tips, Topstep tip of the week is about expectations. I exceeded that, and I'm very happy with what I have right now. So there's no reason to go back again and risk anything, even though I'm beyond my target where I wanted to be. So I'm pretty cool here right now, and I'm not really liking the way gold's trading here. It's a tug of war. It's volleying back and forth. It's not giving me any direction. So the thing is, why? Why would I want to get back in the market until I can see something, better opportunity? And that's what I got to say.
Well said. Awesome. That was a lot of fun, guys and girls. Like I said, up next, we got Peter Tuchman live from the floor of the New York Stock Exchange. Tune into this guy, man. It's as good as it gets. That was a fun Fast Markets. I hope you guys enjoyed it. Again, give us some feedback when we post it in there. Tell us what you like, what you don't like, what we could do better, so on and so forth. I sound like a broken record saying that. Also, hit that subscribe button, blah, blah, blah. You know the drill. That was Fast Markets. Thank you guys for joining us. Power Players coming up next with Peter Tuchman. Make sure to tune in for that then. Thank you, guys.
Hello, everybody, and welcome to Power Players. I have the one and only Peter Tuchman with us here, and he is in the New York Stock Exchange. However, it looks like you're currently in a ballroom or something. Can you kind of explain what room you're in? Because you look good and you sound great.
That's great. I just wanted to search for a spot where I didn't get interrupted because I love talking to you guys. So basically, the building of the stock exchange, obviously, in the main room is the main trading room that's been around since 1903. Right, we're here out on the corner of Broad Street and Wall Street. George Washington was inaugurated here on the corner. The federal building is here. Back in the 1650s, they used to trade under the buttonwood tree. It was a fascinating thing. So the way Manhattan is sort of is like an oval, and at the bottom of Manhattan is the Hudson River and the East River come to a point, and all of the commerce that used to come in the early 1700s from all over the world, lumber, tobacco, spices, used to come to the bottom of Manhattan. And even in the 1600s, there were brokers, 26 brokers that used to work the corner. It's kind of like, it's like the corner, right? Just use your imagination. And basically, they would go down to the port with wheelbarrows, and they would unload the boats, and they would bring them up out front of what is now the stock exchange, and they would bring them up under the buttonwood tree, and they would connect the buyers to sellers way back. So that concept of buyers and sellers and auction market goes way back. I mean, look, it goes back centuries and thousands of years, obviously, to Holland and all the crazy times back then. But from our inception here in New York City, on Wall Street, above Wall Street was a wall. Above Wall Street in New York City, called New Amsterdam, was basically all forest, and everything below Wall Street was all commerce, going back into the beginning. And so those 26 brokers established a standard of business that in 1797 they actually signed an agreement called the Buttonwood Agreement, and it's actually right behind me on the 7th floor here at the New York Stock Exchange, which basically stated that 26 brokers were going to be the ones that were going to control the standard of living, the standard of business going forward, that we had our word is our bond, that a handshake in this auction market out on a street corner under a tree was as good as gold. And that was sort of the beginning of the idea of buyers and sellers, auction market, open outcry and whatnot. And that went on till 1792, when they signed 1797, they signed the Buttonwood Agreement. In 1850, they opened up a building called the New York Stock and Exchange on the site of the NYSE now. And then in 1903, they actually opened up this building. So, and it's been obviously the iconic financial institution that it is today. But it's just amazing to think that it goes way back. Alexander Hamilton came to the States to fight the revolution with George. And then George, he wanted to fight, and George wanted him. He was way too smart to fight. George wanted him to start writing the treatises and the stuff about finance and banking. And so eventually he surrendered to George, and he's basically Alexander Hamilton. I know we know him as the guy who's in that play on Broadway, but at the end of the day, Alexander Hamilton's the guy who came up with the concept of the Federal Reserve Bank, the whole banking system, the concept of the New York Stock Exchange. So we owe so much to Alexander Hamilton. Anyway, a little history lesson 101 here on a short week. I think it's exciting to note right now that the market is pulling back a little bit. And I think that leaves us an opportunity. Surely the Magnificent Seven are coming in a little bit. Apple is a problem because of this DOJ thing. But at the end of the day, I think the worst thing they're going to do is probably get a smack on the wrist and a bit of a fine. And we know Apple has a lot of cash on hand. So it's not going to really knock the stock out. $7 for Thursday. I think a couple more dollars on Friday. Not the end of the world. I think you're seeing this morning AMD and another company sort of got smacked down pretty hard because of news out of China that they were not going to be allowed to use AMD chips or something in any kind of government projects in China. So the stocks got smacked down early, but they have recovered as of late. But look, we're hitting up against that 40,000. We got 130 points shy of the 40,000 Dow index last week. We had the great Reddit IPO, which has done beautifully. And actually today we're seeing a nice pop. It popped, so it opened. It was priced at 36. We talked about it Friday, but it's good to go over. It was priced at 34. The irrational enthusiasm oversubscribed, had it opening at 47. Once it opened here in New York, it ran up to 57. and then settled in around $50 where it closed on Thursday. Friday, it kind of traded sort of 46.50, which is healthy for a stock. Look, it was the fact that it didn't break down below where it opened is a good thing. So that was it. And then this morning, it's kind of what I anticipated was because people they were talking about it all weekend long. Anybody who was online thinking about the new IPO and what Reddit was the flavor of the moment. And then so today we just saw it pop up to 52 again. So it's showing really, really well. I think everybody needs to know it is a short week, that this is a little bit of a pullback. Pullbacks are just opportunities, right? No one should be scared off by any of this stuff. And look, at the end of the day, we are at the end of the first quarter, right? The actual end is coming in at the end of the month here. And the market is strong. There's nothing to say. Look, even with the questionable, the Federal Reserve statement that Jay Powell made on Wednesday made it clear that we've seen the highs of interest rates. Markets don't like unknown. So that was a great comment, and that's kind of what made the market take off. The minute he said that, it's very important for people to note when we have a Federal Reserve meeting, you need to wait through the news conference because people are hanging on every word that comes out of his mouth. And very often he'll say one thing and then kind of contradict himself in a way, trying to figure out and navigate his way through those murky waters of the Federal Reserve news conference. It's important to note that day that the initial response was a little bit up a couple hundred, down a couple hundred. But the minute he actually said, and this is one of the things I specialize in, forensically breaking down what Jay Powell says, was that we've seen the highs of interest rates. That means that no matter what happens going forward, we don't anticipate we're going to be raising them all. The next tranche is going to be lowering, and the market loved that. And that's kind of why the market took off. It was good follow through the next day in the market. So I think there's some breadth there. Today, we're seeing a little pullback in SPY, a little pullback in Dow, a little bit of its Boeing, a little bit of its tech. But at the end of the day, I think you're seeing the Russell firming up here. That's a good thing. We look at the small and the mid cap stocks as value right now. When you're talking NVIDIA at $900, it's really hard for people to start leaping into these magnificent seven stocks that are so, I don't know if they're overpriced, but they are priced at a high level for people to look at and go, wow, this stock just went from 108 to 900 in a year. Do I really want to buy it here? Well, people should note, and I've mentioned it before, to look into the nooks and crannies of the small and mid-cap Russell, because there are some AI names in there that are interesting, though I don't address individual names, so I can't really talk about them. But it's important for people to sort of do your homework, right? You want to find companies and stories and people and process that are attractive. And the AI space is clearly something that's got still a lot of life left in it, besides, the super high flying Magnificent Seven.
Yeah. I got a question here actually from Eddie Horn. You've probably seen on
Sure.
TopstepTV here. So the market's going to be closed on Friday, and we do have Powell speaking on a closed market. Is that a typical situation? And is that going to make, the following Monday, April 1st, of all Mondays, even more volatile than normal?
You know what? I mean, what is he speaking at a private conference or something? Is that what he says?
I'm not sure. I just heard that he's speaking on Friday. I'm not sure what
you know what?
Is,
look, we've seen that happen before. I don't think it's anything to be really that concerned about. I think he's laid out the position of the Fed, 3 interest rate cuts in 2024. 75 basis points in total. Obviously, he leaves himself room by saying that his decision making is data driven, meaning that if we had super solid. He did say on Wednesday, that was significant too, was that we did see a sort of hotter numbers in the PPI and CPI that came out, meaning that inflation was not still heading in a downward trajectory. It had kind of leveled off a little. And so those were those hot numbers that came out a couple of weeks ago. And I think that had something to do with him changing his position from 7 cuts to 3. But it was also, he said, I'm not going to overreact to January and February's economic data. So I think they're giving themselves a little leeway there to just say that, look, market it's that the market needs to digest this economic policy for a little bit, right? We've gone from, think about it, where we've come from. I mean, I know people complain that things are expensive and whatnot, but we've come down from $5 on gas. We've come down in food. We've come down on a lot of things that are very inflationary. We've come down from 8.5% to 3%. That's major. That is a major move. That means that what he's done has significantly worked in a big way. And you've got to give the market and the economy a little bit of a moment to marinate on this stuff, right? But, we've not seen any major reversal. It's not like it's going back up. It just kind of steadied in. So I think, look, my gut is that the market forges higher again. Although I don't like to predict what's going on, I think it's we know that, a little bit of a pullback after we have had a spectacular quarter. Earnings have been solid. Stocks have been on the move. We've had huge moves in tech and across the board. So it's healthy. Look, we didn't get up to 40,000. That's fine. But we've had literally 3 solid months of record closes every day, day in, day out. We literally maybe had 1 week where we had that day when that PPI number came out, it was down 1,000. It never closed down that way. So I think people need to keep your eye on the market when you've been eyeing a stock that seems a little bit frothy to you and the stock comes in. Maybe take a look at it. Maybe it should get your attention. Always note that from a long-term investment point, I'm not your advisor, is that your first entry point into an investment should be your smallest, right? So that when you're averaging into a long-term investment, you're not chasing failure, you're chasing success. So that gives you leave a little powder in case the stock does come in. So if you're looking to invest in a long-term investment in a company where you like the story, the people, the process and whatnot, your first inroad into the investment should be no more than 25% of your total, what you project to be your total investment in that company. That gives you room to average in depending on what the stock does. Look, if you buy into it and it goes up, well, it's a beautiful thing. You didn't get enough as much as you wanted, but the stock is going up. But if in fact your first inroad is the smallest and then the stock continues to come in a little bit, it gives you the opportunity. You have a little bit of powder there to average in and make it a reasonable trade.
Yeah. Peter, we're starting to see kind of crude oil uptick a little bit. We're at a little over $82 a barrel right now. At what price do you think the indice markets might start looking at crude for being a little bit too expensive and maybe, putting some pressure on the markets and the consumer?
You know what? I think oil is a hard thing for me to really comment on. It's why I usually don't trade it too, because it's so controlled by the big players, right? The Saudis, they don't call me when they decide to dump 1 billion barrels on the market, and they don't call me when they start restricting production, right? So I try to stay away from trying to figure out the oil market, what is expensive, what is not. We've seen this thing go from negative 25 to 125 and back. This level seems fairly reasonable. It's not getting a lot of attention at the moment. We're seeing a little more action in the gold market. That's trading off right on record highs. We saw a bit of a pullback from those crazy enthusiasm in Bitcoin from whatever 70,000 plus there. So I'm not really clear where oil starts to get interesting or expensive. It's not one of the things that I focus on.
Got it. And that is that's about it. That was fast, Peter.
That's all we got.
I
appreciate it, guys.
Yeah, well, Peter, that's a beautiful room you're in. Please call us next time you're there. Reception was great. Your voice sounds great.
So
Didn't
glad.
break up one bit. And we got some wonderful, wonderful information. So, Peter, long weekend for you next week, huh?
You know what? We get a day off. It's always nice to get a couple of days off here. Hopefully the weather is better. Anybody looking to, look, guys, we are collaborating, Topstep and Wall Street Global Trading Academy, right? Futures funded trading platform. Topstep is the best. We don't collaborate with anybody. So that's our endorsement of these guys. Nick and the team and Michael and everybody are great. If you're looking, once you've entered into the futures funded trading, a platform at TopStep. If you really want to learn technical analysis and risk management, come to us at wsgta.com. There's a link in my bio. There's a link in my bio for TopStep as well if you just want easy access to the team. And we coach and mentor all our students. If you're really looking to get a bigger breadth of what's going on and how to trade this market in this kind of volatility, come and join us. We will coach and mentor you forever.
Peter, thank you so much. And we will see you not on Friday, but next Monday for April Fools. Maybe we'll have something planned. Maybe you will have something planned for us. See what happens. But we're going to go ahead and move on here. Peter, thank you so much. We're going to continue with Power Players. Hey, see you, Peter. Have a good one. And then we're going to come on with Robert and Nick F. just coming up in just a moment. Peter, fantastic. Thank you so much. And let's get Robert and Nick F. in here and take a break for a little bit. Hello, everybody. Welcome back to Power Players. We have another Nick in the middle. This is Nick F. I'm Nick D. And we have Robert. I don't know what a Robert is doing on Nick's show, but Robert's here anyways. Hello, Robert. Inferior.
Hey, how you doing?
Doing very good. And Nick F., you are on the leaderboard for funded traders, and this is my first time getting to talk to you. What's it feel like being up there in the clouds on that leaderboard?
It's pretty crazy considering how fast it all happened. I think I got my live account with you guys the beginning of February, and then just been working hard at it to grow the account and pay myself. You know, this is the first time I've paid myself with trading, so it's a great feeling though. A lot of hard work. It's been March marked a year of me actually learning to trade. So it was every single day for hours learning, and finally getting to pay myself and be in a live account with you guys. The top prop firm out there is a great feeling. So
that's awesome. And what is how do you define hard? Everyone's trading journey is a little bit different. So what was hard for you on yours?
I think it was just everyone's situation is different, but I had my daughter 2 years ago now. She just turned 2. So having a kid working full time, trying to just balance everything and have time to look at charts. So like I would stay up super late at night, going and reviewing New York session, watching Asia, watching London. So just the balance was really hard, losing sleep, trying to balance the whole life with learning trading. Was the tough part for me. Like I said, everyone's situation is a little bit different, but that was the hard part for me, just trying to get that time in to learn. But yeah, it was a short journey, but a long one at the same time. It was just a lot of hours, a lot of studying, and a lot of trial and error because I didn't really have any mentors or anything like that. So, yeah, it just was a lot of trial and error for me to learn.
Yeah, that's awesome and incredibly impressive that you managed to compact all the education into 1 year and then to just already have a payout. I mean, that's incredible. I think it took me like 3 or 4, maybe even 5 years before I had a payout. But it sounds like I wasn't as disciplined as you were, to be honest. So you got me on that one. Roberts, do you remember the first time you ever took a payout from trading and actually like profited?
I did. I wish I knew about prop firms before I started because I didn't start through through prop firms. So I really never took a quote payout from any prop firm because I just never did. It was just a few years before. But yes, I do remember my first payout. And my first payout came from futures. I lost a ton trying to trade crypto and penny stock stuff. And when I took that first payout from futures, it was really only a couple of months in. So I had a trading background behind me, but it's not just learning into futures and how that worked. It's the greatest feeling in the world. It was very, very, very small, very, very small, but it felt amazing. It's just like, no, I'm going to do this. I'm going to build it. And as I built up a little more, I'm like, I'm going to take a little bit out. I'm not going to go back to my base level again. And fortunately, it's been like that for quite some time now. Nobody always wins. You don't get payouts all the time. I get it. But that first one, yeah, it sure does feel good because it just gets you going on the right side of things. And just, it's like, whew, I'm finally doing something right. And after months and months of not, and it definitely feels good.
Yeah. And then Nick, what markets did you trade to get to this point? And then what's kind of like the setup? What's like your bread and butter setup that you look for and like how you approach the markets?
Yeah. So, I trade just price action. But going back to how I learned, so started a year ago. Years ago, I was messing with crypto, and that was to me it was like a total gamble, right? I mean, you're trying to catch these like 1,000% moves and this and that, and so I didn't dabble into that too long, but I messed with crypto for a little bit, and then I was kind of messing with like penny stocks and didn't find any success in that. So I stopped trading altogether for a while, probably for 2 years. And then we moved to a different city in California and I moved jobs and I started working with a guy that did penny stocks. And I just walked over to him one day and I saw his phone up and he had the charts open and I was like, oh, like, what are you trading? And he started telling me his success in penny stocks and it kind of caught my interest and I was like, okay, maybe I'll like get back into it. So I started doing that and I lost some money in that. Couldn't keep up with it. And honestly just didn't want to like research a ton of companies, and try to figure out when their earnings are coming out and when this is going to move and that's going to move. So wasn't completely invested into it. And then I was just watching YouTube one day and someone said Forex and I was like, oh, what's Forex? So I started researching Forex and then I saw MetaTrader on the phone and started looking at the charts and I was like, oh, this is cool. Like I could trade one thing, I don't have to trade a bunch of stocks. I could just trade one thing. And my thing at the time was gold. Like I was trading gold for a while, for months, through Forex, and it was going okay, and I was learning. And I think my problem was as I didn't have a mentor, I didn't have anyone in person to teach me, someone that I could sit with that had the experience. And I was so new to it, looking at charts, knowing how the market moves. And so I was watching YouTube, and I just went down that rabbit hole of YouTube and learning a million strategies, right? Like, oh, do supply and demand, do ICT, do this. Like everyone has their ways of being profitable, and the gurus on YouTube and this and that, right? And I kind of fell down that hole, and it really like threw me for a loop because I kept hopping strategies, right? And that's just not the way to do it, And I think you need to learn kind of in your own way, on your own terms. Like you need to learn what works for you. And I was just doing what worked for everyone else. And it just really postponed my my profitability, I think. I know a year is pretty short to take payouts, but I feel like it could have happened sooner if I went down the right path. And so I did Forex, but another problem with Forex is I was hopping around from like gold to, to other types of indexes, to British, pairs, all this stuff. So that messed me up too, because you need to watch one thing and learn how that one thing moves. You need to be completely in tune, like I trade strictly NASDAQ, or if you trade NASDAQ, trade like S&P, because they move really similar. So like everything is time based with the market too. So I wasn't paying attention to any of that, and I kept hopping pairs, and I didn't know how that pair moved, and I would just get destroyed. So it was really frustrating. And then I was watching an ICT video. I'm not an ICT trader, but I watch his videos to like try to grab little bits and pieces out of them. And I was watching one of his videos, and he mentioned Topstep and futures, and I was like, oh, I never heard of futures, So I started researching that, found you guys, and like just stuck with you guys from the beginning. And I was instantly hooked. I was like, this is a million times better than Forex. Like Forex is so unregulated, there's spread betting and like all this stuff. So yeah, futures is definitely the best thing I think to trade. So I stuck with it, and then I just kept. At that point, I knew some stuff about charts, but I started strictly looking at NASDAQ and some S&P. So I think that's what really benefited me, is I was NASDAQ every single day, like all day I would watch NASDAQ. Like I know exactly like when they're going to inject liquidity, all that. And that's stuff you need to know, I think, to be really profitable, especially in NASDAQ, because it moves so wild,
Yeah, that definitely speaks to kind of specializing in just one market, so you could learn the personality of it. Are you taking any trades this week? Is anything in the market look good to you today? Or are you just kind of chilling on the sidelines with the short week?
So I have this strategy that I kind of, this is how I've made most of my money in the live account, is I'll trade around 6:30 p.m.
Yeah, I mean, I think we have your charts up now.
Yeah,
if you want to do a little show and tell here. I think chat would love to know.
I'll show you. Yeah, I'll show you what I did last night. It didn't work out because I closed too early, but it would have worked out. So it's a little laggy, but I could show you guys. So this candle here, right here, this big bearish candle, I think it's around, what is that, 6, it's after 6:30. So I took a trade right here, is around 18,582. I trade on TradeAvate, but I chart on TradingView. But I took a trade right here, and I took it down to Asia Open. So this purple line is Asia Open, or sorry, 3 p.m. my time, so daily open. I took a trade down to here, and it bounced off, and it started to come down again, but it bounced again, and I didn't like that because I like to take long trades off of like a retest of the daily open, and it'll go long. So I didn't like that it bounced twice, so I closed it. And then I took another long attempt in here, and it didn't work out. So I was getting kind of chopped up, so I stopped trading last night. But
do you normally trade overnight?
Yeah, I do trades overnight. If the setup looks good, and I believe that they're going to go for liquidity at a certain low or a certain high, then I'll put the trade, I'll watch it, and then I'll move my stop to either some profit or break even, just so I can go to bed and leave it and I don't lose money on the trade. And then I'll wake up and usually, I mean, 70% of the time, it's in big profit. Like that's how I've made a lot of my money overnight. And then if I have that wiggle room to play with in New York, I'll trade in New York like first thing in the morning, like 7 a.m. and then I'll stop trading for the rest of the day. But I'll try to add profits to what I made overnight in New York. And those are my biggest days so far. Those are my biggest days is catch a trade overnight and then trade New York, maybe size up a little bit because you have that wiggle room. And I'll just catch a quick trade, but bigger size. And it works out. I mean, that's how I've made most of my money now in the live account.
So is that overnight trading like not a symptom, but like a result of you having a busy day life that you have to be able to place these trades overnight because that's kind of when you're available?
It's part of it. Yeah, it's part of it. So I still work full time and trade. So it's really hard to balance it both, right? So I want to be profitable trading and I want to turn something into trading long term. So yeah, eventually if it goes full time, I'll trade more New York, but right now I have to trade overnight because of work. So I look for those big trades overnight to get some profit. And like last night would have worked out perfect. You see it go all the way down to New York Open, and the New York Open even pulled it down a little bit. So yeah, it would have been a great trade. And I had two of those last week. Last week was a really rough week for me. I think it was my first like losing week in months. So it was really tough, like mentally, and also seeing the account, take a little bit of a hit, but it's all right. I mean, it's a new week. I took a trade this morning on 640 New York. It's 640 my time, Pacific time. I saw it reversing, so I like to watch the 1 minute for a reversal. I saw it reversing at 640, which is around the time they reverse it. If there's a gap at the top, so if it's gap down overnight and there's a gap at the top, I look for a reversal around 6:45. I give it 15 minutes. They like to do it within that 15 minutes. 6:40 to 7, you look for reversals and they'll reverse it and go towards the gap. So I do that every morning. I watch New York and do that, and it works out almost every time. But so 6:40, I saw it reversing. I took a trade. up to like the opening range because I didn't know if they were going to keep running it up today. So I closed, and then I took another trade. It was around 8 o'clock. And then, so I'm up. I think I'm up like $500 today. But I was down last night about $1,500, so I kind of dug myself out of a hole and got a little profit, and probably just done for the day just to secure that winning day. But
yeah. So that is, that's pretty good. Be able to dig yourself out of that hole. Is that something you typically do? You try to like avoid that getting into the New York session?
I try to, if I can. I size weight. I do like one contract, and I try to get myself out on really low size, right? Like, because if you're already down, and I moved my daily loss from 3,000 to 2,500. I had to move it, just because I felt like 3,000 was just too much of a loss. Because, I hit my daily loss. Sometimes when I have losing days, and I kind of want to protect myself and the account from myself. We all kind of go on tilt and want to get that money back at times, and I want to protect the account from that. So I moved it 2,500 because I felt like that was an easier loss, on the account than 3,000. And I know it's only $500, but over time, like I'm looking long term because I look at the size of my winners and then how much do I lose if I hit my daily loss, or how much do I lose on my bad days, and I look at my winning days and I'm like, okay, this is average how much I profit, this is how much I lose. So just did the math for long term just to make sure the account keeps growing because I want to take payouts out of it as well. So I only have $2,500. So if I'm in the hole, $1,500 going into New York from overnight, like I'm not I'm not going to use big size because you'll immediately smack the daily loss. So one contract, I try to catch a trade. I try to catch the trend for the day to make it easier. I'll hold that one contract. But if it looks like it's going to reverse or it's not going to hold, then I'll just close it. But yeah.
Mm-hmm.
But yeah, that's my go-to is like an overnight trade and then try to get some profit to go into New York.
That's a good thing. Nick, thanks for sharing that. That good stuff right there. I'm going to jump in a couple of questions for you there. You said last night you were down a bit, and then you came in today. You're back up about $500. I'm looking at your stats. Your average daily P&L is 586. So you are right on par for the course. Whatever you're trading, you had a bit of a drawdown, brought it back up. As you say, your overnights, and then into New York. And I have to give you credits here for calling in and saying, yeah, I like that daily loss limit, but we got to tighten that up a bit. So that's that's respect right there. Everyone wants to no, I need a little more room so I can wait for it to come around, and you do the opposite. Like no, oh, hold on, I want to manage my risk a little more, tighten that up for me. So yeah, great. I had to give a shout out for there, and it looks like you're trading based on your previous stats. You're trading from yesterday to today is it's right on par with everything. So with that, I would like to ask you, you said that you're working full time also. What advice do you have for other traders that are, they're just getting into this? And when we get into trading, I don't know of many people, if any, that just go from one day, quit my job, next day, full time trader. So what advice do you have for those that are still working full time and have families and households, stuff they have responsibilities and want to start trading? Any tips for them?
Yeah, that's one of the reasons I want to come on today with you guys. Just because when I got into trading, it seemed kind of unrealistic. Like all the gurus and YouTube videos and Instagram, like they kind of make it seem like you could trade one time a day and you're rich and you're a millionaire and this and that. So like I think the whole view of trading is a little unrealistic, or portrayed a little unrealistic from social media. So it is possible if you're like, I have a daughter, I work full time. Like there's a lot of responsibilities in life, but you can still do it. You could still trade. Like the market, especially futures, is awesome. It's moving all the time. I know Asia's not the best, but like last night, I mean, that would have been a huge trade for someone. You just got to know what to look for and when to do it. But just learning the markets, anytime you have, I have a couple of people at work that I'm kind of working with to try to get them into it, and they're in the same situation. They have families and they're working too. So I just tell them at night when you have extra time, look at the charts, study, take note of what the market's doing. The market's really precise, but you can do it. Just manage your time. If you really want to trade, you can make it happen. It's moving all the time. You can trade Asia, London, or New York, or whenever you have the time to do it. So just be patient. The money will come. The money will come. And that's the one thing is I wasn't patient about the money. You want to make money. That's why we're all trading, is to make money. But it'll come. Learn, be patient, learn your session. If you're trading a session because you're forced to from work, if you have to trade London, like there's a guy I'm talking to right now and he has to trade London. So he focuses on London, but that's because of his work, So it's possible to do it. You just got to figure out your time. Don't trade when you can't trade. Don't force a trade when you're distracted or you're at work and you're like got a couple windows open and you're trying to find the trade, because everything's time based. So you need to be ready at that time. So yeah, just figure out what works best for you time wise. That balance, and you'll be surprised. How much profit you can make in the little time you have in the session you have if you're just patient and precise, but it's possible.
Nice. Yeah, that's really good advice. And I mean, I know maybe Robert, maybe you can kind of like relate to this, because we have these Topstep TV schedules, and sometimes we are trading hours we normally don't trade. Like for example, Power Hour, I never traded between 2 and 3, but after doing it for a month or two, it's like, damn, there's more than enough volatility in this 1 hour window to, pass a trading combine or make like a couple $100. Is that kind of like what you're saying? It's just like find your best half hour or 1 hour and just focus intently on that and just be done with it?
Yeah, exactly. So especially NASDAQ, if you trade NASDAQ, like you said, Power Hour, NASDAQ, I mean, yeah, depending on size and everything like that, even one contract, you could make a couple $100 in an hour. And it's like, I mean, depending on how much you're making at your job, that's plenty to, get a second income or get a little side thing going. Is a couple $100 a day. Just start thinking small. Don't think, oh, I need to make, $5,000 a day or whatever. Just think small, like a couple $100. One contract. It's just, and also risk management. Is key. Like risk management is number one. To me, is number one, because if you don't have risk management and you're not controlling the losses, or you're not realizing how much your winners are, like you're a money manager. You get an account and you're a money manager. You have the funds and you need to manage those funds, right? You're taking trades, but you're managing that money, and you need to think like a money manager, and you need to have a risk management, or the account will never grow. So just focus on managing that risk, and trading small and starting small. I know everyone says it, and some people might be listening to it and like, oh no, like I'll trade, I'll stick to my 5 contracts and this and that, which it's just, you gotta be ready to manage. Like the loss on 5 contracts, the size of it is so much larger than trading like one contract. You need to be ready to manage those losses of losing, $800 a trade. Like it's a lot of money. But you'll get there. Everyone gets there. It's just experience. It's just time in the market. You got to spend time in the market. It's not going to happen overnight. It's just like I have hours and hours and hours into the charts. So it just takes time. It takes experience. Use demo accounts. Use the practice account. If you get a combine, use that practice. I still use the practice account. And I have a live account, and I still use it. I'm back testing on YM right now because I like YM. I like how it looks. So I might move to YM and do some trading over there. But I use the practice account to take trades. It's like, it's just time in the market. It's just practice. You just got to keep practicing. So
Nick, you hit on, we got to close up the show. Dobie's going to run us out, but you hit on everything that we talk about all day, every day on Topstep TV. It's just managing your risk, trade when you can, taking it slow and steady, scale down, and find an instrument that works for you. You hit every single point we talk about. This is why you're a funded trader, take and pay out. So we thank you for your time. And Dobie?
Yes, Robert, thanks so much for joining us. Nick F., thank you as well. We might even see you later on a power hour someday if you have the time and are available. It'd be fun to trade with you at around 2 o'clock. But next up is TopQuiz with Jack and Bonnie. Probably going to be a Series 3 question, maybe? Do we even put those in there, or is that just spread out throughout? I don't know, chat. You're all going to be pros eventually anyways. But Nick F., thank you so much. Good luck with your trading and your family. That's I think you had a daughter. I think we heard her in the background. That's awesome.
Yeah. She just turned 2. Yeah.
Okay. Well, she has 16 years and she can start trading. But we will see. We'll see you later. See you on the leaderboards as well. No pressure there. Trade well and have a good one. But TopQuiz is coming up next.
Good pre-noon, everybody, and welcome to Top Quiz for this Monday, March 25th. It's spring, Bonnie. You doing anything
Happy
cool this
spring.
spring? Yeah.
I'm going back to Taiwan in a few weeks, so that
Oh,
will be
cool.
my cool spring thing.
Just for vacation, or you're
Yeah, for
gone?
vacation,
Okay.
to see family. I'll be gone for like 3 weeks.
Sounds awesome. Well,
Yeah.
you'll have to tell us all about it when you get back. Remember to click the link at the top of chat if you want to join, as 700 of you already have. 4 multiple choice questions. If you get 3 or 4 right, you enter a raffle for one of 50 free resets. You can only win once per calendar week. Answer the questions as they appear on your device. I think that's it as far as that goes, Bonnie.
Yeah, you got it.
Okay. We'll wait 1 more minute here for people to get in. I did nothing this weekend. How about you?
I was like, I can't even remember what I did this weekend. Oh, I went to iFly, indoor skydiving. Took my mom there. Have you tried it?
I have not. Is it worth
It
it?
was really fun. Yeah, it's worth it. I want to go back again. So there are different levels of classes you can take, and we did the beginner. But on different levels, you would learn like doing tricks while you're in that tunnel, the air tunnel.
Cool. Well,
You should try it. It's fun.
let's do it. Let's go as a company. Let's make this happen. All right. Well, we're going to get started right now. Best of luck to all of you. May the odds be in your favor with these questions, most of which are written by Eddie and Robert today. First question, I believe, is from Robert, and it is as follows, Bonnie. What measures a stock's volatility compared to the market? Is that called alpha, beta, gamma, or delta? Dun, dun, dun.
I think it would be beta. I don't know what gamma means, but delta is like variances, right? What's alpha?
You are correct. It is beta is the correct answer. Thank you from Robert for that one. As far as options go, so like alpha is technically some like je ne sais quoi that makes you a better picker, and then delta and gamma are options Greeks. Okay, here we go to question 2, which is an Eddie question. But first, Bonneker, Spaz, Macro Bullet, Earnshaw, and Sweet I don't know how to pronounce that one. I'm not sure if I want to either. All right, let's do this. Question 2. Which of these animals can hold its breath the longest? An orca, beaver, sloth, or dolphin? They can hold their breath for 40 minutes.
Sloth?
Bonnie, through 2 questions, you are on fire. Yes, it is indeed. Woo! Surprising question there from Eddie. The sloth can hold its breath for 40 minutes.
Yay.
I had no idea.
I was just thinking that because sloths would build their own, like, their homes with branches. And I feel like they're always under the water. I don't know.
Yeah.
So I guess that.
Where's our animal people? Topstep the goat, Jamaica, Bonnie's greater than Jack. I don't disagree with you there, but you know, not nice to point out. Mena and what? Okay. Next question. What term describes the highest price a buyer is willing to pay? Is that called ask, bid, spread, or margin? Now, for the traders out there, this should be a freebie here.
I think it would be bid, right?
Bonnie, you are now 3 for 3. Yes.
So what I was talking about is a beaver, not a sloth. I'm thinking about a completely different animal.
You'll notice, Bonnie, that when that happened, I just went with it. I thought maybe you were thinking of like maybe you know more about sloths, but happens.
I'm like, at least I got the question right, but I was confused myself.
Well, 3 for 3. That don't lie. Roe has entered the top 5. And we got one question left. All right. For the record, like for the people that chose ask there, I mean, that's the lowest price a seller is willing to pay. Okay, here we go. What does margin trading involve? Is it A, trading using only your own funds, trading with borrowed funds, trading without leverage, or limiting trades to cash transactions?
So I'm trying to think of what margin means, at least in finance. I think it would be either blue or green.
You said blue first, and blue is correct. Bonnie. 4 for 4. I believe that's the third time that you've gone 4 for 4 on the show. We're creating a statue of you to put outside the board of trade, like Jordan. Great stuff. Let me know where I can send your reset. Winners today, third place, Jamaica. Second place, Bonnie is greater than Jack. And first is Topstep the GOAT. And let's see if I can see fourth and fifth. Mena and Banks. So I'll get the rest of the winners figured out with the old random number generator, and then we will show that during Power Hour. Thanks for watching. Stick around. Right after this, we got group coaching with Hoagland JD, I believe, and also Mick's going to make another appearance for some more tapping of the shoulders. You know you want to see it, so stick around. Bonnie, thanks again for playing. You're unparalleled at this. We'll be right back after the break. Have a good one, guys.
Good afternoon, friends and traders. It is 12:02 in the Chicago hour. Welcome to group coaching. You made it. You're staring at Mr. Hoag. I'm JD in the back. We've got a special edition for you today. But first, Hoag, how you doing today? What's going on, my man?
I'm doing well. Happy Monday.
Happy Monday to
Good to be
you
back.
also. Always good to be back, right?
Mm-hmm.
So today we're spreading out the shoulder tap a little bit. We saw Mick. I'm getting yeah, we have an echo. It's because Mick and I are sitting next to each other in the office. But once I go on mute, you won't hear that anymore.
There you go. I think it went away now.
Did it go away? Oh,
I muted myself.
Now we all know that Mick's there now. All right,
makes sense now.
We'll have to work on this a little bit. This is the first time. Anyway, now that we all know Mick is here, I'm just going to bring him right in. There is Mick. He is live. What's up, my man?
Coming off mute. What's up, John? What's up, John?
What's up?
The two Johns. Two Johns and a Mick.
Yep. It's good to see you, Mick. How you doing?
Yeah, you too. You too. It was a little fun yet different doing what we did earlier, being on with the Fast Markets crew. So definitely a little bit more in my comfort zone here with John. Of course, no surprise there. Do we have, speaking of JD, is your mic muted now? I felt like I heard a little bit echo on my end.
I am muted right now. I'll try and talk a little softer too. How's that?
Okay.
You sound good. You guys both sound good.
Sound good. Very strong voice.
Thank you. Thank you. Well, I hope we're all ready for a little shoulder tap dancing with Hoag and the Mick here. We're going to dive into it in just a second. Is everyone ready? You got any shout-outs?
Ready when you are.
Already did the shout-outs this morning, and there hasn't been too much that's happened in the last couple hours. So we'll just skip the shout-outs and I think dive right into the cards, I should say. John, should we pull up Xavier and talk about him?
Well, let's do it. I'm all ready for you.
All right. Oh, rapid fire.
Look at that guy.
Hang on a second.
Yeah. You know, this is a new way of doing things. Sometimes it takes a little practice. Absolutely. Absolutely fine.
Growing pains.
No problemo. All right, there we go. Now we got it. Here's Xavier.
All right, Xavier, one of our live traders in the big 150K account. This is a shoulder tap for Xavier. I've got 3 days that he's spent in his live funded account, and he's hit that daily loss limit every single day. So not a lot of winning days, no winning days, but not a lot of trading days too, John. It's only been those first three. And he's only stringing up 13 winning trades, 13% winning trades. So there's not a lot here. This is probably going to be a very short card unless we want to dive into and look at the small sample size of data on that trade report. But this is more about, hey, it's 3 days in. We kind of took a licking over these 3 days. It's time to, slow down, trim the position sizing. When it's not working, you scale back, and it's always good, as we talk about, to start off slowly and small in the live account. So Xavier started with 40 grand in this account. They have, gotten a 25% haircut, just about, losing, almost $10,000 last week. So just, something here, start small, slow it down. Trade small, start small, and probably a personal loss limit early on, John.
Yeah. Xavier really started trading kind of big on the first day. I get it. It's a new account. It's 40 grand in it. You feel like you've got lots of money to play with, but that can be a hazardous thought process. I wonder. We don't really have the time to go back and look at anything in the past for Xavier. How many times they've been funded. How many trading combines, how they did in the trading combines. I wonder if Xavier is getting a little bit of the funded account jitters here. Slow things down, trade smaller, get on the right side, and start building that account back up, Xavier. We are behind you.
It's actually, John, there's not that much history because he's only been with us since February of this year. So I see that he's been in only one XFA. He was transferred to live. We can pull up that XFA because obviously there's some good stuff in that one. I see a bunch of resets on a practice account, but that's a practice account. So they came in and, I think they had one reset, then they passed the trading combine. If you look at this XFA activity, this is someone who's, just a big swinger. They've got a lot of big winning days. We talked about someone earlier, Nicholas F., who had some large days, and there's some similar days to what Xavier's got. I mean, XFA, they had a $19,000 winning day. Put it this way, their average P&L was $4,000 over their 13 days spent in that express funded account. They were really selective with their trading in there too, anywhere from 1 to 4 trades per day. So what we're seeing with this live account right now just seems like, they just haven't caught their stride and found some winning trades. They're keeping their trading relatively, limited. They average 4 trades per day in the XFA. Now they're at 4.5 trades per day. So not much has changed. They just haven't found the winning days or the good setups. Yeah,
well, I mean, it looks like it's just a matter of time because, in that XFA, they were certainly capable of putting up some really big winning days. A $19,000 winning day, $11,000 winning day. Keep at it, Xavier, but maybe slow things down a little bit till you get back on your feet in this account. Good stuff.
Yeah, I mean, they can take a lot of money out of the markets when it works, but we don't want to be taking 25% haircuts on a pretty big account size.
Got it.
Like we saw here. So, all right, that was my shoulder tap. Just rein it in a little bit, Xavier. Let's go to my shout out, Alba here. Alba putting up more good trading activity. I shared her story not too long ago. She's on a back-to-back $16,000 winning day. Well, not back-to-back, 16 grand. 16 grand total. It's a 2-day win streak over the last 2 days, Thursday and Friday last week. 16 grand. So I wanted to feature her here. That certainly helped the average daily P&L, but she spent 14 days in her live account. And everything's looking pretty good. On the winning days, they're only winning days and trades, John, only right half the time, a little less than half the time. But those average winning days, they're taking a lot more out of the market, a lot more. So winning day risk reward is good. Winning trade risk reward is really good. They're at an easy 2-to-1 on that. And they're doing really well on a short time frame. If you look at the trade reports, the hold times are about 4 minutes on the winners and 3 minutes on the losers. So I'm actually pretty impressed with this because I find it to be so difficult scalping these markets. But again, they're trading on a short time frame, but they're really selective with their trades. So they've got a juicy setup that they're leveraging where they can, calculate, small risk for large reward, and it's working. It's kind of a shining example of someone needing to be right more than half the time to put up big numbers.
Yeah. I mean, winning trade percentage 35%, but that, better than 2-to-1 reward over risk is certainly paying off for Alba. Yeah, this is good stuff. And it's another one. A lot of the losing days are right down to that daily loss limit, that max daily loss limit. So, if you're going to do that, you want to be able to put up those big winning days, and Alba is doing a good job of that, certainly in the last 2. Good stuff.
Yes, in the last 2, and those last 2 days helped them come to a new account balance high. So always want to give a clap for that. New account balance highs in Alba's account. And that's what we got today, John.
Awesome, Mick. Well, thank you again for joining me here during group coaching, and we'll see how this new shoulder tap segment kind of works out, spreading it out over the days. Always a pleasure to spend some time with my good friend Mick. Hope everything is going well for you, and we'll catch you the next time.
All right, look forward to it. Thanks. Take care, everybody.
All right, Mick. All right, so, JD, we are ready for questions. I am going to close this out so we can watch and see what's going on in the markets while we're answering these questions. And what do we got for us?
All right, here we go. First question comes from Nick. Nick's got a question about TPOs. Do single prints signify a strong or weak auction? And how do you trade them? Go in the direction of the single prints, or do you fade them? Thank you. Well, you came to the right place for a market profile question. What do you say, Hoag?
All right. There are single prints that signify a weak or a finished auction, and there are single prints that signify a strong auction process. I'm going to go to this platform because I think it kind of shows or represents the profiles in a much more visible way, especially on screen. We are working on getting TPOs onto TopStep X. I'm looking forward to having that opportunity. So, what's the difference in single TPOs? Well, in today's profile, we saw a line of single TPOs that extended above the initial balance. Okay. This was a weak upside auction that left excess on the high. These single TPOs are a failed upside auction. The market came up here, got too expensive. Buyers wouldn't pay it anymore. Sellers took over, pushed price back into range, back inside the initial balance. So right now, what we would call this would be a failed auction. It is excess. It is an unfair high for longs. There's lots of different names for it, but I think the name du jour is the failed auction. Price extended above the initial balance, could not maintain price up there. Buyers backed off, sellers took over. So this would be, I think, according to your question, a weak upside auction that ended and a new downside auction began. We've seen the market come all the way back down to, well, not quite value low, but in this distribution, I would call this value low. So that would be a weak auction. What about down here? What about these single TPOs and these single TPOs? Well, this was an auction that looked lower. Sellers wouldn't sell it. Buyers took over and quickly drove price higher. Then, on the next 30-minute period, buyers continued to come into this market, leaving single TPOs. This could be viewed as a strong single TPO auction or part of the auction process because the market opened, looked lower, found a degree of balance here, and decided we're going to be looking for business to do at higher levels. So this would be a strong single TPO print area. So it really just depends on the direction and what happens, right? So here's another example. On any double distribution trend day, like we see here, the market opened, left the the opening range at the high of the initial balance. The market auctioned lower. It did not succeed below the initial balance. The market rotated higher, took out the high of the initial balance, and a line of TPOs was left. You could call this a strong upside auction because the market pushed to a new area or a new level where two-sided trade began to occur. All right. So, it's where the single line of TPOs are and, what happens after the single line of TPOs is established. Like we said, today, for now, we have a failed upside auction. Price got too expensive. The market came back inside range and began to balance. It doesn't mean that at some point during the session today, price can't take out this failed upside auction to try and continue higher. It just gives us reference. The last time price came up here, it was viewed as too expensive. It gives you an opportunity to limit risk. One of the things that I was talking to Alejandro in the chat about is right now the S&Ps are on a normal trading day, which is kind of a misnomer. It's not very often that the initial balance low remains the low of the regular trading hour session, and the initial balance high remains the high of the regular trading hour session. This is a normal trading day where the market establishes an early range and rotates inside that range for the entire session. I'm not suggesting that that's going to remain the way for the entire day. But, the market opened, looked lower. We have a failed downside auction. It's still part of the initial balance, so we don't really call it a failed downside auction, but we left single TPOs, an excess low. We don't have an excess high. If there is a probability based off of that, the probability would be for continuation to the upside. Price was already recognized as too cheap down here early in the session. If we do get a range extension, that could bring us into Friday's range, perhaps value, and then perhaps a move to the high of value. That's something we discussed this morning on on Fast Markets with the NASDAQ, because the NASDAQ opened outside of range and value, is spending some degree of time inside the value low here, 18,522, 521 approximately. It's showing signs of potential reacceptance of Friday's value high. Actually, this is Friday's value high. This was the overnight last night. This was Friday's value high. You could say that this market is attempting to accept value from Friday. And again, the probability is if we do reaccept value after opening outside of the range, the probability is that at some point during that session, price might reach out and trade to the high of the previous session value. Remember, this is overnight. We're focusing on Friday's session in this regard. So, single TPOs can be weak failed auctions, or they can be relatively successful auctions when price continues in that direction. It's a very good question, Nick. I hope that kind of helps clear things up for you, and keep asking questions. Always appreciate these questions. And again, I hope that covered things up for you. Okay.
Excellent. Thanks, Hoag. And for anybody else out there curious to learn more about market profiles and TPOs, I'm going to put a link to Hoag's Market Profile Masterclass in the chat right now. Go ahead and bookmark this link. Watch it as many times as you need to. It's going to live on our YouTube channel for time immemorial. All right. Let's move on. Next question comes from Matt. Matt's asking, when your system is profitable, how do you deal with the mental barrier to increasing size while not altering the game plan too much? Interesting question.
This is one of the eternal questions in trading. Some people seem to be able to handle more and more risk relatively easily. Some people have a more difficult time with it. When your system is profitable, that should give you the confidence with which to begin to increase your size. But don't go from one contract to 15 contracts. You're going to have to take some time and get your head wrapped around the fact that every time you add another contract to your system, it's likely to change your decision-making process just even by a little bit. So I've always said that the biggest jump in risk that a trader should take is going from one contract to two contracts. It doesn't seem like that much risk, but it does at that point double the amount of risk that you are taking on your trades that are part of your system that is profitable. But it does increase the risk, right? It doubles the amount of risk that you're going to be putting on. So trade one contract, build your account, learn to trust it, get confident in it. When you feel as though you can't trade another one lot, then add another contract, add that second contract. That is going to double your risk. It will probably change your decision-making process just a little bit, but try not to think about it. If your strategy is your system is profitable, you're confident in it, it has proven over time originally trading one lots, then you can add that second contract. Once you get your head wrapped around that second contract, you can add another contract. Now you're trading three lots, but you're only adding a third again as much risk. It's not doubling the risk. It's adding a third again as much risk, which you would think logically might be easier for you to get your head wrapped around. It may, and it may not be. Once you get used to trading those 3 lots, then you can add a 4th lot, which only adds another quarter again as much risk. Adding a 5th only adds another 5th as much risk. Once you get over that hump, adding risk to your strategy should, we would hope, become easier and easier, but there's nothing about trading that's ever very easy. So, I don't know your system. I don't know, whether you're already trading multiples. There's I hate this. There's a million ways to work a trading system to add to your risk, but just make sure that you're mentally prepared to add that risk. And again, going from 1 to 2 contracts doubles the risk. Every addition you make should be an additional contract, because every additional contract you add is only going to add a little bit more risk. The more contracts you add, we just said you add a 3rd contract, it's a 3rd again as much risk. You add a 4th contract, it's a quarter again as much risk. A 5th contract, it's a 5th again as much risk. It shouldn't affect you as much because it's not doubling the risk. Take your time, get your head wrapped around it, build those muscles, and that mental barrier is something that all traders have. If you can work your way through it in small ways, just do it in small ways. Get your confidence up. Your system continues to show profitability over time. Build the account, add that next contract. Build the account, add that next contract. Build the account, add that next contract. And once you get into multiples, you can always get out of 3 out of 4 of them. Let the 4th one run, and that can also help you build the muscles to stay in winning trades for a lot longer, just by having that risk still on there, and letting that trailer run and seeing how far it can go. You can do a lot of good in your mental growth, your mental capital, and your real capital by doing that sometimes. Okay, so great question, Matt. Thanks, JD.
Thanks, Matt. Yeah. And, they say if you could trade small, you can trade big, but we know that's really not always the case with everyone. And here at TopStep, you're only allowed a finite amount of risk. So before you start scaling up, make sure your trading plan and your trading strategy are airtight. You know it inside and out before you start scaling up.
Just thing we can be relatively confident on is if you can't trade small, you can't trade big.
This is very true. Good luck to you, Matt. Hope that helps. All right, let's move on to Squeeze. Squeeze says, hi, Hoag.
Hi, Squeeze.
So this is a question. This question could use a little more context. I read through this a couple times. Not quite sure which market Squeeze is talking about. But the question is, we go down to the monthly value area high at the open and now up to Friday's point of control inside previous value. What do you think now? Do we accept previous value and chop all day long, or maybe seek out other levels? Thanks, Hoag. Really like you, man. I assume because most of our traders are trading NASDAQ and S&P that it's an equities market Squeeze is looking at, but I don't want to project.
Yeah. I think that's probably about right. Because we did in the NASDAQ get up to Friday's point of control right here. So let me read the question again. Monthly value, we get onto the monthly value area high at the open and now up to Friday's point of control inside previous value. What do you think now? Do we accept previous value and chop all day long, or maybe other levels? So Squeeze, I've got a here. You know what I'm going to do? I want to take off the. This is going to mess me up here. Hang on a second here. Let me do this really quickly. I just want to take the overnight session off. So we'll go to 15 here. Okay. because I think the overnight session kind of makes it less visible when we're looking at regular trading hour session only. So yes, we traded down to what you're saying on your charts is the value area high, the monthly value area high. Makes sense. It makes pretty good sense. I mean, most of the activity has been below. I can see that. So the market, has rejected monthly value and is continuing to try and push higher. It's traded to the point of control from Friday's session. What we were just talking about, Squeeze, and what I think is a pretty good probability of happening today is opening outside. Here's the opening range. Here's the low from from Friday, 18,500. 18,500. We opened, we looked lower, we rejected, we come back in, we show some acceptance back above 18,500. We are certainly showing a high degree of reacceptance of value from Friday. Value low 18,510. 18,510. Where's our most recent pullback low? 18,511. 18,511 down to 18,510. Certainly seems to be accepting value from Friday. Yes, we've traded to the point of control. We are spending time marking reacceptance of Friday's area of value. We had a failed auction at the top here. Look at what we're doing now. We're starting to eat up those single TPOs like Pac-Man. What I'm looking for is the market to trade at some point throughout the day to the high of value from Friday. That would be 18,588. 18,588 TPO value high from Friday. There's an anomaly up there. These little anomalies are these little TPOs that just stick out and don't seem to fit anywhere. So if we do show value, a reacceptance, then the target for this move would be value high from Friday. Again, 18,588. We're starting to eat up those single TPOs. This is the value area special situation play, Squeeze. The value area special situation play states, if the market opens outside of the previous day's range, regular trading hour session range, which it did, price comes back into and accepts previous day's value, which it looks like it has. We've been spending a lot of time back in value from Friday. The probability is at some point during that session, price will reach out and attempt to touch the previous value area high, which again is 18,588. So I think that right now, my ruling reason for longs in the NASDAQ would be because we're showing signs of reacceptance of value and a potential move to the value area high from Friday. Again, that level 18,588. 18,588. We've done a lot of chopping around in here. Chop, chop, chop. You said choppa, choppa. We've done a fair amount of chopping here, but this chopping has been spending time inside value. The probability is at some point we reach the other extreme of value by the end of the day. There's absolutely no guarantees. Even the creator of the value area special situation play says he doesn't watch it that much, but there is value in that nuance. And again, we are starting to eat up those little single TPOs that were a failed auction prior in the day. If we're talking about the S&Ps, which I know we're not, because the S&Ps haven't even closed the gap. We have not touched the point of control from yesterday. We have no sign of acceptance inside of value, but the market is very compressed. We have a normal trading day. If this market starts to grow legs, as Andre says, we might catch a bid. And if we do show signs of acceptance at some point today inside value, the target would be high of value, 53.02 quarter. We got to close the gap first. We do have a weak high on the highs on Friday, indicating, the laggard buyers up here may not quite be done. I was looking at, this area down here as a kind of a important level, the point of control from what is this? Friday, Thursday, Wednesday. point of control from Wednesday is an important level to maintain price above to see some continuation. We haven't had a look at that yet. So, we may still find price coming into range from Friday, into value from Friday, and upon acceptance of value, a move to the upper extreme of value. What marks acceptance of previous value? Very subjective, a very difficult trade to take sometimes, because price can come inside value, leave value, come inside value, leave value, come inside value, leave value. Some people called this the 80% play. I call it more like the 65% play, but 65% is still a pretty good probability. We need, and when I first learned about this, so many years ago, we needed to see two 30-minute bars close back inside the previous day's value area in order to begin to mark reacceptance. Again, very subjective. There are times when the market, if something happens and we start catching bids in the S&Ps, the value area special situation play may play out before the S&Ps even get into value. And if that's the case, and the NASDAQ continues to push, this could be a quick move all the way to value high from Friday's session in the S&Ps. Again, value high 53.02 quarter. 53.02 quarter. I get a little bit confused sometimes when it comes to numbers. I know, right? So, these are special situations. They're nuances that can bring decent probabilities. So, Squeeze, I hope that kind of answers your question. And we'll see by the end of the day if we get a full value area special situation completion in the NASDAQ again by the end of the day. Thanks for the question, Squeeze. I hope that helps, and I hope you learned a lot.
Yep. Again, Hoag's Market Profile Masterclass is pinned in the chat if you want to learn more about market profile and the special situation trade. Also, if you go to our YouTube channel, Hoag and Anne-Marie just a couple weeks ago spent over an hour talking exclusively about the special situation play during that Power Players segment. So make sure you go check out our YouTube channel and scroll through and find that one. Just checking in on the chat, Hoag. Everybody seems impressed with your Pac-Man imitation. And I got to say, if you guys like this Pac-Man, you should hear his dolphin because it's incredible.
Right.
Checking in on some live funded traders. Big shout out to our risk team for sending these in. We've got Asgardo in the live funded account up $9,500 right now. Xavier, who we just heard about on the shoulder tap with Mick, is up $8,800, and Wang up $6,000. Those are live funded traded P&Ls for this afternoon. Thanks for the update.
They're killing it.
Crushing it. Doing it.
Mm-hmm.
Carving it. All right. Next up, let's head over to Bob G. Bob G's question is, I trade short-term charts, ES on a 3-minute and 1 minute. And it seems like it's been a lifetime since I've gotten any trade to catch action and run in either direction. How can I tell the market will continue to behave this way? Because all I'm getting is 2-hour-long break-even trades. Incredibly frustrating and really testing my discipline and patience. Hoag, what do we have to say to a trader that's looking at 3-minute and 1 minute charts and is trying to hit home runs on every trade?
You're gonna get opportunities based in the time frame that you're looking at. If you're looking at a 3-minute and a 1 minute chart, you're probably going to be finding some shorter time frame opportunities. It's going to be, I think, more difficult for you to see the market in a longer time frame when some of those opportunities might actually be present. So, Bob, I don't know you. I don't know how long you've been trading. I don't know the tools and the time frames, other time frames that you might be looking at. But don't just focus on the 3 and the 1 minute chart. Focus on the longer time frames. Do a top down analysis of the market. If you can see The weekly chart has been trending to the upside. The daily chart has been trending to the upside. The 30-minute chart, it has been, largely just kind of, looking like when the market kind of breaks to certain levels, those are buying opportunities. And on a 3 and 1 minute chart, look for opportunities to limit risk in that direction. You want to go in the direction of the longer time frame. Most of the time, the longer time frame is going to win. So, I think, start getting that top down analysis. If you're comfortable looking for opportunities on a 3 and a 1 minute chart, don't be afraid to look at a longer time frame chart. You may see something that looks like a good buy on a 3 or a 1 minute chart. Look at it on a 30-minute chart, find that you've got confluence with some sort of moving average, a value low, one of the other, tools, VWAP, something like that. And when you have that confluence in the longer time frame and you're seeing that market go your way, that's something that you may want to say, okay, the trend is up in multiple time frames. I've found a good entry here. If I'm trading 2 contracts or 3 contracts, maybe take a smaller profit on those, and then let one run and see how often you're going to be able to find those levels that do offer bigger opportunities in longer time frames. If your short time frame charts are giving you signals and opportunities opposite the bigger picture, you're better off just taking your profits and not looking for those long 2-hour, big win trades, because you're contrary to the bigger picture, right? So it's so difficult to try and talk to you and say, without knowing what you're looking at, who you are as a trader. But I think for the last couple of weeks, I think just about everybody that has been on Topstep TV, Rips, I think just about everybody has been saying, these markets are really kind of see money, take money. So, and not every opportunity is going to be, one of those big runners. So, it's if it seems like it's been a lifetime since you've caught any of those big runners, look beyond those 3-minute and 1 minute charts. Sometimes you're going to be able to see confluence in a longer time frame that might give you the confidence to be able to stay in one of those trades and have a successful trade. It's one thing to be able to find good entries. That's only part of the game. It's another thing to be able to recognize, when the opportunity that you're currently in is smaller, or when the opportunity is bigger. And Bob, I can almost feel something that was something I talked about last week. I was working with a woman who was learning the profile, and she was getting really good at finding entries. Her entries were very close to points of invalidation, and she ended up, hitting a home run, on a 1-lot trade. And then she started thinking that all of her trades were going to be home runs just because she was good at finding entries. So she was getting in these good trades and then having, the majority of or all of the profit taken away because she was refusing to get out because she thought every trade was going to be a home run. So, there's nothing wrong with doing an experiment, Bob. The next time you're going to trade, think, okay, I'm going to take this trade at 2-to-1 reward over risk, no matter what happens afterwards. No matter if this was a home run, it doesn't matter. So get yourself used to taking profits at 2-to-1. In this case, this woman had never succeeded in a trading combine. I had her do this experiment, and in 30 trades, she succeeded in a trading combine just because I knew she was really good at finding locations. She just couldn't get out of winning trades. So I made her get out at 2-to-1 and record it, forget about performance. And, in 30 trades, she she had completed or succeeded in a 50K trading combine. Doesn't it seem, Bob, like the ones that you think are going to come back at you, the ones that you take off because you think they're going to come back at you, are the ones that are going to go. Account for all of that. Account for all of that. Yes, that is Gizmo on my shelf. Gizmo, because I have a bad gremlin too, so I need Gizmo to take care of the bad ones.
What are the rules? Keep them out of sunlight. No
Yes.
food after midnight, and never
No food
ever
after
ever
midnight.
get it wet. Right.
Yep.
Well, thanks for the question, Bob. Yeah, maybe it'll be a good idea later this week sometime we set aside a little time later this week and talk about that top-down approach. We mention it all the time, but maybe it would be a good idea to give a little basic tutorial and give some of these traders a base to build on.
Mogwai.
For creating their own. Nailed it.
Bright light.
Mm-hmm. Awesome.
The man can do impressions. All right. Next up, we've got Nadine. Nadine says, how do you stop hesitating to take a trade? It's like Nadine might have a little fear of getting the feet wet.
Yeah.
Definitely a confidence issue, but what are your thoughts, Hoag?
Nadine, if you're hesitating taking trades, what's the worst thing that can happen? The next trade you're thinking about taking, what's the worst thing that can happen? I don't know what your risk parameters, what your appetite for risk is, but when you're getting ready to take a trade, I'm hoping that you're trading close to a level where if price advertises, it's gonna invalidate the trade. So when you're about to take that trade, what's the worst thing that can happen? Well, there's one of three things. It's going to be a loss, you're going to scratch it, or it's going to make money. But you get to choose. You get to choose how much you're going to risk on that trade. But don't choose in a static way. I'm only going to risk 10 ticks on every trade I take. You got to be looking at things in market context, market generated information. Whether you're a technical analyst or a market profile or whatever chart time you're looking at, you can see hey, higher highs, higher lows, higher highs, higher lows. I want to see if I can get a pullback so I can get into that trade. But if the pullback fails and gets back below that previous swing, then I know I'm out of the trade. What's the worst thing that can happen, Nadine? Number one, you don't have to risk a lot if your trade locations are good. Nadine, we're talking about money here, and of course, money is extremely important. We need money in order to live. I get that, but if you are so risk averse that you can't take your foot off first base so you can get a lead to maybe steal second, you're going to have a problem. So take your foot off first base, take the trade. If you're trading in a trading combine, Nadine, if you take a trade and you lose, $500 on that trade, it's much better than funding your own account and actually losing that $500. The trading combine, you have skin in the game because there is a goal. You are trying to get funded. You have a little bit of skin in the game. You paid $49 for your trading combine, and you don't want to blow it. You want to succeed in it. It's important to people. But if you want to steal second, you're going to have to take your foot off of first base. And yes, it's about money, but you're in a safe place here at Topstep. You're not going to be losing thousands of dollars to the marketplace. And if you really want to learn what it feels like, what it means to take a trade and to take risk, you've got to take the trade. And, and at the same time, I can say in the same breath, take the good trades. What are the good trades? The good trades are the ones where you can manage risk in a consistent, reasonable manner. What's the worst thing that can happen? If I'm on one lot in the S&Ps, I could lose 250 bucks. Okay, we know that. We know that going in. Take your foot out first and take the risks. Take the risks. Nadine, I still hesitate taking trades. It's a constant learning and growing opportunity. Yeah, Brian says trade the micros. Of course, that's one way you can reduce the risk and start to build confidence in your ability to find good trades. Right? So, what's the worst thing that can happen? Well, you're not going to get eaten by a saber-toothed tiger. You're not going to get attacked by a bear. You're going to have to deal with risk. Take the trade. And again, at the same time, not all trades are going to be great. Make sure you're taking trades that are in your strategy and in your process, and stick to that and account for it and review those trades and review your strategies and recognize when your strategies work better in specific market states. All of these things are going to help you build the confidence to take the trade. Jim Dalton says, I like sim, you can trade on sim, but at some point you're going to have to put risk on to find out who you really are as a trader. And Nadine, go find out who you are as a trader. You're going to be okay.
Awesome. Thank you, Hoag. Thank you for the question, Nadine. We appreciate it very much. All right, coming up next, we have a follow-up question from last week that we were unfortunately not able to get to. This one comes from our old pal, Mr. Fred Decker. All right. So Fred says, thank you for answering my question about the S&P 500 on Tuesday, March 19th. Your analysis is fascinating and instructive. I have a follow-up question to ask based on your answer to my question. How do you limit risk when trading the value area special situation on a day like Tuesday? So we're circling back to the special situation. Fred was also kind enough to leave us a recap. Fred says, to review, the S&P 500 opened with a gap below a late spike. Responsive buyers closed the gap and returned price to prior value. Once prior value was accepted, the opposite extreme of prior value for Monday became the destination trade for the move higher. You said you took a successful long trade based on the value area special situation on Tuesday. Can you explain how you limited risk for this trade? Your entry would have been near the highs of Tuesday's session at the time you entered. Was there market structure you saw that allowed you to limit risk? Thank you for your help. Sincerely, Fred Decker. Now that is how you ask a question, Fred Decker. Thank you. Very detailed. All the context you need. Do you happen to remember this trade, Hoag?
I do. I remember it because this was 19th last Tuesday. If you remember Monday, we put in a late spike. We opened below the late spike. To me, that's the first sign of acceptance of lower pricing. The opening range traded. I was in a profit here. I think I got out of part of it, and then I took a loss on the rest of it. Where's the next area where I would be looking for a short? The base of the late spike. Base of the late spike offered a limited amount of risk. I ended up taking a loss on it. But once the market came back inside value from the previous day, at this point, I was like, you know what? This is going to be my last trade, and I'm going to see if I can't catch this move through the value area from the previous day. I let the market come back. I don't remember exactly where I got in. I got in, and I had a decent trade. I mean, I took 3 straight losses coming up to this. This would actually be kind of against my rules because 3 straight losses and I have to take a break. I think I kind of did take a break, but when the market started to show signs and momentum signs of acceptance back in the inside value, I got a pullback and I held it to value high. I did not want to risk a lot on this, Fred, because when we're looking at the value area from the previous day, we're looking at 19.25 to 31. So we're looking at 13 points of risk. So I did not want to risk more than 3 or 4 points on this trade. So I had to wait for a decent pullback. I got the pullback. I put in the stop, and I ended up taking, I think, 12 points on that, which was enough to almost make me back to break even that day, which was fine. And then, of course, the following, the end of that day, we ended up putting up a late spike to the upside. We opened in the late spike. What does that mean? Probable acceptance of higher pricing. The market rotates and finishes higher on the session. Great question, Fred. That's the thing about the value area special situation play is it's a tricky play. It can expand your risk. Look at what we're doing now. Opened out of, this is the NASDAQ, by the way, Fred. I'm an S&P trader, but this is just such a good example of a potential cheap value area special situation play entry. Opened out of range and value, comes up, begins to show 30-minute bars closing inside of value. Then we get a pullback to low of value, and now we're continuing. We've taken out the failed auction high here. The market seems to be continuing to try and push higher. This would have been a really cheap value area special situation play. We've already got some single TPOs down here. If we can get in anywhere at low value from the previous day, that limits our risk to the single TPOs. If those start getting eaten up, we're out. Okay. So it's never easy, Fred. Never easy. Did I hear an execution go off here? I got nothing on.
I didn't hear anything on my end, Hoag.
Okay. Yeah, that always just freaks me out. Okay, Fred. So, if the value area special situation play is too cheap, you're better off not taking it. We used to call it the 80% play. I call it the 65% play, and Jim Dalton doesn't even like it anymore. Don't risk a lot.
Hope that helps you out, Fred. Thanks for the question again. I think we got time for one more quick one if you're up for it, Hoag.
Of course.
Got about 2 minutes left. Nick Z is curious about Delta. Nick Z says, Hoag, thanks for everything. How do you read Delta? What do the Delta numbers mean? I trade the NQ. At this moment, Delta is minus 7,000. What should that tell me when it comes to entering a trade or exiting a trade? What would I do if we have negative 2,000 Delta or positive 10,000 Delta?
Okay. So, Nick, I'm thinking that this was on the 20th. The 20th?
That's correct. This is a question from last week that we're just getting to right now.
Okay. Right. Okay. So here's the 20th. I'm sorry. This is the NASDAQ. Let's look at the S&Ps. We don't really see that kind of big delta in the NASDAQ. So 20th. Wait. Oh, okay. All right. Let me get a little bit closer look at this. A negative, A, B positive, C negative, D negative, E negative, F negative, G negative, H negative, I positive, J positive, K positive. So you're right. At one point in the body of this profile, Nick, the delta was negative 7,000. All right. So what's delta? Delta is the number of contracts that trade on the offer by market orders. Every contract by market order adds 1 to delta. Negative delta is any market order sell that hits the bid. That's negative 1 in delta. So at some point on the 20th, we had negative 7,000 in delta. That negative 7,000 in delta tells you that there's 7,000 more contracts that traded on the bid using sell market orders than traded on the offer using buy market orders. So what I look for in that is any kind of a divergence. Okay. Now I see reading group. Do you only use cumulative delta to search for divergence? No, but for this point, we're just going to talk about the divergence here. So the market really rotated most of the day. There was a little bit of a weak high up here. I period actually came down here. But in the body of this, we had negative 7,000 in delta. Negative 7,000 in delta. The retail traders, the market order hitters, the P shooters like me, the weaker hands, short time frame traders, they use market orders to get into the market all the time. The longer time frame traders do not. They will place bids and just scoop up everything they can at that level, decreasing the value of delta with every contract that trades on those bids. And then sometimes the short time frame traders will say, well, we're not getting anywhere here. Let's get out. They get out, they move price higher, and then the longer time frame buyers will bring those bids up. And hey, we like selling them down here. Let's sell them up here. So we keep using market orders to hit into those bids. We're helping the longer time frame accumulate or liquidate whatever side they're trying to do. But when they have a lot to do, they end up with a short time frame P shooter, weaker hands, short time frame trader community that is way too short at the end of the day. And we can see kind of what happens here, because J period comes up here, K period comes up here, and we end up closing right at the high of the day with positive 3,400 delta. Now that wasn't really a big delta divergence, and it wasn't obvious. I think this was last Wednesday. This was FOMC day. So if there were longer time frame buyers in here, when that number came out, all of those short time frame shorts, they had to run for the hills and they had to jump over each other to try and get out of those trades. And it's not really a fair example of a delta divergence, but that's the essence of it. Is when you have aggressive sellers in the market, big negative delta, but price won't break or even moves higher over time, that is when we see our delta divergences. And that's when we can see that short squeeze or a long squeeze at the end of the day, depending on direction. I hope that helps, Nick. I know we're getting a little bit low on time.
Yep, with that, we do have to close it out. We're running really short on time right now, but thank you all for joining us for group coaching and that special shoulder tap segment. We'll be back again tomorrow with more group coaching and more shoulder tap dancing. All right, coming up next, we've got Hoag is back for another hour in the Strategy Lab with Anne-Marie and Mr. Dolby. After that, we're going to close out the day in Power Hour with Andre, Dolby, and Nick T. You remember Nick T. He's been here a couple times now. All right, Hoag, take us home with a little dad wisdom.
Yeah, and this is for anybody that seems to be hesitating to take trades. You're going to learn when you take trades. Dad always said, it's the things you don't do that you'll regret, not the things that you do. Now, he was talking to me about taking, 3 months off and taking a motorcycle trip across country. And I said I wanted to do that. He says, oh, you have to. And I said, wow, why? And he said, because if you don't, you're going to be 59 one day. And you're going to wish that you had taken this opportunity to take this trip. Oh, but don't tell your mother I said that. He was a great man. Take the trades. Take the trades. It's just part of the game. And the sooner we get that in our heads, better off we're going to be. Thank you, JD. Thank you, everybody, for joining me. I can't tell you how much I enjoy these sessions. It means so much to see you guys all. I've had a lot of comments earlier today, saying thanks and seeing people succeeding. That just gets me. That just gets me. I want to see everybody succeed. So we'll see you in a few minutes, I guess. JD? right. Welcome to Strategy Lab with Anne Marie. Always a pleasure to see Anne Marie. Dolby, it's great to have you back in the saddle. Looking forward to seeing you on Power Hour. Today we talk about really kind of three different things. We all agree that the sisters, or the three amigos, or whatever you want to call them, they're in a fight right now. We're going to kind of go through what we're talking about with that. Then we're going to talk about how trades don't usually just jump out at you, although sometimes they do. And then we're going to talk a little bit about Fibonacci's and expansion. I'm looking forward to hearing Anne Marie's thoughts on these Fibonacci's and expansion. But Anne Marie, I'm going to start with you. Why are the sisters fighting? Because they only have one bathroom?
Could be. It could very well be. And so that is actually so funny. But anyways, I have known stories of sisters fighting because
I got crickets on that one. I got crickets.
But my sister,
Only childhood.
my sister and I always shared the bathroom together because we were different sizes at different times, and so we never really did fight. So maybe a few harsh words. But these sisters are, for those folks that trade indices thinking that they should catch up with each other in some form or fashion, what we're noticing is almost a complete disconnect. And they're disconnected because different things are going on. Now, I have the NAS next to the Dow. And so the NAS, let's go over here. You could see I'll put it on a 1 day because I look at the big picture and then the tiny picture as I'm looking over it. And you can see that the NAS is bouncing quite a bit more. It came into this lower edge, what is that, a 10 EMA. They both came into their 10 EMAs, but the NAS bounced right off of it, whereas the Dow is just hanging out. And so my suspicion about, first, the NAS failed because of this thing with China where they go, hey, listen, you guys aren't using our chips for any kind of government something or the other. And apparently 7 to 21% of their revenue streams for the semis that operate over there, that revenue stream comes directly from China. So, of course, markets they overdo it. It's worth doing. They overdo it. And so they pulled it right down into support and immediately began to bounce. The Dow, however, is stalled at that region. For instance, new sport. You can see that I have the line right there in terms of the daily formation. So why they're fighting, they really are two incredibly different indices, right? The NAS index carries no industrials, no materials, no energy, and the Dow does. So it tells us a little bit about global thoughts, but, it is and shall remain a buy the dip formation. In the Qs, you just don't want to hang on to see if you can get new highs. I just don't think they're coming at this juncture. I still think it's buy the dip, but you better get out when it starts bumping up into prior day's highs, or prior day's closes. Well, here, I would not be surprised to see a short coming into the fray there in just a wee bit. So, I think I'm going to set one up right now.
Oh.
Right up at the top of that range, right here. We'll see what happens. So, did you say Andre was thinking that we would get a dip buying event?
Well, he's just chiming in here saying right now, I mean, S&Ps, NASDAQ, S&Ps are on their highs, NASDAQ putting in new session highs, and the Dow sitting at session lows.
Yeah.
Funny. I'm actually long Dow, though.
I think it's a good place.
Yeah.
I think that's a good play.
Yeah, I'm long
I do too.
at 39,697. So that is just.
That's good. We're in the green.
I have it marked as like the March 14th resistance has become support level. So figured it'd be a cheap trade. And since it is a daily level, at the very, very least, I'd assume we get at least a bounce or two. And we've gotten lucky so far. So
what's your target?
I think I took 2 off here at 39,000, like 709. I only got like whatever, $80. Who cares? My next target is going to be 720 for the next 2.
I like that number.
And then I think we can hit on the upside is maybe 756. So we'll see. That's a big one.
So here is Dolby 720 right there. You can see clearly that's old support, new resistance. So it's a great upward draft. Momentum is a little bit negative. So certainly I think that that's not an unrealistic level to look at in terms of saying, hey, listen, am I holding on for too long, holding on for too short? Because, a lot of people have these trades and we go, yeah, I know this is a great bounce area, but the expectations of where we believe market's going to rise to or fall to can be quite outsized relative to what the overall market is telling us. And so I think where you're sitting is really nice. What do we see from a volume profile perspective? Because tilt is pretty quiet as it sits right now.
All right, here is the profile for the NASDAQ. Here's today's range, opening range, basically one tick below the high of the session, just one little look above there. It is almost completely the opposite of what the S&Ps and the NASDAQ are doing. No gap close. There's a late spike to the downside in the NASDAQ. Opening below that indicates possible acceptance of lower pricing, which has been proving correct all day. Colby, I like your long down here, and if it doesn't take out the low, I think there's a lot more possible move to the upside if it doesn't take out that low.
I actually want to buy more if it gets down there.
I don't hate it. Here's the S&Ps opening range near the low of the session. Still no gap close. Really just kind of pushing up against the highs, but still no gap close. So the Dow looks much weaker, right? We can see it in the profiles and on the charts. NASDAQ, the crude oil. The S&Ps are kind of in a range today. So far, it's a normal trading day, but the NASDAQ opened outside of range, outside of value, showing acceptance of value, now continuing to push towards a value area special situation play completion all the way up here at 18,588. So they're all saying something different.
So here's the question, Dolby. If you've got this set up and you're saying, hey, I've taken a little profit, it's got me a little bit green, but if it pulls back, I'm going to add to the position. What is your thought process about the floor of this pullback in terms of managing your risk? Because I'm sure some folks will trade it with you.
Yeah, I think primarily that it is a cheap trade. Dow does not move that fast. I still have 3 resting orders at 94, 95, and 96, 3 lots apiece. And we have that really, really big, support level on the daily. If I start smushing my chart here, we can kind of see this range, like right here. This little band with all these little tops from previous daily highs has turned into support, and I think that's cheap. Like you're taking a daily level and using that for an intraday day trade. That is really powerful stuff. And I think that is where you can get a lot of lopsided opportunities. And I think So in general, if you were newer to trading, the bigger the level, the more power will come from it. Sorry, the longer time frame the level, the more power will come out of it if it decides to reject or accept whatever it is. It's just there's more power. And so what you can do as a day trader, if you can find these levels and have the patience to wait for those levels to get reached, I think you have, really cheap trades lined up with highly opportunistic trades, because if you do get that daily bounce, you have a very, very cheap entry with an incredible amount of upside potential. And at the very, very least, typically you will even get some sort of bounce that will give you a little bit of room to play with, right? Because it's a daily level. So people are going to come in, they'll cover, maybe they'll add more, they'll do whatever, but you will get some action. I find it to be fairly rare that if you get to a daily level and it just gets ripped through, and typically it seems like you'll kind of know if it's going to be that day. This day doesn't really seem to be that type of day. And so I would be very, very surprised if all of a sudden, the indices sold off very rapidly and just started ripping through, daily support levels. Can it happen? Of course it can happen. Is it likely? Not very likely. So I am still comfortable adding in, shorts here. My risk is adding in longs. My risk is very, very tight. Even if I do get filled on the rest of these contracts, we're probably only looking at a couple $100 of risk. And with the upside being, hundreds of dollars, maybe even 1,000.
Right. Yes.
So yeah. I don't know. And all that talking, and I should have taken some off. Damn it. Well,
it's going to come up and give it to you. It looks like it'll give you another a little nibble up there into that 720.
Yeah, we can get an order in here to pull off to at 39,720, which is really not that far away. It's like 4 ticks.
Yeah,
but yeah, it's just cheap trades. It's cheap trades. That's all it is. Yeah,
I like to call them asymmetric opportunities, where you're going to risk a little.
That's the textbook.
Make a lot.
That's the textbook definition for it.
Okay, so let me come right back to you again and ask the question. If you add on the downside as it comes into the support zone, at what point will you go, listen, this is going to be my last ad here. I'm not going to add any more because my risk is going to be at a threshold that I have deemed uncomfortable or whatever. Whatever you're into.
It would have to rip through the low of the day.
What are you thinking, and why that number?
Yeah, so my last 3 orders are the dead ass low, and then a tick above it, and a tick above that. So it would really have to rip all the way through, and to stop me out. And I think I've talked about this before with range trading. If you have that range, you want your stops on either side of that range. So in this case, since I'm long, I want my stops to be outside of the low of the day, because that means the market has to put in like the maximum amount of effort to get down to that price. I did get out of one, and I'll close this other one too. All right, so now we'll get filled eventually. Okay, so now we're only long 2, but we're up 281, and we'll keep the rest of these orders working. But that's the idea. I mean, cheap trades, try to find big time frames that line up with, with like day trading levels. And that's where you get, asymmetric opportunities. That's where you get cheap trades. And that's the name of the game.
Exactly. And that is the reason that I am short the NQ right now. You can see it on the screen there. That's my screen. And so the reason that I considered the short in the Qs is because relative weakness seems to be strengthening there. I have tested a newer low that came all the way down to my 10 EMA on the day, and just like Dobie was saying, I find that some of my absolute best trades come at the close or the opens or the highs or the lows of these daily candlesticks. And you can see right beside it, I'm sitting at a 15-minute chart, and that's where I'm executing. Now, I could execute on a 5 or a 1 or whatever. Pardon my voice, still struggling with this bug. But my thought is the move is big enough on the daily to make me think, if I can come into the close of Thursday, the open of Thursday or the close of Wednesday, I think I'm going to have a pretty nice trade. And so I literally have done that. This is probably my third iteration of that today. And so that is why, and I'm comfortable being short while you are long, because I know these guys and gals in the NQ and the YM are not in agreement.
No.
If they had been in agreement early in the day, because I believe you have really good trade position, I would not have taken this short. That's just a fact. I would not have taken it because, like you, I mean, I love looking at those daily levels. I love looking at old highs coming into support, watching it chatter around, and I can see that the daily doesn't give me much noise, but if I go down to the 15-minute, I can see I've spent, close to an hour and 45 minutes trying to hold that floor. And so for me, I'm okay with saying, all right, let's watch this because he is sitting in a space where the market could bounce. I just believe that the NAS is sitting in a space where it could fade.
Mm-hmm.
And they haven't been agreeing with each other all day.
It's, I found when I started off trading, when I was newer to trading and I was less disciplined and had less chart discipline, I would find myself going from like the 30-minute to the 15 to the 5 to the 1. And, you start like, oh, can I get to a 30-second chart? Is that even possible? Right? Because you're trying to find the best price. But what ends up happening is that you miss all of these bigger levels. You miss the daily level, the 4-hour, the 1 hour. And if you don't have those annotated on your charts, you'll end up placing a lot of trades that in hindsight will look completely random. And then the market will bounce or reverse in an obvious spot. And it was obvious because, it was on a big time frame. And if you did your chart, stuff in the morning, you would have had the level. But, oh God, I had a point. And now it escaped. My point escaped.
You're too young for that.
I know.
It happens.
I know. It's just gone.
Could be a lack of sleep.
No, I
Could
just
be
forgot.
busy thinking about.
It could be cheerleading my
Look
trade
at how
or
nicely
something.
that's popping, though.
Yeah,
right.
That's a great trade, Dolby.
That followed Deeyana, that's a really pretty pop. And
Yes,
it's
it is.
coming into this 15-minute support/resistance. What I think is super interesting is a lot of times we come to that. Do I need to stay in this trade? Should I take my profit? My thought when this happens is always go not to the lower time frame, to the higher time frame. And the higher time frame is going to tell you, all right, where does that support look like it's going to hold? And so for me, I'm looking at this and I'm saying, all right, I've got a lot of negative momentum, but it's in a place where price action normally bounces. But if I have negative trend and negative momentum, if it comes into heavy congestion, it's likely to run into sellers. So that would be where I would go, okay, I'm going to one contract and I'm going to let it fade. And if it comes back to my 720, which was that first target of yours, which is really pretty, I would say, all right, I'm going to get back in. And then I'll leave my, stop at 700 because I don't want to give much back, but I want to be able to take money on the rise up and live with that, see money, take money kind of space that we're currently looking at.
Yeah. Well, I think what's I'm going to try to get back to my point. Maybe I'll just pop back up again. But when I found myself shrinking time frames and getting lower and lower and lower, my trade location was worse and worse and worse and more arbitrary.
Yes.
But on the flip side, what's tricky about, not only annotating larger time frames, it's the execution part, because typically when the market gets to those big time frames, that is when fear is the highest. And I know that happens is because I'll put on a trade like this or something similar, and chat will be like, that's a terrible trade. And it's like, no, it's a cheap trade. And there's a difference. One has a better chance of winning. And it's cheaper to do. But I always find that, like, if I can get to the larger time frames, all of a sudden my trades just start making sense. The initial momentum of the trade starts working better, like, immediately. And, like, you just feel more in line with the market because you're watching what everyone else is watching. Whereas if you're on a 1 minute, 5 minute chart, or just like diddling in the middle, that you're not trading with anybody else. And so it's random. You have a random trade on. And that's why it doesn't feel good. And my theory is, like, listen, if you're in a trade, it doesn't feel good, there's like a 90% chance you're just in the wrong direction. If trading is hard, you're not aligned with the market. That's a good question. What does cheaper mean? Actually, that's a great question.
That is a great question.
Yeah, let's talk about that. What does cheaper mean when it comes to a cheap trade? Oh, that's your saying, so you got to start.
Well, Anne-Marie, you sound a little bit muffled. I'm not sure where your little mic is.
Oh, let's try this again.
I hate to have you hold it.
Different ear, and I don't want to.
Oh, there we go.
I killed Robert last week. Yeah, I killed Robert last week with the scratching, so I won't do it to you, Toby.
Thank you.
All
So,
right,
what were we talking about? Cheap trades?
Cheap trades.
Yeah, what is the definition of a cheap trade?
Cheap trade is any trade that that offers you little risk for big reward. I think Dolby's buys off the low in the Dow were an excellent cheap trade. Dolby, if you remember your entry levels or your average entry down there, where was it?
709, he said.
Yeah, and now it's down to
684.
So we're at 39,697 for this last contract, but all 6 of those were filled within, like, approximately the same area.
Okay.
So 697, 698, that whole area. So just right off the lows.
Yeah, if we can look at my chart here for just a second, you'll see in the profile here, 697. If we can go to my charts, if we can.
Yeah, there you go.
So in the profile, okay, these are single TPOs. These are single tick TPOs. If your average price or your best price was at 39,697, and your expectation was to hold the low, what's your risk on that? 6, 7, 8 ticks?
Yeah.
6, 7, 8 ticks? If you do hold that low, where's your possible profit target? I would say, first off,
point of control. Yep.
Second,
VWAP maybe.
Value high.
Yep.
So we're looking at a big winning trade for small risk. Risk. And some of the best trades I've ever taken were taken, well, it's cheap down here. Let's try it. And bang, you get a great trade out of it. Dolby, this is a great trade. I would call this one of the classics. This is a great trade.
Yeah, I would say this is an A+. I would define it as an A+ trade in my book. You have the consolidation, you have, a daily support level. So you kind of have this, like, beautiful set of things coming together to make this what I would consider, a cheap trade. Because, the risk is everything below, right? Everything below this box. This is all scary. This is scary stuff. But then the profit is, like, everything above. And that's kind of the definition of cheap, right? I don't know.
Yeah,
I gotta get better at this annotation thing. Oh, here we go. Yeah, there we go.
Even Coach Dakota's saying, if it's cheap, anything better than 3-to-1 reward over risk, he considers cheap.
Yeah. And so we got filled on 6 initially, and we're out for 638 in profit. So we're flat on the trade right now. And that was 6 contracts. And I think our total risk on that trade was approximately somewhere between $200 and $300 on the trade. And,
Excellent.
we partialed out at, 710, 720, and then 740. So
you're out now.
Solid. Yeah, we're done. We're done. So we'll sign.
Beautiful.
Are you planning a re-entry?
If I do, it wouldn't be until probably 39,760 for a short,
Okay.
or if we maybe another long if we get all the way back down again. But this is a very tricky price. If I really wanted to hold this longer, I just would have held it and walked away. But it's hard to sit here and just watch one lot work. So I'm just gonna let it run, or just flatten it. Sorry, I'm flat.
Great trade.
Yeah, it was a good one. First trade back, so that was nice. Abby had a question. Do you use max size for A+ setups? No, God, what's the term you use, Hoag? You like position in? It's not cannonballing, but you're like averaging into a range.
Yes.
I think
accumulating an inventory in a range.
Yeah. Andrew, you do that too.
Yeah.
But we talked about this last time. We do it
absolutely.
Slightly differently.
Yeah. Yeah. I absolutely do that. My thought is always, listen, I think this setup is going to work, but I'm going to assume that I'm early or that I could potentially be wrong. And, that doesn't work if you're trying to pump yourself up going out to play a game of some kind. But if you're sitting here in the market knowing that the big thing to do is manage risk, then I always enter in that small space, wait for it to show itself to be something good, and then any kind of bounce that doesn't throw it out of its absolute risk, I'm going to add to the position, right? So if you look at what I have right now, I have another short in because I took profit off of the first one. And as it bounced, I got back in, but it's not a really great entry. But you can see above, I have another limit order waiting, because as long as it doesn't break 566, this rotation down into the heavy congestion areas near 540, which was a breakout area for me, I took that short all around that zone this morning over and over and over and over and over again. And it worked out very, very nicely. So I'm expecting that it comes in and retests that level. So that's really what I'm anticipating. But you can see clearly that I'm going to allow it to bounce higher, but within that $300 to $350 risk threshold event.
Mm-hmm. Yeah. And I think what makes these particular days really hard is that, we're talking about trading big levels. Yeah. But if the market takes a really, really long time to get to one of those levels, it can breed a lot of kind of like anxiety in some traders. So it's like, maybe I only have half an hour left to trade. I want to get a trade in, but we're not at that level yet. And so it can be easy to get caught diddling in the middle, because who wants to waste their day, not trading?
Exactly. And, statistically speaking, if we read all the data about traders tend to outperform staring at their candles less, as bizarre as that is, right? We just tend to micromanage our way through trades and either leave a ton on the table or end up downside. How many times, I can tell you, so many times in my career, I've known exactly what price action was going to do, and I still ended up upside down on the day because I was simply managing from the wrong levels and exposing myself to the wrong levels of risk.
Yep. It
It
looks like
just
YM
happens.
is pushing here. It's like YM is
I-
pushing
Yeah.
up to that, 760 level. Wow, crazy momentum. But this is like what I'm talking about, right? Like when you are playing a daily level, this is the type of bounce that you can see because you have a lot of people in the market all looking at the same thing. And this is kind of like that, come failed move, come fast move situation where if shorts, are looking at this 39,698 level and we spend almost 20 minutes bouncing around there and we can't get below it, people are going to start reversing and they're going to start covering, and then they're going to have to go find more sellers, which typically are further up the market. So people got to cover, find more liquidity up top, and then maybe they'll get what they need to drive price all the way back down again. But this is where you get like that push and pull between buyers and sellers, and when you get to a major level, that is when you typically will define a winner. Someone won that battle at that level. And in this case, bulls ended up coming out ahead and have managed to rally price as shorts cover in at least the short term. Doesn't mean this will last forever. And maybe it does come ripping right back down again because that's happened before. But, in the short term, those are good levels to lean on. And that's what we like doing as traders, is finding those levels that put the odds in our favor.
Thank you, Dolby, for letting me know that I was muted again.
No one knows.
I don't know how I keep doing that. I keep muting and then trying to unmute, and it doesn't unmute for me.
Did you trade?
Crazy.
I saw a trade go across somewhere. Someone's in something.
That's me.
Ooh.
Yeah.
What do we got?
That's the
Short
short
NASDAQ?
that I'm in. Yeah.
Nice, because I'm currently flat. Probably could have held that one for a little bit longer. That's something I have not done very well, is holding that like last one or two for as long as possible. I typically get impatient and just flatten it. And it's like, why even bother?
In your
Let go.
defense, the market's been pretty crummy about price follow through.
It has been.
I mean, I will say that it's been pretty crummy lately.
Yeah, it's not like super exciting stuff right now. We got Fed speaker on Friday. We got Powell on Friday. No trading on Friday. Short and trading.
No trading on Friday, right?
No trade. Yeah. So, do we think a lot of the bigger players are sitting on the sidelines this week?
So JP Morgan has got a very big options trade that normally expires on the last trading day of the month. They usually sell a tremendous amount of options on the put side way out of the money and sell on the call side for a naked strangle. And it makes them, a lot of money, just so long as it doesn't squeeze into those patterns. So it could be that we end up just ping-ponging this whole week. That's my thought, because I don't suspect anybody wants to drive price anywhere substantial, because legitimately, what real news do we have? Yeah, we might have 3 rate cuts this year. Oh, well, we might have 1 rate cut this year. Oh, well, we don't know what's going on. We're all waiting for the proverbial shoe to drop somewhere so people can properly position. And right now, everybody's just hedging. That's why, I take a look at the ETFs against the futures all the time. And what I've noticed is that they aren't behaving the same way. And so it's my suspicion that whatever's going on in the futures market, it's a lot more hedging than the SPY and the Qs, which are normally used for, hey, I want exposure to the S&P 500. Hey, I want exposure to the NAS. I see a very big disconnect in terms of price formations. I'd love to talk to Rips about that, to be honest. If he is seeing that same thing, because I know that he looks at stocks quite a bit. So for me, all of it feels like it's maybe up, maybe down, but in the end, maybe nothing.
Yeah.
I was thinking that this morning and talked about it a little bit on the opening call. Everybody knows we've only got 4 trading days this week. It's the end of the month. We have PCE on Friday when the markets are going to be closed.
Yeah.
What are traders, investors, what are banks, what are funds thinking? Well, we're just going to get ourselves hedged because we've got 3 days where we're not going to be able to do anything. We know we've got PCE on Friday. Even the dome was a little bit thin this morning in the S&Ps. At least I thought. It looks like the blood's come back in a little bit. I mean, we're back to pretty much 3 digits, except for, the first 1 or 2 closest to the last price. But it just seems like we're going to be just hedging and positioning through this week. I mean, we do have GDP, and I think that's what the final for quarter 4 of last year coming out on Thursday. We do have durable goods on Tuesday, consumer confidence on Tuesday. So there are things that are going to be coming out, but I'm kind of the school of thought. Yeah, unless there's more than what's coming out, I think we're probably going to be doing what Anne Marie, what Dolby, what you guys are thinking is we're just going to be kind of rotating price, low to high, high to low, high to low, just kind of chopping. And
just
there's opportunity. You got to find it.
Yeah, the market. Typically what I find is that if we are in a slow week and big players are on the sidelines, I find that you have market makers coming in and they're just running highs, running lows, and then ending at VWAP at the end of the day, just to make sure everyone is as miserable as possible. I feel part of the market's job.
I think that's a good one. I think
I mean,
true.
Open
It's
up
true.
a practice account and start practicing your range trades, because I think range trading is pretty powerful. It's cheap trades with high rates of return as far as risk versus reward, and slow markets can provide opportunity as long as you don't get so impatient that you start forcing trades. If you can set like an alarm or an alert at a level, set it, forget it, get like a phone alert, and maybe go back to your computer and trade it if you really want it. But happy I got flat. That's nice. So actually I have a question for you, actually both y'all. I don't know if this happened in all the accounts. While I was gone, it looks like Dow cracked 40,000. We had maybe a really, really strong set of days between the 19th, 20th, and 21st.
Wow, right.
What are the odds that we just end up retracing all of that? Because that's just so fast. That's up so fast. Because I kind of see a world in which
it's reasonable to me.
If it went up that fast, it can go down that fast.
Exactly.
Oh, yeah.
Exactly. And, it was sort of like what we were talking about in Fast Markets last week when I said, hey, listen, if you look at the last 3 weeks of motion, you'll notice that we sort of treaded water Monday, Tuesday, and then the Fed came on that last week, Wednesday, and we rocketed all the way up. And then Thursday and Friday, we just sort of dribbled all the way back down, right? Some things didn't end up on their lows, but a large portion of the move got given back. And I suspect that's how a lot of algorithms are just making money right now. They're just going, hey, let's squeeze it out up here. Let's pull it back down here. And, whatever. The people that get chopped up are the little guys like you and me that don't understand that that's what's happening, right? And that is really the big thing to look at. That's why a trade like the one you just took that showed old resistance, new support on that Dow so beautifully that it legitimately just said, if there's a trade to be taken, that's the trade to take it. That's sort of like what John said when we first started talking. Most trades don't jump out at you. It sure does. And the only reason it would in the first place is if you were looking at a daily chart.
Yep.
If you were looking at any other kind of chart, I'm not sure you would have seen it. But
that's
the
really
daily chart said that's a buy zone.
Because look, I removed these levels And the buy at 39,700 looks totally insane. Totally insane. Because there's just nothing down there. Like, why would you ever go long at this level if you look left and there's nothing? There's nothing here. This could just go straight down. But then, you know, once you add the levels back, oh, March 14th high, let me go check my chart that I annotated. It's like, oh, cool, look at this. You know, look, we bounce, reject, turned around, and now offered support. So now just like labeling this chart, labeling the level, then I can go down to a 5-minute chart, and now this level makes a whole lot more sense. So that's where, like, you know, doing multi-time frame analysis, but also making sure I think you label the charts as well.
Exactly.
It really, really helps, because I can't tell you how many times I was talking about this like 2 or 3 weeks ago. But it's like, does anyone else in chat put levels on their chart and never trades them? Like, you trade like everywhere else on your chart besides for the levels that you write down? Because I used to do that all the time, and lo and behold, my levels were great, but my trades all sucked because they were in the middle of all of my levels. Gotta trust the levels. Gotta trust them.
You know, and that self-trust is hard if you've had a lot of losing trades and you've let them run against you. It's really, I mean, that works against your psyche so dramatically. You know, it's just something that you just have to say, if I'm going to write those, I must follow them.
Yep.
I must pay attention to them.
Yeah. Because, you know, that's the stuff, like, as traders, we go like, oh, in hindsight, it was so obvious. Well, it's like, yeah, dude, you had the chart. You had the levels there in the first place. You just didn't pull the trigger on it. It's not like you didn't see it. You wrote it down. You just didn't execute the trade in that moment. You know, and that's where, you know, market replay can be a really good teacher. Like, taking pictures of your trades can be really good. Visualizing, you know, taking a trade at 39,698 can be great. Using a practice account is really good. Typically, I'm not that confident of a trader, but if you go on Power Hour enough and you try to become this trader that you want to be, and you end up rehearsing that behavior enough, then all of a sudden you end up being that person that you wanted to be. But yeah, you know, you have a venue to practice that. It's a practice account. And so, yeah, this trade I probably wouldn't have taken 3 or 4 months ago, but now I am taking this trade, you know, with vigor because I practiced all those reps in the practice account.
Absolutely.
So these trades are scary. Like, you know, like, why are these trades so scary? Which one? It's gonna be a long book.
I'm taking this trade with vigor.
With vigor, yeah. But Andrew, why are those trades so scary? Why is taking a trade at a daily level so damn scary? And why do we always end up double clutching, you know, these levels?
Well, when it's a daily level, they will argue about it, you know, a number of times. Sort of like if we look at that very same level that you traded near, you can see they're arguing about it again, right?
Now
they're going to come in and they're going to argue
going back
about
down
it
again. Yeah.
Right? And so we see that level and we go, well, I don't know. But here's the thing. Here's what I've noticed. Of course, these are ancillary and to me, but what I notice is the following. If you're coming down to a daily level and you take the very first time it hits that old resistance, new support, you're almost guaranteed some kind of bounce.
Yep.
There are slurries of traders who really are scalp traders that literally will do things for 2 and 3 ticks, and that's exactly where they set up, right there on those edges. And so what we notice is that if we come into those zones and go, okay, I'm going to take that, there's always the sense of, well, somebody might get in front of me there, or somebody might whatever. And so I think the fear is there because of maybe the lack of participation, But if you do it all the time, like I do, you'll notice the following. First time they come in, boom, you'll be able to take it maybe 4 ticks, maybe 6 ticks. It's not a big run. Now, that's not always the case. Sometimes it's absolutely mad crazy, and there's so much demand down there, it ends up being a V. But that's not normally the case. Normally the case is, hey, listen, I'm going to pop up there, go into resistance, and maybe the second or third time, if it holds the floor, I'm going to hit the next major level. That's why I said, hey, if you're looking at a chart and you're do I want to take this trade? Again, the question might be, okay, I know I was at the 15-minute. Let me go to the 30-minute and see what it's saying. And that gives us the longer time frame trader that's saying, oh yeah, I got you. This is what's likely to happen, XYZ. And so from that perspective, when we're staring that down, I really think it's maybe not a lot of participation there, but you had a golden commentary just a couple of moments ago. It was, do you draw levels on your chart that you never trade at? Or do you have so many levels on your chart that you don't know which ones to trade at?
Ooh,
and that is incredibly important. Look, I've got on the daily chart, I've got 1, 2, 3, 4, 5, 6 levels on the Dow, but they literally are 1,000 points apart altogether. And so the same is for the NQ. I just don't have a lot of lines posted there, but the lines that are posted there, I am going to get involved in, simply because I do want to act where I see those levels.
You know what? Oh,
I think that's a magnificent place.
Who was it? I think it was Isaac. Isaac Suffren came on and said something really interesting, that when he gets into a trade, he does not adjust any of his levels at all, because he doesn't want to place a level on his chart that didn't exist there previously, because you can start making up levels to justify your actions.
You certainly can.
And I know I've told that before, where it's like I start off with maybe like 3 horizontal lines on my chart, and like 10 minutes into the trade, there's like 20. And it's like, not all of those were there. Some of those might not be real important lines if they weren't there the first time. But that's where, like, you have to like calm your brain down to like, have patience, wait for these levels to hit, or else you're just going to get chopped up in the middle. And like, trading combines don't have a lot of room for error. Like, you really don't, especially if you're trading with size. So like, don't waste your ammo, trading random levels. At the very least, have some confidence on a couple levels and roll with those and see how you feel. Because at least you're aligning something. You're aligning something. It's not random.
Dolby, one of the things you just sent into the chat, I couldn't agree with more. The best trades are the scary ones.
100% every time.
Yeah,
every time.
Best trades are the scary ones,
because that means it's a cheap trade. If it's scary, that means there is a discount on the trade because no one else wants to take it. So that's our job as day traders to grow a pair and step in and be like, yeah, I'll swap sides with you at the scary level. And I'll take it. I'll take that risk.
So Nadine, think about that. If you're hesitating, that scariness is probably telling you it might be a good level. Be a good level.
Dude, anytime I'm like confident about one of my trades, it's the worst trade I will put on for the day. The worst trade. It's like instant KO. It's like, oh, momentum is so good, such a good level, and it's just like, nope, face rip. It's like, all right. Let me go.
Well, we're running out of time here. There were a couple of things that we were going to kind of talk about that we may have to save for
we missed
for the next time, but that's all right. We've got Anne Marie tomorrow for Top Quiz, and then we see Anne Marie again on Thursday for Fast Markets. always a pleasure to hang out. I guess we won't be doing Strategy Lab on Friday because, well, there won't be any strategy to lab. Markets are going to be closed. And then
I'll be flying home on Monday, that following Monday. So, yeah, we'll see each other a week from Friday again for Strategy Lab.
Yes. Yeah. All right. And, you know, text me when you get home. Let's go have coffee or a cocktail or something. And Dolby, thank you very much.
On that.
I'm gonna be down in Florida, I think, at some point this year, and we're gonna meet and crack some crab.
That sounds amazing.
All right.
In the meantime, we should all do that iFly together because I've really been wanting to do it, and the fact that Bonnie did it, I'm like, yeah, it should be great fun. We should do that.
I'm a little gravitationally challenged, so I don't know if that's for me, but all right, folks. Power Hour is coming up in just a couple of minutes. Love you guys. We'll see you in a few.
Welcome back to Power Hour. My main man, my partner in crime, Dolby Time, is back from his well-deserved time off last week. Back in Power Hour, up a couple bucks already from the previous segment. And the guest of the day is Nick T, the man in the middle. Nick T, welcome to your very first Power Hour here on TopstepTV. How we feeling?
Feeling good. It's been a good morning for me. Haven't really done much for the latter half of the day, but let's see how the markets are treating us here in the close.
Absolutely. So last time we were on was last week, I believe. Was it last week, Nick? You were on with us during Power Players, and boy, you got the call up real quick to Power Hour. So we went from the Power Players to the Power Hour. Life comes at you fast sometimes. How there, Nick T? And on top of that, you're on the leader. Well, I didn't see you on the leaderboard. How's it going? How's the trading journey go? Kind of introduce yourself to us for those that may not know you and are seeing you for the first time. But you are one of the most successful traders here at TopStep. So please, Nick T, tell us about yourself.
Yeah, so I'm Nick Tomarello. I've been trading with TopStep for, profitably probably, but basically I've had some success, I would say, in the last 6 to 9 months, more or less, actually taking real payouts, getting real money, and using this as a way to kind of create real income. If you were paying attention last week, I am an unemployed trader that's actively still looking for the right fit for a new role for me coming out of the tech space. So I've used TopStep to kind of continue to live my lifestyle, enjoy what I'm doing every day, and kind of keep me busy throughout, this weird economic cycle that we're going in. So yeah, I'm still on the leaderboard, Andre. I was number 3 today, and we talked last week a little bit about the whole ego thing behind it, and I need to take a payout. I should take a payout. I'm sure Nick and everybody else would say you should probably take a payout. So I may be doing that here upon close today, provided I don't do something really stupid.
Do it live on Power Hour?
I mean, I could, but I there seems to be some issue with the dashboard, and it's keep telling me that I need to trade more to be eligible for a payout despite having 5 days. So hopefully that gets fixed here. But yeah, I would love to. I tried to do it last night and it wouldn't let me. So here we are.
All right. That would have been cool though. That would have been really cool.
I mean, I could do it if it's fixed.
Yeah, try it. Just test it real quick. If not, no big deal. But that'd be pretty sick to see you just rip a payout right there, live.
Yeah, that would be cool. Are you guys sharing trade? Are you guys sharing your screens? I am not. If I need to, please let me know. If you guys are sharing your screens, we should be good there. Dolby Time. The spotlight's always on you. Hence the sunglasses. I know you're up, my man. Good to have you back. Everything feels normal now. Welcome back. How's your time off? And did you miss us? And if not, please don't say. Did you miss the markets? And tell us how you're able to. I mean, you're off. Oh, you haven't touched the market in what, 3, 4, 5 days? So how do you get back into the groove when you come into a market like this where it is slow, nothing's really popping? You do jump on live during the day, during the lunch hour session. So how do you kind of assimilate yourself into these markets? Do you look back at the charts from the previous week? Do you see that did you see that that the Dow trade above 40,000? What's your routine like? How do you dip a toe in the water? Kind of remember how to swim again.
So you threw a lot at me there, Andre. That was like 4 or 5 questions. That was like
I get criticized for that. Guy gave me feedback that I do that too much. I'm working on it.
Did you really? All right. Did you?
Yeah. Guys, like you asked too many questions in one sitting. I'm like in one question. I'm like, you're right. I do. I just did it right there. So you called me out on it. Thank you though, Dolby. It's good to have you back. Where would I be without you?
I think a chat was actually giving you a hard time first. Okay. Where did I go? I went to Hilton Head, South Carolina, which was awesome. My dad is like 82 and he still like paints like houses and like properties and stuff because he can't sit still. And so he actually like bartered a paint job for this place in Hilton Head. And it was like gated community. It was real nice. We got really lucky with the weather. I think like one day it was like in its 60s and then everything else was like high 60s, low 70s, hot in the sun, cool on the beach. Really nice. And I got to hang out with the fam, which is awesome. So how do you come back from that? Well, one, I'd looked at the charts a little bit every now and then just to kind of stay fresh. So I wasn't like completely like cut off. YM is approaching 39,700. So this is pretty interesting here. Keep an eye on that. And then honestly, like I've been doing this for so long that I think that if you have enough experience, you should be able to pull up a chart and throw on your levels and then immediately just start throwing in some trades. Maybe start small a little bit, switch to a practice account, do something like that. Obviously, today is not like an ideal day, but we made it work. So we found some action somewhere. But I would start slow if you're coming back from vacation. You know, a trade or two, and it's fine. But I think the worst thing is coming back and then just like hitting like daily loss limit first day back. Like that is not disciplined trading at all. At all. Does that payout work? Or is it still
Nick T, update on the payout. Are you still
It's telling me to keep up the hard work, trader. Payout request forms will be available once you are eligible for your first payout. So no.
Do you have your 5 days yet, or do you have like 4.5?
5. 6, I think, technically.
Oh.
Well, we'll get on
and
that.
we're kind of breaking these highs here.
Yeah, we are. We're selling off here. We just touched view up
Yeah.
in the S&Ps. With that being said, I'm going to buy one. Unless there's news.
Okay, so we just got a stop run on 30. Oh, man. All right. I'm going to start paying attention because there's some good stuff here in Dow. So we ran below 39,700 and we.
Yeah, on there too.
Yeah, to the tick. I'm going to. Oh, man. Yeah, so we didn't make higher highs on that last run up to 39,750. But man, that would have been a really, really cheap trade. Cheap trade there.
Yeah.
Nick T, what kind of trades do you like taking? What's your bread and butter setup?
For me, it would be like an excess lows long. So you're coming in, we kind of make a new low on a 5-minute candle, more of like kind of excessive stop run type push below, and then kind of rip out of it really quick. Usually I like those because you know when you're wrong very quickly, and it kind of allows you to, in theory, for me, get my 20 to 30 points within so I can be in and out of a trade, kind of taking that, low risk, high reward type, long off that excess wick on a 5-minute candle.
Yeah. And you're a NASDAQ guy?
Typically on NQ. Yeah. It happens on ES. It's just not as often. You're kind of, it almost needs to kind of push below, a support or resistance level. And then you kind of get that excess push on ES, but it's not as blatantly obvious of a long that you would see it on NQ.
Ah, got it. Where did you learn, or how did you land at this system that you currently got yourself at?
Learning from a lot of traders that have been doing this much longer and have been more effective than I have over a longer time frame. So some good guys that have built software, built indicators, technology, have opened their time and basically opened up their life a little bit to kind of share what's made them successful. So I've talked to some good traders, I guess is what I'm saying, and I've kind of learned from them. I've taken what I've liked. You forget, kind of just don't use maybe strategies that don't fit the way you kind of operate, or they don't fit maybe your risk parameters on certain things. Obviously size down from a lot of what these guys have taught me and done things to kind of get themselves going. But yeah, I've learned from a lot of good traders. And you kind of learn from your own mistakes too, but that is kind of how it got me started, was learning from a few people that have been in this game a lot longer than I have, especially with futures and just, overall trading. And like I said, kind of taken the best of and have kind of incorporated that to my own style, my own way of doing things. And the way I've been operating for the last, year plus, has made a lot of difference, I would say. And not trying to, I would say, change that strategy. I found something that works for me, something that I can understand, something that that I can do my own prep for and not have to rely on somebody else saying, hey, you should be looking here, here, here. It's, a simple strategy, I think, that's available without having to, invest in a lot of time, because you're, at the end of the day, you're looking at just areas and volume profile and of the auction that we see a lot of recent interest in, and, aspects like that. So just being able to kind of play off just basic fundamental type levels of the last week, the last day, or trading day, or last trading week, and kind of make decisions based on that. Also, using things like moving averages to see, are we just is the market in motion, or are we kind of just chopping around? Like most recently, we're kind of in like a weird upward momentum trend line that just continues to bounce off the 20-day moving average in a way I haven't seen, at least as long as I've been doing this. I've never seen it kind of continue to kind of hug I don't know what the angle that would be, but at a very, very steep angle, continuing to climb up. And we've been that way basically since the October lows.
I wanted to touch on that, Nick, too. When you were talking to us, you said something along that we're in a weird economic cycle. What did you mean by that? Give me an example of what you meant by weird economic cycle.
Weird to me in the way that, I have a lot of friends that are, white collar tech people, and they're still having trouble the same way I am to find new roles. So you're seeing that not necessarily highly skilled, because I think a lot of tech is, including myself at times, was very overpaid and, underutilized for what I was doing day in and day out at some of the largest, Magnificent Seven type organizations that are out there in the world. So I think a lot of that space is very overpaid people, and they get very satisfied. So at the end of the day, the natural cuts that have happened with a lot of the overhiring that happened during COVID and things like that, you're just kind of seeing it play out. I just think this, anytime the Fed is raising, lowering, or there's uncertainty with that, obviously it affects things like housing and everything else. So it's just one of those cycles. I'm just seeing it more white collar, tech individuals. There's just kind of a lot of, friends and people that I'd grown my career with. So I've seen it kind of evolve from there. So it's I wouldn't say weird economic cycle, but it's not over from where we've been, though. I would say the last 2 years. And I would even say from the sell-off that happened because of COVID, and then the euphoria of 2021 when, when there was stimulus and everything else. And now we're kind of in the, a weird side of that coming out of the 2022 lows. So I don't think it's over.
Gotcha. Yeah. Kind of in the hangover with all that free money sloshing around in the markets, that stimulus money, like you talked about. We are kind of starting to see light at the end of the tunnel here. Now that we're talking about rate cuts, depending on who you ask, if it's Goolsby, he says 3 rate cuts. Bostic this morning says 1 rate cut. And then Cook says we're somewhere in the middle. So who knows? But we are starting to see light at the end of the tunnel coming out of that COVID stimulus money hangover that we all got drunk off of. Stock markets got drunk off of. Inflation, rising asset prices, all of that was, I don't want to say it was a party, but nonetheless, we are seeing the consequences of all that money. Dolby time, did you take a long? Because I am long 2 from 83. I'm long 2 from 83 in the ES here.
Yeah, we're sitting pretty right now. I'm long 39,694 in the YM. So basically just repeated the same trade I did about an hour ago.
Look at that.
Nothing
Okay.
crazy. Only difference is that I'm buying all the way down, though. I want to buy all the way down to 39,682 if possible. So, yeah. Yep.
Duke Togo in the chat says, we're all still drinking. You can't get a hangover if you don't stop drinking. Oof. It's not wrong. That advice there, Duke. Nick says he's not wrong. Very straight face, deadpan, not wrong. No, he's not wrong. He is not. So maybe they should just keep no more stimulus money at the stock market. Will continue to rally.
Nick, no one wants to be the last guy out of the bar. That's all it is.
Yep. You don't want to hear the birds chirping. You don't want to you come out of the bar and it's light outside and you have to squint your eyes because you don't know what, you're in the twilight zone. And that's kind of what Las Vegas was. You don't want to repeat that all the time at home. Nick, did you take any trades today? And if so, tell us about them.
Yeah, I took I got other accounts. On my personal account, I did get stopped out trying to long the early side of the lows here this morning. But in my 4 Topstep accounts, I am basically up about $1,000 in each one. So keeping my couple days, I guess I had a good Friday, but a poor Thursday. But most of my trades this morning have been a couple scalps short and really one long that was about 10 points. It's really just been scalping and kind of moving things, just not liking what I'm seeing and getting out of trades very, very quickly. The couple that I have taken. When I was on, if I don't get the move relatively quickly, I almost will, time stop myself, break even, or for a couple points, negative. Just to get out, because it's just not doing what I thought it would do when it interacted at a specific level, or I was seeing some sort of excess or just some price action that I was interested in kind of going the other way on. And if that doesn't necessarily happen, or I don't get the move, especially on a day like today when we are just slow grinding outside of this last few minutes here. I tend to just get out and I'll reset and look for the next opportunity.
That makes sense. That's why part of the reason we're seeing some success. If you don't mind me saying, your account balance is around $70,000. Your live funded account. That is insane. That is really cool.
Yeah,
we're really happy to see that. We're working on getting that payout situation righted for you. You will take that payout. If you don't mind me asking, how much are you thinking about perhaps withdrawing or taking a distribution for yourself? Have you thought about that? Much? If so,
I haven't. I tend to. I try to keep my balance around 10K. If I'm taking a payout, so whatever's in each, sorry, not total across all of them, but in my XFAs. So if I'm trading my 3 XFAs in addition to my live, I try to keep my XFA balance at least at 10K. Just gives you, in my opinion, 3 very poor decision-making days in a row without necessarily losing the account. And so basically it does, because you factor in slippage, you're probably right around there when you keep it at 10K. It's like I can be an idiot 3 days in a row and that's it.
Yeah,
I would, I've gotten some bad losing streaks, here and there with daily loss limits and things like that in the past. But, if I'm wrong 3 days in a row, it's almost like, if I hit a daily loss limit 3 days in a row, it's almost you need to walk away for a day or two, and because you're clearly not seeing something right, or you're just being an idiot and going way too big of size at the wrong times and trying to fade things with size, which is usually a recipe for hitting daily loss limits.
Did it take you a while to get comfortable with the big numbers on your screen, or did it just come naturally, or are you just in a mindset where I just run my system and whatever happens happens?
Yeah, that's interesting. Someone had I was on a bachelor party, and one of the guys was asking me, because I explained that this is kind of how I'm paying the bills here and there the last X amount of months. And he said, well, that's good. So clearly you have a profitable system. And I even remember at the beginning of, or the end of last year, beginning of this year, you guys had sent out an email of like, the aggregate of all of my eval accounts, as well as funded accounts. So just everything through Topstep, and, what my profitability was, what my average winning trade was, my percentage of winning trades. And I had, even just doing what we do sometimes, which is, hey, how fast can I pass a combine to get back and do an XFA? Or I just got 3 new XFAs. I like to have some combines as, backup at all times, just to continue to be able to kind of keep that train going. But, seeing what my percentage of profitability was, to get back to the story, he had said, great. So if you're winning 70, 80% of the time, in a full year worth of trading, couldn't you just in theory size up and, be just as effective, or make this into a multi-million-dollar type of, thing that you're just doing yourself, going from me hitting, trying to get $1,200 a trade with my 20 points on NQ to, hey, how can you turn that into 10 grand? Like just by sizing up. And I tried to explain this in a weird way of the psychological aspects behind it. So I think you had said the larger numbers. For me, I don't think it's really affected me with the way because I guess I kind of started trading this way and knew what I was willing to risk in my personal accounts, and kind of that translating into prop accounts and things like that. But it almost was like trying to explain like the psychology behind this game that I think a lot of people don't understand unless the only thing to compare it to that most people probably do is going to Vegas and kind of operating in that mindset where, you're risking that type of money. And it's like, well, if you had a few good hands of blackjack and now you're up a couple grand, are you suddenly, just because you're on a hot streak, you're going to just throw it down again and try to double your money at that point? And just versus continuing to bet maybe $100 a hand. Now it's like, well, I'm up a grand, I'm going to throw the 500 on and see if I can grow it that way. I just was trying to articulate it to him of just like, the second you change, in my opinion, as an individual trader, not an institution, you start really, really sizing up. Something changes, at least with me. I have difficulty being successful sizing up versus trading a couple lots and, doing my system. And I know part of that is the risk parameters that are put in place, but also just, you kind of see stars when you start throwing up these big numbers. And I know we see a lot of, outside of like Dakota and a few other people, I think Isaac and some of the others that are on the leaderboard pretty consistently, you do kind of see some boom and bust cycles with a lot of traders, kind of having that probably through 10 lots, 12 lots on during a news release. And hey, you made 30 grand, you made 50 grand. I remember seeing people that threw 15 and made 100 and took half the payouts. But, I think that's a zero sum game at the end of the day. You're eventually, just like in sports betting, eventually the house always wins.
Yeah. I do. Yeah, to an extent. Go ahead, Dobie, please.
No,
Dobie. I've been in Power Hour for the last 5 days straight. You are back.
Are you tired of talking?
Get in there. No, just go on, man. Get your words in.
No, I agree with everything you said. Also, I'm long 12 at 39,688 in the YM.
God, he's want to get that in there.
Of course. Well, my stop's only at negative 480, so even if this trade loses, I'm still plus $200 on the day. Okay, so I agree with everything that you said. I think it's funny too, because like people who don't trade don't understand that like when you try to size up, you're almost like kind of tempting the market gods, and if you don't trade, you don't know what that's like. Because like I fully feel that traders only make the money that they deserve. And so when you do see traders who end up sizing up too much, right, they do start seeing stars. That's typically when traders will start like mismanaging positions and just start making really, really boneheaded mistakes. And so it does take time to get up to that level of, say, a 4-figure day, a 5-figure day, a 6-figure month, right? You kind of have to like stair step up to get to that point, just because you can handle that sort of like risk, like psychologically, because it's a lot. And it's also very, very tempting to size up too fast. It's very tempting.
Yeah, I think a lot of people make that mistake early on this kind of trading journey, and with futures especially, where it's just the fastest, easiest, most horrifying way to make money very quickly.
Yeah,
and it's the reverse of that. Like just no different than, I mean, with minimum amounts of margin, just like trading, I guess, zero DTEs, but being able to kind of turn $500 in margin into a couple grand in a few seconds is pretty wild. And I know it was for me in the beginning. And my first thought was, why did I just discover this now? And thank God I didn't when I was in college and doing things like, gambling offshore and getting payouts in Bitcoin and things like that were, not at the time, not legal the way DraftKings and things like that are now. But had I discovered futures trading, or had it been more accessible the way it is now with prop firms, that would have been a recipe for disaster, I think, as an immature 19-year-old with a lot of other things going on. But on the I don't know how much you guys use it. I like to of where the 0-day options activity is, especially as we get closer to the last 30 minutes here. I don't know how much you guys use it in your trading. I've gotten pretty good about always kind of having an idea where the big gamma strikes are, where a lot of the exposure is for market makers, as well as just what's getting a ton of volume. Where's the open interest at? It's just because, I mean, I think I know a lot of people like to say it's not moving the markets, but I mean, you can watch the last 30 minutes and I could show you can see a few, charts of just kind of laughing like, no, that's probably where the price is going to drift as we come into close here. And you're going to have, first and second year traders at some of these institutions that are on the options desks, and they're picking up, pennies in front of a steamroller with billions of dollars of leverage moving back and forth in the last 10 minutes. So it's fascinating to see.
What is your system? Oh, sorry, go ahead.
Yeah. No. I think, Adobe, we're going to ask the same question. What is your system? Yeah, with the options. Yeah, go ahead, please. I'd like to hear this.
Yeah, well, how do you tie in those 0-day options with futures trading? We've seen people talk about the FANG, looking at NVIDIA for NASDAQ. I think this is the first I've heard of someone actually using the options chain and zero day to expiration, which is 0 DTE, chat, 0 day to expiration options. DTE. So how did you even get into that system? Because that's kind of cool.
Well, I am a member of a Discord that has a lot of smart traders and a lot of people that are way more, I would say, experienced in some of the space than I've been. But they have been super awesome about, sharing this kind of mind share of, what's going on in the markets and giving us access to, just see it more holistically. And it's not some thing that I swim with the options chain, and kind of basically what we're doing is, just being able to aggregate different gamma exposure levels in a simple kind of histogram. So I can see where the largest, exposure is on the call side, on the put side, on the net kind of, side. And I can see this from a 0 DTE perspective of just what expires here at 3 or at 4 o'clock Eastern, as well as just what's sitting kind of on the longer term, options chain, as well as we're to April OPEX and things like that. Just seeing, hey, what from a gamma exposure perspective, like what are the largest strikes, like what's gaining the most open interest and things like that. Just because, as you know, just like with futures, if you're looking at things like Bookmap and just where liquidity is sitting on the books, just price tends to gravitate towards that. And I've had traders that are a lot smarter than me that have taught me these things, and I've been witnessing it day in and day out. And so it's hard to deny how much some of these things actually do hold water and do affect and get into less volatile periods where a couple institutions can really push around price action. I mean, look at the closes we've had in the last couple of weeks. Sometimes where exactly. ES scripts 50 points, and the only and it closes exactly where the largest gamma strike was at open or midday or 2 hours before close, and it's almost like telegraphed, which makes me think it's not going to be this way much longer, because it is getting very simple to kind of read these wild 30-point moves that we get 20 minutes to close.
Yeah. So actually, I have a question for you. You've mentioned that you got a lot of your education and resources from finding very, very talented traders. To me, that is a networking approach to a trading problem. How did you start reaching out to these traders? What criteria did you use to define who you thought was legit, who wasn't legit? And kind of what was your process for doing that?
Yeah. So for me, I mean, there's a lot of learning with it, and without kind of, giving away too many, people here, but what I did was just find people who's first of all, were willing to share without necessarily making it some, mystical thing of like, hey, they're doing something crazy, like, or calling out levels, or, like I hate shot calling in the space, because I think it's anyone can. Because I look like a genius, even if I was doing it, because I'm calling out the same market prep and just research that I'm doing, and just I'm seeing various levels. But anybody can call out levels, with a very ambiguous mentality or verbiage, and still kind of finagle it to be right. So I was looking for people that actually were showing what it makes sense physically, like on the charts, the same way you guys are. Our people are coming on, or we're seeing people take live trades and things like that. It's, people basically walking through as the candles are moving, exactly what they're seeing, and explaining, okay, here's 2 setups that may happen right here. We could, reject off this low volume node here, and we could move into the previous day's point of control. Just something visually that actually makes sense and would seem like a possibility. I think a lot of people get into the trap of just finding someone who showcases P&L, and like, God knows I could do that with my Topstep payouts, and throw out a few levels, go on Twitter and gain a following for no reason. I think a lot of people do that when they have a little bit of success, and then it turns into your following is making more for these people than trading, and that's kind of where you get to the point where that's not who you should be following, to be honest. That's really not someone who's going to help you kind of gain any knowledge in this market going forward. So for me, it was people that are actually willing to share. And I had mentioned one of the services that I will gladly throw money at because it makes my market prep easier. A lot of those guys have been the first ones to offer education, or, I could quickly mention them in their Discord and say, hey, this is broken inside of MotiveWave, and they will, drop what they're doing and help me kind of fix, a problem or something that's going on, or just, offer simple market prep that anybody could pick up. And I think I said this last week too, day trading doesn't fit everyone's style. So you kind of have to understand the type of trader, the type of mentality you have looking at the markets, and who are traders, who are people that I can, be around or learn from that kind of fits the way I like to operate. A lot of people work full-time jobs. So sitting and having, multiple screens here like I do, that I can look at candles on a 1 minute time frame, a 4 hour time frame, and actually be profitable off that. That's not going to work for most people. Most people should be probably swing trading or just being long only, and buying dips and just doing that for the rest of their life. others like pain and like misery, so we day trade.
Yep, pretty much.
Yeah, that sounds about right.
I've got to take exception with something you said earlier when you were introducing yourself. You said you're unemployed. I thought first time you said you were fun employed. What is the difference there, Nick?
Well, it's fun employed when I'm green, and this is a profitable business that I have.
Yeah,
for myself.
Stopped having fun when you started day trading.
Yeah, as soon as you start, as soon as you have NQ, when you're short and NQ does a hold my beer candle long in the opposite direction of your entry, that's when it stops being fun. And you take a stop out, for 7 points higher than you set your stop for, because it just is that liquid in that moment as you get stop run to new highs, which I wish I make that up. That happens so often. It's insane.
Okay, well, that does happen. Do you get fired up? Do you get hot?
Or
you get pissed off. So how do you deal with that? You're a successful trader. We saw what your account balance is. We see you on the leaderboards. Even the dumb shit where you get ticked out and stuff like that. How do you control your emotions? How do you cope with that? How do you move on to the next trade? You seem like a pretty level-headed guy. Look, 2 times we've spoken, but I mean, you seem like you got some fire in you. What happens when something like that does? When day trading gets to you, like you said, what do you do?
I mean, the good news is I'm a firm believer this is truly the loneliest sport or career path that anyone could do in today's world. Because I would imagine you guys are in Chicago, like being in the old pits and things like that. It didn't feel that way, but now kind of being a day trader, you could be by yourself. So when I've gotten tilted, I'm actually around a lot of, good, smart, funny, and career-oriented people that I chat with day in and day out as I'm doing this, that are also, interacting with the same market or trading the same way I am. Most of us are, thanks to COVID, get the freedom and flexibility to do this more often from home. So it's kind of that reminder when this has happened, or I've hit a daily loss limit, or, like I get a top tick stop out and then it runs immediately in the opposite direction, in my favor. But I'm not in the trade anymore. So when those things happen, I think it's a good reminder to, kind of laugh a little bit, have some fun. This should be fun. And I think the stupidity behind some of my friends and stuff that I do this with is, it's a chat room full of and
bros,
for lack of a better,
bros.
Just people having fun and making each other laugh. And even when, and supporting each other when someone has a bad day, picking each other up. And I think that's when we talked about people to surround yourself with, that's who you should be. If you are surrounding yourself with, other traders, that's the type of people that I would be looking for. Is not people that are only showing their P&L. It's the ones that are going to laugh with you. They're going to cry with you. They're going to support you. They're going to, help you learn from it, or, identify, hey, I was seeing something a little different than you, so here's me, or whatever, just trying to offer advice. But more often than not, it's to make us laugh. And I think I have a lot of the ability. I've been good about using jokes and humor to blow off steam in this game, because if you're not laughing, I mean, you're just not having fun.
Agreed. Yeah. Well said.
So there's my mic drop of the day.
Yeah, Little John liked what you had to say. I agree. You have to find perspective in this whole thing, and having community and people around you. Like I got my man Dolby here. We got the Hoags, we got the Eddies, chat, all the trading buddies we have. Yes, it makes it easier. It can be very lonely, like you said. Dolby time. I just read something in the chat that you closed out your trade and you're up a couple bucks. What did you do while we were having in-depth conversation here and you weren't paying attention?
Actually, I was paying attention, but I was also making some great trades, Andre. Because
what did you do? What did you do? Tell me your secret.
We flattened. I can't tell you on air. But what did we do? We were all about kind of buying the lows in the Dow. So I had these levels on my chart here. We had the March 14th high. So if you watched the previous segment, I nibbled on that one and took profits up high. So that was 39,700 and ended up taking profits all the way up into 39,740. So we topped out, came all the way back down through that level. I had a second level on my chart, which was the March 13th high. So another daily resistance level that turned in support. So I just kind of went full port in there, and I was like, hell, if it worked the first time, let's try it a second. And so we bought in a range, accumulated up to 12 contracts around 39,682. and we would just peel them off on the way up. So we got like 39,000, 695, 694, 696, 706, 699. So just kind of like a scalp, if you will. So solid trades, just buying, aligning daily levels with short time frame trades. So basically the exact thing we talked about on the last Power Hour. Cheap trades. So we're trying to get here. Yeah,
absolutely. Very nice.
Joby,
All right,
how difficult is it to see charts with those sunglasses on right now?
How hard is it? I can't read shit right now. So if I want to read anything, I have to squint. You just can't see it.
I was gonna say I'm blind enough as it is with my dark themed charts, and it's like I've had sunglasses on, man. I couldn't see anything.
Yeah. All I see is green. I just see a green P&L. That matters. That's all I care about. I just see green.
I missed you, buddy. I missed you, man.
Crazy.
Nick, great question. You're a natural fitting in here on Power Hour. This will definitely not be your last Power Hour. If that's cool with you, man, you're a good time.
Hey, I've enjoyed my time with you guys.
Yeah, man. All right, well, we got Banana Theory here in the chat saying, I predict a massive move in about 9 minutes. So before we get to that massive move, we are seeing an uptick here in the S&Ps, which is good for my position. Before we do see that massive move, can we go to top quiz results? I think we have a little bit something more, JD. What do we got?
We sure do. There are your top quiz results. Everyone take a close look.
Anything funny in there?
Reset me, please. Chopopotamus. Reset me. Reset me, please. You could dress them up, but you can't take them anywhere, right?
Hey. Okay, pretty good. Thick gravy.
Trash
Nothing
Monday.
It's trash.
Get Mancini on. Get Mancini. I subscribe to Mancini's newsletter also. I think it's great. I think
nice.
you should reach out to him.
Okay.
Yeah, see if he wants to come on.
See if he responds to me. And then I'll ask him if he wants to come on.
Yeah, it's probably a good start.
What's up? All right, cool. That's all right. It's pretty
Man,
pretty
YM
tame
is
for a Monday.
rolling right now. YM is rolling.
To upside?
Yeah, just cruising off that daily level. Nick, we had a question in chat. Someone wanted you to kind of just, even though you're not trading, you don't have to trade, but what is kind of like your number one setup? If you could kind of run us through the day in the life of Nick, what are you looking for in your trades? Like, what kind of setups do you want for what you got going on?
Yeah,
chat wants to live vicariously through you.
I'm definitely not a breakout trader. I tend to try to fade things either way. I have no bias, but I tend to look for excess highs, excess lows, failure, shortly after kind of a peak above an opening range, and then failure back in, like looking for those type of moves. I'm good at catching knives, I guess, but most of that comes down to having predefined levels based on, longer time frame support and resistance, or longer time frame points of control from previous months, things like that. Just where certain parts of not open interest, certain areas on like 4 hour candles that I think it may easily could reverse off of, a confluence of those candles in a more recent time frame. So things like that. But most of my trades come down from having kind of areas that I would like to engage in going into each day. And this is, as we continue to make new highs, is where I have difficulty, kind of finding those areas of, I guess, reversals. And I know some people like to use fib retracements and things like that. I do to a certain extent, but more often than not, I'm still being, when I have bad days, it's me trying to fade as we break new highs and continue higher and higher and higher. So something I need to get better at, but more often than not, it is me fading like a move right now, like kind of fading 550 on NQ would have been something if I wasn't planning on.
Oh, okay.
If I was done for the day, let's say, but I might have looked at that excess high that we kind of had as we, got back into what I like to call the big green line. So a 21 EMA on a 5-minute chart. That just kind of keeps you on the wrong side of trend more than not. But as we kind of retested it right there and kind of peaked back above Friday's opening range high. May have tried that 550 short, but with kind of this little bid that we're having here, and with the gamma exposure that we're seeing for 52.25 on SPX, I'm probably doing nothing. So we're sitting right there, and we're either going to pin or something stupid's about to happen, and I want no part of it.
Oh, great! Something stupid.
So how should we trade the last 15 minutes, knowing what's going on in the options market?
I mean, we're sitting right at the largest strike that I'm seeing as far as gamma exposure, which is 52.25. Unless my data's not updating, that's what I'm seeing. So with SPX trading right there, this is where you may get some violent move, 5 to 7 points in either direction right now on ES and SPX. As I like to joke, the second year traders at the options desk and institutions are just, kind of playing chicken with each other. And we'll see who wins, but someone will win and basically get less than $1 for, all of their trouble on, because we're still going to close either under 52.26 or over 52.24. But we'll probably close right around there. I could be wrong, but that's my read right now.
Who do you think would win in a fight, Goldman interns or second-year options traders that you just mentioned?
Goldman's interns, no questions.
Okay.
They are sleep deprived. They haven't quite made any money to be able to do anything stupid, so they're ready to fight.
They're both wearing the Patagonia zip up.
There's been a lot of Celsius and Adderall in those interns. I would not want to get in their way.
All right, that's a good answer. That's a good answer.
I love it. Really, really quick. We got a quick Delta update here. Minus 1,300 in the ES. Nothing crazy. We aren't breaking, so we did see a bit of an unwind. We did peak at minus 3,700 about 24 minutes ago. We saw that pop in the S&Ps, which made the Delta unwind to minus 1,300. So that's what we're chilling right now. Quick look at Tilt. NQ 58% long. ES 55% long. Dolby's new darling there. YM is 53% long. Dolby time, why are you finding success in the Dow minis? What has changed? What is clicking with you? Any idea?
Oh, I know exactly. I know exactly what it is. You can comfortably trade size in the YM without getting whipped out of positions. So even though I was long at one point, like 12 contracts in the YM, I didn't feel the same amount of like anxiety or pressure that I would if I was trading like the NASDAQ, for example. So and anyone can do this, so pull up your practice account, throw a 15 lot on the NQ, and see how many seconds your position lasts, just based off of the volatility in NQ and how it operates. And then go ahead and try the same thing in the ES or the RTY or the YM. And you'll start realizing that even though you are trading a lot more size, you have a lot more time to sort of manage your position and kind of operate. And so I was trying to do sort of the system I'm doing now with the YM, which is averaging into a range. And the problem was that the volatility in the NQ was so large, so wide, that if I wanted to sort of average into a range, it would have cost me thousands upon thousands of dollars of risk for essentially the same trade that I can put in the YM, and I can risk 80% of that, or 20% of that, a couple $100, for the exact same position. And also it allows you to start peeling off trades. So if you do like trading size because you want to have the flexibility in peeling off positions, then I think the YM is a really good market to do that, because you can size up to say 5, 10, 15 contracts comfortably and then peel off. But I think the most I've ever risked on a 15 lot trade in the YM was probably close to 1,000 or 1,200, which is nothing for 15 lots of size. No. And I never once felt uncomfortable doing that. And I know people in chat have actually tried the YM based off of the suggestion and have enjoyed it. And for the record, it was really, I think Robert might have been the first pioneer into the YM. So props to Robert for kind of starting this trend of YM trading. But it's a great market. I highly recommend it. I think it's faster than the ES, slower than the NQ. So it kind of sits right in the middle. The price action's good. It just got Amazon as well. Ooh, a little move right there to 250, and less teleporting as well. No teleporting in the YM.
There it is.
Yeah, I don't want any of that garbage.
The 250. Yikes. That wasn't cool for my position. What were you saying there, Nick?
I was saying the murder algo, but we're still holding here. I said like 5 points in either direction, but we're probably still going to close right at 52.25. I have not seen the GEX change at all.
Yeah, and I'm still going to try to get long too. Actually, if we can get back down to 39,682, I would still want to buy again if we get down there.
Coming in hot. Market on close imbalance, 1.9 billion to the sell side. 1.9 billion to the sell side. Back to you, boys.
Yeah. Thank you, Eddie. Hasn't been the most spectacular markets. Dolby, what do you want to do? Are you stacking bids? Just going to gobble up some bids?
I'm going to work some orders in my trading combine, but I'm going to throw on a 15 lot on my practice account, just so chat can kind of see what it's like. So we'll just, sell 15 at market because we're going down-ish, right? So my brackets are already set up. So here's like 15. So you can even just see how large my stop is, right? Like that's a good amount of room for a stop. Obviously, it is like a garbage trade right now, but if you're just like, we're on a 5-minute chart, like this is a healthy amount of space that you can easily operate in that. Now, if I flatten this and I'll go to the NQ and do the exact same thing, and you're going to witness like just insanity. So look, this is a 5-minute chart, and look how tiny. I have to zoom all the way in, but that is the amount of room I have for the exact same 15 lot trade because it moves so much faster that it doesn't even look like anything at all. So the exact same risk parameters, but look how much scarier this trade is. All right, stopped out. I just lost 1,300 like that. Gone. 15 lot trade. But in YM, much slower. You have more room on your stops relative to the market structure. So try it out. I think it's a nice product to trade. But I'm going to switch back to my trading combine because I think we're going to get filled on this one. I have a sneaking suspicion.
Yeah, that was a really good example of how much wiggle room, how much room you got Nasdaq versus the Dow. That's really good stuff there. All right, guys, we got less than 8 minutes here on the trade. Hasn't been the most spectacular of trading days today, but that's okay. We are seeing some sellers here. This is not good for the bull position.
Yeah, and I think I am going to get filled here. So I'm looking forward to actually this stop run of the Dow. I hope this does happen. I'm looking forward to it. Yeah, I think we're going to do it. There's just not a lot going on.
I just am not diddling in the middle.
You're getting long there, Nick?
I want to, but I'm not going to.
Okay. Why do you
I just
want
think
to
we're
get
going to
long
rotate.
now?
I think we're going to rotate back up to 52.25.
So would you have worked like that level at like 526 in the Nasdaq for longs then?
Yeah, probably not. Like I said, I don't love this trade just because where we are in terms of just the point of control on the day. I just have a feeling it's going to rotate a little. Not rotate. It's a wrong word, but 5 points off of where I think we may go, and just historically sellers being super bad at selling down markets, especially with options. I've just seen it too many times. So I would not be surprised if this rips back, 4 or 5 points on ES, and we close somewhere around, 550 on NQ as I'm watching this move. Sorry, I have Trading View over here. I have Motive Wave on this side, so I'm like constantly bouncing back and forth depending on what I'm looking at.
What's your setup like over there? How many screens do you have?
Technically 3 plus my laptop screen, but I have a PC and I'm running a MacBook setup too. So the joys of unemployment is nobody wanted their monitors back.
It's turned into a bit. I like it. I'll take those.
Yeah, I'm sure your tech team wants to have 30 monitors mailed back to them.
I don't think they have any value to IT departments once they've so
definitely not.
What's
your setup, Trey? What do you got?
2 36-inch screens next to each other. You just stack them on top of each other. Yeah, well, I've got a lot. When you're driving these segments, you got the Slack, you got the YouTube, you got the markets, you got Vimeo, all the stuff. Then a laptop as well. So I've got them side by side. We are selling now. Son of a. We are. I need to stack them instead of having them next to each other. Yeah, I'm ES. I'm long. once that 250 liquidity injection hit, everything took a turn.
I
There's
just
your,
tried to
there's your
long
long right.
get it.
Yeah, there's your long, Nick.
Yep.
All right, we got 55 just hit. Let's lock in on these markets here. But we are a few ticks from the Goldman interns hunting out my stop.
Yeah, they're annoying.
Yeah, it was. I should have seen it coming when the Nasdaq popped there, and ES just wasn't budging. And I should have taken that as a cue to possibly get out, maybe reverse to the short side. But like Nick was saying, selling the market down just isn't a thing. Minus 4,200 in ES. The shorts did come in to try to sell it down. Buy another one here.
So Nick, are these 0 DTE options the same options chains I would see in like Yahoo Finance, or is this like a whole separate market that like expires every single day?
Yeah, this is the true that expire on close.
So,
but I guess you could. No, I guess you could see them on Yahoo Finance if you have if you can see the full
like the option.
You can
chain?
see open interest. Yeah, the open interest and stuff on the option chain for the whatever expires on close here. Yeah, you should have access to the same data that I'm looking at. I'm just seeing it in a histogram kind of aggregate.
Oh, okay. Got it. Nice.
Yes, I really do want this long, but I'm not going to take it because I'm taking my payout. I'm gonna
payout, man.
Hands up.
Yeah.
I want my payout, and I'm not going to
practice account. Just practice account it.
But
you practice.
I'm gonna mentally long 515 here with the 10-point stop.
You sure you don't want to YOLO your live account in the last 4 minutes of Power Hour?
Exactly.
To forfeit a paycheck
for our sake.
I got to pay the bills, so I'm not going to be stupid here. But so
just
not financial advice.
Just a heads up, Nick T. I called in a personal favor to someone on our support staff, and they're going to be reaching out to you in just a little bit about that payout.
Oh, well, thank you.
Wow, Nick T.
I'm hands off here.
Okay, I'm long 3. That's 39,000.
If sellers actually can do this, I'm shocked.
Yeah, me too. That's I'm willing to lose money being long. I've made that. I made my bed with that. And I got to sleep in. But yes, I'm okay losing money to the long side over course of time. Bulls win, so that's fine. I'm about to get stopped out here. We do have less than 3 minutes left in the trade. Eddie, if you're listening, you got outro, you got bell, and you got tomorrow's calendar when we get there.
10-4. 10-4, Commander.
Yes. Also, don't forget we have a shortened trading week. No trading on Friday. As it is Good Friday. Markets are closed. We do have PCE. Someone in the chat said we got PCE and Powell speaking on Friday, but the markets aren't open. What are we going to do? Well, we got 3 full days to digest. Figure out what we're going to do for that Monday. We also have the ISM that's next Monday. But like I said, that's a week from now. Let's stay focused on the last 2 minutes of trading. Nick wanted to paper trade. He wanted to get long from 15, right, Nick? You're long for 15 with a 100 out there in the Nasdaq. Paper trade, of course.
That would have been the trade. I might get stopped out here, but let's see.
It's VWAP though. We got a couple more minutes here in the trade. Dolby time. Did you put the 15 line on? Did you put the 15? You got the 15.
We got close. I mean, we got to 12 on a winning trade. That's pretty good. I mean, we're long 3 right now. But I'm not gonna go like full pulled pork with like freaking 2 minutes left in Power Hour. That's like
who would do that?
I mean,
who would do that?
I would hold my beard, but I'm not going to do that today.
I like it.
That's a good way to get an invite back to the show, though. Or to get you a special account for that.
I'm always a fan of full porting any position right before close.
Yeah. All right, we got about less than 60 seconds here.
Let's see what happens here.
Here we go. Come on, buyers.
Oh,
you can do
look at this run. Let's go.
Push it. Someone get Pelosi on the phone. I agree, George. Get Pelosi on line 1.
Let's see if we can get 300 on this. So
Speaking
we're break even
Pelosi,
now.
NVIDIA is still continuing this
obviously
euphoric run it's on.
Obviously.
Well done, Nick. Nick, you are welcome back, man. You fit in quite nicely here. I like this. I like how you do it.
I'm gonna be able to get out of this trade paper hand break even right here. So now I would have put my stop at break even because I'm soft. And let's see. And I'm out. I'd be out break even.
Oh, look at that.
Oh, look at this.
Oh man.
That's
30 seconds,
exactly
Dolby.
what would have happened had I actually done that.
Good stuff there. Look at these buyers come in. Here we go.
Dolby, 20 seconds to the bell. 20 seconds.
What do you need to remind me? I already know what's going on. It's going green. Oh, no, it's not. It's coming right back. Oh, this is insane. Look at the
This is
YM go right now.
crazy.
Just running. What are you doing, YM? Where are you going?
What a
I'm
boring
not gonna
close.
break. I'm break even. I'm break even.
Yeah.
So we're good either way. Let's see if we get another push to the top side. We'll take through $300 and be done for it.
Boom.
Okay.
Good stuff.
And
Good stuff,
that's what she wrote.
We'll take it.
Nick
401.
T, thanks for being with us here. Andre,
man.
Dolby time. One of my favorite segments of the day. And the day with a cherry on top. Good job, guys. Hey, take a look at tomorrow. What do we got cooking tomorrow? We got some meat on the bone early before opening call. We do have our durable goods month over month. We're looking at 1.2%. That will be at 7:30 Central. We do got Red Book coming out here tomorrow. Also, 9 o'clock, consumer confidence for March. They're looking at a 106.9. And we do have a 5-year note auction at high noon. As far as the menu for tomorrow, all-star cast here, be early, 8 a.m. Central Time for opening call, and we're going to have Rips with us. Also, we've got Hoag, Dolby, JD, Andre's going to be here with us. We got some good stuff coming up for Fast Markets. Coach Dakota, Andre, and Isaac are for Power Players. Anne Marie's going to join us for TopQuiz. Tomorrow, group coaching. Just a reminder, Coach Robert is going to be doing that Topstep X tutorial again. So have your questions ready. We'll post them in the chat, and we'll get to those questions. But also, we'll have Mick dropping in there also for Shoulder Tap. And we've got coming in here for Market Stalking with D. Robert and myself will be joining Deeyana. And at the end of the day, Power Hour, Andre, Dolby, and Cammie will be with us. Don't forget, right after the buzzer here, actually it probably started at the buzzer, Coach Jan, Coach Paul. We have a 6 p.m. Central Time volume profile with Coach Ray. Bar charts and TPO, 7 o'clock p.m. with Coach Vince. And, of course, that 8 o'clock slow market popular segment with Coach Dakota. So, folks, hey, we love having you here each and every day with us, and I hope that you love being here each and every day with us, and hopefully you'll learn something today. I know that I've learned a few things here today, and I'm very happy that you can be with us. So get some rest, re-energize, have a fantastic rest of your day. Stay healthy, stay safe, and until we meet again, I'm Eddie Horn.
No, that'll be all. Just be sure to lock the door behind you on your way out. Good night.
Good night, and this has been Topstep TV. Take care.